हेलो एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव सेशन। स्टार्ट करते हैं आज का सेशन। कल देखोगे नेचुरल गैस कंटिन्यूसली फॉल कर गया था। मेजर सपोर्ट था आपका 257 के आसपास, 258 के आसपास, होल्ड नहीं किया। उसके बाद कंटिन्यूसली फॉल। एंड आज भी देखोगे फ्लैट ही ओपन हुआ, थोड़ा बहुत ऊपर गया है, रेंज बाउंड है फिलहाल के लिए। 12:30 लंदन सेशन ऑलरेडी ओपन है। 7 PM यूएस मार्केट, 5:30 लंदन सेशन। 8 PM क्रूड ऑयल की इन्वेंट्री और प्रेसिडेंट ट्रम्प इसकी एक स्पीच है, कुछ बोलेंगे शायद। 8:45 पे देखेंगे। कल सीपीआई का डेटा यूएस का काफ़ी अच्छा आया था यूएस मार्केट के लिए। इंडियन मार्केट भी आज हल्का सा गैप अप था। उसके बाद से वापस एक रेंज के अंदर ही क्लोज हो गया एक्चुअली में। लेट्स सी अभी प्लान क्या कर सकते हैं इस पर्टिकुलर जोन पे। कल देखोगे तो नेचुरल गैस के अलावा क्रूड ऑयल भी कल अच्छा खासा मूव किया था डाउन साइड पे, रुक रुक के आया लेकिन आ ही गया था फाइनली नीचे डाउन टारगेट पे। यहाँ पर एक बाइंग का ट्रेड देखते हैं क्रूड में। एक सेकेंड। तो ध्यान रखना 3:30 के बाद वॉल्यूम थोड़ा सा डाउन हो जाता है मार्केट में, कमोडिटी मार्केट में टिल 5:30। 5:30 के बाद से थोड़ा फिर वॉल्यूम पिकअप करेगा वापस से। लाइक भी करते रहो गाइस जब तक। डोंट फॉरगेट टू लाइक द स्ट्रीम। कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ लेना। या श्योर। कल थोड़ा सा नीचे आता है तो इसमें एक बाइंग प्लान रहेगी। करंट लेवल पे आपका एक रेजिस्टेंस था, ब्रेकआउट हुआ है, रिटेस्ट भी कर ही चुका है इस लेवल पे वैसे तो क्रूड मल्टीपल टाइम। आज क्रूड ऑयल की इन्वेंट्री भी है तो उसका भी ध्यान रखना, इम्पैक्ट डालेगी क्रूड ऑयल पे भी। फोरकास्ट देख लेते हैं एक बार क्रूड ऑयल की इन्वेंट्री का। -0.9 है फोरकास्ट, लास्ट टाइम -3 आई थी, मतलब लास्ट टाइम से थोड़ा सा ज़्यादा ये लोग एक्सपेक्ट कर रहे हैं। तो अगर फोरकास्ट के अकॉर्डिंग डेटा ज़्यादा आता है तो प्राइस के लिए नेगेटिव होना चाहिए, प्राइस को और गिरना चाहिए। तो फोरकास्ट प्राइस के लिए बेरिस है, फोरकास्ट के अकॉर्डिंग अगर डेटा आता है तो क्रूड ऑयल का प्राइस और गिर सकता है। ठीक है, अब आएगा नहीं आएगा वो देखना पड़ेगा शाम को 8 बजे। फिलहाल नीचे एक सपोर्ट है, अच्छा सपोर्ट है 5400 टू 420 के अराउंड। एंड अपर लेवल पे ऐसा कोई मेजर रेजिस्टेंस तो नहीं है, वो कल वाले हाई लेवल थे बट वो काफ़ी दूर हैं, अब वहाँ तक नहीं जा सकते। एक छोटा सा रेजिस्टेंस देखेंगे 5000, 580, 5600 के अराउंड 20 पॉइंट की जो रेंज है।
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Tom Mackenzie.
And I'm Stephen Carroll.
Global stocks have climbed to a record high after the latest US inflation data eased price concerns and strengthened bets on a Federal Reserve interest rate cut next month. The MSCI All-Country World Index hit an all-time peak following Wall Street's surge as money markets came close to pricing in a 25 basis point reduction at the Fed's next meeting. While core US inflation accelerated to its fastest pace since the start of the year, a modest rise in goods prices has tempered fears that the cost of tariffs could push up prices more broadly. Jay Barry is JP Morgan's head of global rate strategy.
I think there is some encouragement from the fact that you didn't see any pickup in core goods pricing so far, where it's another month with the tariffs in place where you haven't seen them pick up. That has given market participants a bit more sort of lack of concern right there. And you pivot it back to the labor market after today, that if we know the Fed has an asymmetric reaction function and seems to be more concerned about labor market weakness than inflation being above its target, and with the slowing we've seen in private payroll growth, it kind of gives the green light to go back and think about the Fed cutting in September, even with inflation very far away from the Fed's target.
Jay Barry speaking there as investor focus now shifts to Friday's US retail sales figures for signs that consumers are as upbeat as recent corporate earnings commentary has suggested. And at 12:30 London time, US Treasury Secretary Scott Bessent will be joining Surveillance for an exclusive interview that we will bring you live here on Bloomberg Radio.
Donald Trump has criticised the chief executive of Goldman Sachs, saying that David Solomon's bank made a bad prediction about the impact of the US president's sweeping tariff agenda. Bloomberg's Ewan Potts has more.
Donald Trump says the boss of Goldman Sachs should maybe just focus on being a DJ, referring to David Solomon's part-time hobby. The US president also recommended the bank get itself a new economist, saying on social media that Goldman Sachs had made a, quote, bad prediction on tariffs. Trump didn't specify why he was upset, but his remarks follow a weekend research note from Goldman that said the impact of tariffs on consumer prices was just starting to be felt. In London, I'm Ewan Potts, Bloomberg Radio.
Well, the US president's pick to lead the Bureau of Labour Statistics, E.J. Antoni, has suggested suspending the agency's monthly jobs report. Speaking to Fox Business on Monday, before his nomination, Antoni suggested switching to quarterly reporting until issues are resolved. White House Press Secretary Caroline Leavitt says she expects the monthly reports to continue.
He floated the idea of possibly suspending until they can get the data and the methodology in order. And this president wants to ensure that the BLS, again, is putting out accurate and honest data that the American people can trust.
White House spokesperson Caroline Leavitt was speaking as critics have warned that eliminating monthly jobs reports could undermine public trust and hurt financial markets that rely on timely employment data.
Meanwhile, Britain's struggling statistics authority faces a 6% real terms funding cut by 2029. The budget squeeze at the Office for National Statistics comes at a time when it's trying to recover from a data crisis. Bloomberg's James Woolcock has more.
Delayed releases and major mistakes in GDP, jobs and inflation reports. Many have asked how the Office for National Statistics fell into crisis. Poor management and the social impact of COVID, even the new popularity of Ring doorbells have all been given as answers. But you can't rule out money. The body that gathers UK data has suffered under austerity. Our reporting suggests it will now have to turn around its service while facing more real terms cuts. In London, James Woolcock, Bloomberg Radio.
UK Prime Minister Keir Starmer will join his French and German counterparts for a call with Donald Trump later today to discuss Ukraine, ahead of a meeting between the US President and Vladimir Putin on Friday. Meanwhile, Ukraine's President Volodymyr Zelensky says he will not give up control of the eastern Donbass region to Russia. Speaking through a translator, Zelensky reiterated his push for Ukrainian representatives to be included in the planned talks between the US and Russia in Alaska on Friday.
It's impossible to talk about Ukraine without Ukraine, and no one will accept that. But they cannot agree on anything about Ukraine without us. I truly believe and hope that the US president understands and realises that.
Despite Zelensky's comments, US and Russian officials are said to be working towards an agreement on Ukrainian territories ahead of the Trump-Putin summit in Alaska.
And Germany's Conservative Alliance is losing ground to the country's far right in opinion polls. That's as the Chancellor's own popularity also deteriorates. Bloomberg's Tiwa Adebayo has more.
Support for Germany's right-wing AfD party is at a record high according to new voter polling figures. The jump comes just 3 months after Chancellor Friedrich Merz and his ruling coalition took power. Merz's personal favourability has also suffered, with the leader's approval rating sinking to its lowest level since stepping into office. Voters are unconvinced that the German premier is making noticeable improvements compared to the previous government, according to Forza, the pollster behind the figures. Their latest survey says only 29% of voters polled in early August said they were satisfied with Merz's performance, down from a high of 43% in June. In London, Tiwa Adebayo, Bloomberg Radio.
On the markets, the stock 600 is up by 0.4%. The FTSE 100 is 0.3 higher. And Wall Street S&P E-mini futures are pointing a little bit higher as well. And remember that we're looking at the all-country world index being at a record high, up 0.3 on the day. The FTSE 100 close to its highest intraday level, could be on set for a record close if it holds the current levels. On currency markets, Bloomberg dollar spot index is a tenth weaker. The euro is 0.2 stronger at 116.96.
That's news when you want it with Bloomberg News Now. I'm Tom Mackenzie.
I'm Stephen Carroll, and this is Bloomberg.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak US Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak US Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen. Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak US Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak US Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
We have some breaking news crossing the Bloomberg terminal. Perplexity says that they've made an unsolicited bid to Google today, offering $34.5 billion to purchase its Chrome browser. I'm going to repeat that. Perplexity says it sent an unsolicited bid to Google this Tuesday, $34.5 billion for the Google Chrome browser. That's a significant and interesting piece of news. We're going to get the shares of Alphabet, the parent of Google, up very soon. And we're going to talk to Bloomberg's Seth Figerman, who's one of our technology and AI editors out of New York City. The details with the stock of Alphabet now up a percentage point. Please, Seth.
Yeah, it's an eye-popping offer, as you pointed out, Ed. It's also very much a long shot bid. There's a lot of caveats here. Google has not actually put Chrome up for sale, as far as we know. It's largely in response to the U.S. government wanting a judge to order Google to sell off Chrome. The judge has not actually put out a ruling on that yet. And then on the offer itself, Perplexity is offering $34.5 billion. That's nearly double what Perplexity's valued at, and far more than the more than $1 billion that Perplexity has raised to date. Perplexity is saying that they have investment funds that are willing to support this bid in full. But again, this is a long shot offer as of now.
They've made long shot offers before, whether or not they've been as formal as this one, but they threw their name in the ring when it came to TikTok, I remember. But the US part of TikTok, as numbers aside, the browser bit, well, they've already been building their own browser, so why make this purchase, and ultimately how would it beef up their offering and take away from that of Google's?
Yeah, it's a great question. They have been working on a browser called Comet, but it's one thing to try to build your own browser from scratch, and another to acquire a browser that reaches billions of people around the world. The idea here seems to be that they want to inject their AI agent capabilities into the interface that we all use on the web every single day and get in front of far more people. This would give them a major head start on that front, but again, this is a lot of money that we don't think they currently have.
Yeah, I mean, I'm reading the story, and you'll forgive me, Seth, I'm just reading it in real time. Perplexity says it's going to invest $3 billion over the next 2 years in Chrome and Chromium, right, which is the underlying open source coding that supports a number of browsers. And also that they're going to extend a substantial offer to Chrome talent. I mean, I'll leave some of the details to you, but what do we make of that? What else are we reporting?
Yeah, I mean, again, I think they're trying to show that they'll be a good steward for a platform that's used by billions of people around the world while continuing to move forward with their own venture in injecting AI capabilities into key internet functionality.
Well, we're expecting that ruling from Judge Amit Mehta in coming days on the remedies that they want to see to prevent what it sees as Alphabet and Google being some sort of monopoly when it comes to search in the United States. Bloomberg's Seth Figerman on the breakdown of Perplexity's offer for Google Chrome.
What is our understanding at a time, of course, when negotiations between the US and China continue? We have that 90-day extension in terms of what this agreement could look like if investments in the US from China are not part of that.
There is so many touch points. There are so many touch points, I should say, when it comes to that relationship. And if you can't talk about actual investment, which has been a consistent concern, not just with China, but you mentioned Japan as well. The Nippon Steel deal has really brought into question how much foreign direct investment you actually want at the end of the day, which is ironic given it's such a key pillar of Donald Trump's policy, bringing in that foreign investment to kind of offset some of the expenditures when it comes to things that the government would need to spend in terms of the country. It's one of the components of U.S. GDP. But the other key touch points are things like rare earths, it's IP, it's technology, but it's also a manufacturing and supply chain story that extends not into China, just into China, but into Vietnam, the Philippines, Malaysia, etc., that ultimately comes back to the end consumer. And the point that Scott Bessent is trying to make here is that there's already so much interdependence between the two. Do we need to include foreign direct investment on top of that? Anecdotally, for example, when the Chinese invested in the Empire State Building, just as a hypothetical, that is where there was a lot of concern about the fact that some of these massive American projects are foreign owned. And that was something that domestically caused quite a bit of concern. This was years ago, of course, but it's that kind of sentiment that's starting to come back.
More broadly, in terms of the revenue increase coming through from tariffs, are we any clearer to a point where that is starting to offset concerns about the U.S. deficit? Is it making a mark as we see those revenues tick up year on year pretty substantially?
They're enormous. I mean, the last 3 months, just from the tariff collected since Liberation Day, even as these kind of negotiations are ongoing, are a pretty decent chunk of change. We're talking about billions of dollars being collected by the IRS, but billions doesn't solve a $1 trillion problem or a multi-trillion-dollar problem. And that's really where the concern is. His argument, or Donald Trump's argument, is simply that the math will add up, that the tariff revenue plus the tax cuts will somehow offset the deficit. But we've talked to economists, to market participants throughout programming who suddenly said, well, the math doesn't add up because you're not actually taking into account some of the other pieces as well. That being said, it's the interest rate payments that are ultimately causing the kind of snowball effect in the deficit. And that's where those kind of essentially Doge cuts were pointed at to kind of get rid of the underlying thing that is ultimately spending the money and then be able to bring the deficit down. We are making a dent, but it's a tiny dent.
Hi, I'm Lisa Mateo, introducing you to the new Stock Movers Report from Bloomberg. These are short audio reports, 5 minutes or less, delivered right to your podcast feed throughout the day. Stock Movers fills you in on the day's winners and losers on Wall Street and tells you about the news and data that's driving those gains and losses. If you want to stay plugged into the stock market but don't want to spend all day watching tickers scroll across your screen, then Stock Movers is a place for you to get informed. Listen a couple times throughout the day to find out what's moving equities and why. Search for Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Tom Mackenzie.
And I'm Stephen Carroll.
Global stocks have climbed to a record high after the latest US inflation data eased price concerns and strengthened bets on a Federal Reserve interest rate cut next month. The MSCI All Country World Index hit an all-time peak following Wall Street's surge as money markets came close to pricing in a 25 basis point reduction at the Fed's next meeting. While core US inflation accelerated to its fastest pace since the start of the year, a modest rise in goods prices has tempered fears that the cost of tariffs could push up prices more broadly. Jay Barry is JP Morgan's head of global rate strategy.
I think there is some encouragement from the fact that you didn't see any pickup in core goods pricing so far, where it's another month with the tariffs in place where you haven't seen them pick up. That has given market participants a bit more sort of lack of concern right there. And you pivot it back to the labor market after today, that if we know the Fed has an asymmetric reaction function and seems to be more concerned about labor market weakness than inflation being above its target, and with the slowing we've seen in private payroll growth, it kind of gives the green light to go back and think about the Fed cutting in September, even with inflation very far away from the Fed's target.
Jay Barry speaking there as investor focus now shifts to Friday's US retail sales figures for signs that consumers are as upbeat as recent corporate earnings commentary has suggested. And at 12:30 London time, US Treasury Secretary Scott Bessent will be joining Surveillance for an exclusive interview that we will bring you live here on Bloomberg Radio.
Donald Trump has criticised the chief executive of Goldman Sachs, saying that David Solomon's bank made a bad prediction about the impact of the US president's sweeping tariff agenda. Bloomberg's Ewan Potts has more.
Donald Trump says the boss of Goldman Sachs should maybe just focus on being a DJ, referring to David Solomon's part-time hobby. The US president also recommended the bank get itself a new economist, saying on social media that Goldman Sachs had made a, quote, bad prediction on tariffs. Trump didn't specify why he was upset, but his remarks follow a weekend research note from Goldman that said the impact of tariffs on consumer prices was just starting to be felt. In London, I'm Ewan Potts, Bloomberg Radio.
Well, the US president's pick to lead the Bureau of Labour Statistics, E.J. Antoni, has suggested suspending the agency's monthly jobs report. Speaking to Fox Business on Monday, before his nomination, Antoni suggested switching to quarterly reporting until issues are resolved. White House Press Secretary Caroline Leavitt says she expects the monthly reports to continue.
He floated the idea of possibly suspending until they can get the data and the methodology in order. And this president wants to ensure that the BLS, again, is putting out accurate and honest data that the American people can trust.
White House spokesperson Caroline Leavitt was speaking as critics have warned that eliminating monthly jobs reports could undermine public trust and hurt financial markets that rely on timely employment data.
Meanwhile, Britain's struggling statistics authority faces a 6% real terms funding cut by 2029. The budget squeeze at the Office for National Statistics comes at a time when it's trying to recover from a data crisis. Bloomberg's James Woolcock has more.
Delayed releases and major mistakes in GDP, jobs and inflation reports. Many have asked how the Office for National Statistics fell into crisis. Poor management and the social impact of COVID, even the new popularity of Ring doorbells have all been given as answers. But you can't rule out money. The body that gathers UK data has suffered under austerity. Our reporting suggests it will now have to turn around its service while facing more real terms cuts. In London, James Woolcock, Bloomberg Radio.
UK Prime Minister Keir Starmer will join his French and German counterparts for a call with Donald Trump later today to discuss Ukraine, ahead of a meeting between the US President and Vladimir Putin on Friday. Meanwhile, Ukraine's President Volodymyr Zelensky says he will not give up control of the eastern Donbass region to Russia. Speaking through a translator, Zelensky reiterated his push for Ukrainian representatives to be included in the planned talks between the US and Russia in Alaska on Friday.
It's impossible to talk about Ukraine without Ukraine, and no one will accept that. But they cannot agree on anything about Ukraine without us. I truly believe and hope that the US president understands and realises that.
Despite Zelensky's comments, US and Russian officials are said to be working towards an agreement on Ukrainian territories ahead of the Trump-Putin summit in Alaska.
And Germany's Conservative Alliance is losing ground to the country's far right in opinion polls. That's as the Chancellor's own popularity also deteriorates. Bloomberg's Tiwa Adebayo has more.
Support for Germany's right-wing AfD party is at a record high, according to new voter polling figures. The jump comes just 3 months after Chancellor Friedrich Merz and his ruling coalition took power. Merz's personal favourability has also suffered, with the leader's approval rating sinking to its lowest level since stepping into office. Voters are unconvinced that the German premier is making noticeable improvements compared to the previous government, according to Forza, the pollster behind the figures. Their latest survey says only 29% of voters polled in early August said they were satisfied with Merz's performance, down from a high of 43% in June. In London, Tiwa Adebayo, Bloomberg Radio.
On the markets, the stock 600 is up by 0.4%. The FTSE 100 is 0.3 higher. Wall Street S&P E-mini futures are pointing a little bit higher as well. And remember that we're looking at the All Country World Index being at a record high, up 0.3 on the day. The FTSE 100 close to its highest intraday level, could be on set for a record close if it holds the current levels. On currency markets, Bloomberg Dollar Spot Index is a tenth weaker. The euro is 0.2 stronger at 116.96.
That's news when you want it with Bloomberg News Now. I'm Tom Mackenzie.
I'm Stephen Carroll, and this is Bloomberg.
Hi, I'm Lisa Mateo, introducing you to the new Stock Movers Report from Bloomberg. These are short audio reports, 5 minutes or less, delivered right to your podcast feed throughout the day. Stock Movers fills you in on the day's winners and losers on Wall Street and tells you about the news and data that's driving those gains and losses. If you want to stay plugged into the stock market but don't want to spend all day watching tickers scroll across your screen, then Stock Movers is a place for you to get informed. Listen a couple times throughout the day to find out what's moving equities and why. Search for Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts. Hi, I'm Lisa Mateo, introducing you to the new Stock Movers Report from Bloomberg. These are short audio reports, 5 minutes or less, delivered right to your podcast feed throughout the day. Stock Movers fills you in on the day's winners and losers on Wall Street and tells you about the news and data that's driving those gains and losses. If you want to stay plugged into the stock market but don't want to spend all day watching tickers scroll across your screen, then Stock Movers is a place for you to get informed. Listen a couple times throughout the day to find out what's moving equities and why. Search for Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts.
tariffs going to be pushed through from corporate America onto consumers?
And to what extent is inventory management delaying the pass-through? And to what extent will we see more in the months to come? And will that derail this Federal Reserve from reducing interest rates by the time they get to September?
Well, this is the big question. We have two CPIs, one today, one more, and another jobs print, and of course, Jackson Hole, before we get the Fed meeting. And now what the market is pricing in, because of the weak labor market, that the Fed is going to be able to cut interest rates. Jonathan, what if we get a hot CPI print today? Does the market just sway completely in the opposite direction?
Big focus on who's going to be the next Fed chair as well. That story's in the mix so far this morning. Our latest reporting indicating the following. The Federal Reserve's two vice chairs, so that's Mickey Bowman, Philip Jefferson, plus Dallas Fed President Lori Logan, under consideration to serve. The list is getting longer, not shorter.
The list is getting longer. I would say about 10 to a dozen names are on this list, and the process is underway. The Treasury Secretary has taken himself out of that list, out of that mix, and he is running the process. What he's going to do is try to hone it down to just a few names to put in front of the president for an interview. The one that really caught my eye was Philip Jefferson, because this was someone that was appointed, remember, by the Biden administration. But I remember the day he was appointed, and Kevin Hassett had said, this is an individual, top economic mind, and if I was in Trump 1.0, this would be someone I would have no problem putting in front of President Trump.
We might have a new BLS chief in the mix as well, so look out for that conversation later on this morning. One single name to look at, Nvidia. In the pre-market, it's down about 1/3%, so no big drama here whatsoever. But the latest reporting from the team here at Bloomberg, the Chinese authorities have sent notices to a range of firms discouraging the use of the less advanced semiconductors.
So we've seen in the past China do this. They want to boost national champions in China, as well as that they are a little bit concerned about national security in China from U.S. related chips. What I would say, and we're speaking to Mackenzie Hawkins, the lead author, journalist on this story, the urgency now that Beijing has to tell these firms to look domestically, not the U.S., is coming on the heels of the U.S. saying, well, we're ready to ship them. Except for President Trump, you can ship them if you give us 15%.
That stock is down by 0.3%. The broader equity market doing okay, just about unchanged. The calm before the potential storm at 8:30 Eastern Time. Coming up on this programme through the next hour, Keith Lerner of Truce ahead of the latest inflation data. John Lieber of Eurasia Group as China discourages the use of Nvidia's H20 chips. Plus, we'll catch up with Elias Galou of Bank of America as a record number of investors worry about US valuations. We begin this hour with stock steady as traders await US CPI data out at 8:30 Eastern Time. Keith Lerner of Truce writing the following. We anticipate further consolidation of the recent sharp gains and a reset in sentiment within the confines of an ongoing bull market. Keith joins us now for more. Keith, welcome to the programme, sir. Let's start with inflation. What could derail this melt-up that we've witnessed over the past few months?
Yeah, well, great to be with you on CPI day. Listen, maybe a really hot number could be a negative. I think in some ways, though, the market may be able to look through that. I mean, the broader picture is we've had a big rebound. We all know up 28% from the lows. Sentiment has kind of reset somewhat higher, and we're in this digestion phase. And I think as much as we're focusing on just today's CPI print, what you all mentioned earlier will just be as important, if not more important, is that employment report, next month. And then finally, I think the big picture too is, we have all these different topics, but the big picture for the equity markets, it's about profits. And we're seeing a really strong profits season with, the revenue beat rates are above 80%, led by tech, which is beating by about 90% of the companies are beating it as well. And those forward earning estimates for the overall market continue to move higher as we have all these other factors, around it.
Keith, you're talking about revenue. Can we talk about margins just for a moment and factor in the tariffs and how that story might change in the future? Just how are companies absorbing costs at the moment? Are we seeing it through foreign suppliers, domestic companies, or are we seeing that pass through to the end of consumer? And I just wonder in the months to come whether you expect that balance to shift somewhat going into year end.
Yeah, it's hard to get a hard number on that. I think it's a bit of a mix at this point, but the revenue beat rates suggest some of that is being passed through because we're having 80% beat rates from the corporate earnings season. And I also think with the labor market weakening somewhat, I think there's going to be some pushback from consumers if you try to raise prices. So it's a mix, but exactly what that percentage is still an open question and still be to be resolved. But if you go back to the overall equity market, I think what we're seeing, I mean, if you look at the last month, the equal weight index is basically flat. Small caps are still somewhat underperforming. It's all about large caps and tech. Tech and communications are up 5% over the last month. And I would say they have somewhat less exposure to some of these kind of inflationary trends, which are hitting smaller cap and the average stock more.
How challenging, though, is it for corporate America and for earnings if the trade story has been very fluid and we only just got the tariff rates a few weeks ago for certain partners and other partners are still negotiating with the United States?
It's still challenging. We still don't know the rules of engagement. But, the way I think about it is tariffs are important. It's not the only thing that matters. We know, looking at the Mag 7, 3 or 4 companies are, basically spending in CapEx $300 or $400 billion. That's almost as much as most estimates on tariffs. There was also some recent analysis done suggesting that, buybacks this year are on pace to be above $1 trillion. And we also have to remember that these companies have been battle tested over and over again through the highest inflation we've seen in decades, the fastest rate hike cycle that we've seen, also disruptions in the supply chains. And each time they've come out somewhat stronger, and those earning trends, again, continue to surprise to the upside. So listen, there certainly will be some winners and losers, but I will say I wouldn't underestimate corporations' ability to adapt. And maybe one also last stat, the second quarter earnings season, right, is actually now higher than what it was expected back on Liberation Day. I think that also kind of speaks to this resiliency.
How does this all look for 2026? I'm thinking of the car companies. They all took substantial profit hits. Are they going to have to pass them on to, say, new cars that hit the lot in 2026? How slow could we see this tariff story really hit the inflationary impact for the U.S. consumer?
I think that's right. I think we'll be somewhat of a gradual move up. But, also think about the economy. I mean, it kind of went to stall speed somewhat if we look at the last 3 months of jobs where, we're around 15,000, I believe. And the job growth this year is about half the growth from last year. So I think you have to deal with that inflation side, but there's also a potential that you actually see a little bit of acceleration in the economy from this, 1.2, 1.3 closer to, 1.82% next year. So I just think there will be offsets. And if you have a little bit more inflation, I think on the margin, as long as it's not a big pop, which is not our expectation, then equities on the margin should be able to be, a little bit of a hedge against that.
Keith, can we just finish on a somewhat controversial topic at the moment, the data itself, and how dependable that economic data is? How much trust do you have in the data, not for this morning, but in the months to come?
I mean, at this point, we all know the response rates have gone down a lot, and that's been that's been something that's happening since after COVID. So, listen, I think the response rate is problematic. That's why you have to look at the breadth of the overall market, and then also take some signals from the actual market itself. So, and I think one thing where we continue to focus is those weekly jobless claims. I think that's still good data to be looking at. One of the key metrics we're looking at, and also the credit market. So, we have to take what we get, and overall, I don't think the picture's changed in the data from 6 months ago until today. The data has been somewhat less reflective of what's happening because of those response rates.
So, Keith, do you see this as a welcome development in the last month or so, that we're actually going to take a look at how this data is produced? Or are you worried about the introduction, maybe injection, of political bias?
How about I say both? I think we can all agree we have technology, AI. I think from my perspective, somebody that looks at data every day, that just having another deep dive into this, is there a better way to do that, is certainly welcome. Of course, if there starts to be some divergence between some private data versus the public data, that will be a concern. But that's really premature to say at this point. But I do certainly welcome a deep dive into this data, and getting things a little bit quicker and more accurate early on would be, I think, a positive.
I think a lot of people would agree with you. Keith, thank you, sir. Keith Lerner there of Truist with the economic data. Coming out a little bit later this morning at 8:30 Eastern time. Look, the 3-month average on payrolls went from solid to stall speed, just like that. This data hasn't been dependable for quite a long time. It's not dependable, even if the effort to be as accurate as possible is highly credible. And it's the credibility factor that's a question here. We know this data is prone to massive revisions, but we accept that and we're comfortable with it because we believe the process is very credible. Now, whether this development down in Washington enhances that or undermines it remains to be seen, but that's the worry at the moment.
It is a worry at the moment, especially when you have conservative economists saying that this individual is highly partisan. If this individual comes out and says he doesn't believe the own data from the statisticians in his own commission, that is going to put a tremendous amount of questions with the data and whether or not potentially it is being undermined.
That data, the latest, drops at 8:30 Eastern Time. Inflation data just around the corner. Equity futures at the moment just about unchanged on the S&P 500. With an update on stories elsewhere this morning with your Bloomberg Brief, let's cross over to Yahara Anand. Hey, Yahara.
Good morning, John. The U.S. and China have extended their trade truce for an additional 90 days. President Trump signed an order extending the truce through November 10th. Had it not been extended, U.S. tariffs on Chinese goods would have jumped to at least 54% at midnight. The extension may clear the path for Trump to meet with Chinese President Xi Jinping in late October. Meanwhile, Chinese authorities are discouraging local companies from using NVIDIA's H20 processor, especially for government-related purposes. Sources telling us here at Bloomberg that Chinese officials are worried the chips could have location tracking and remote shutdown capabilities, two things NVIDIA denies. And the Trump administration is set to have expanded its list of potential new Fed chairs. Officials say the central bank's two vice chairs, Michelle Bowman and Philip Jefferson, are now under consideration, along with Dallas Fed President Lori Logan. Treasury Secretary Scott Bessent will interview the additional candidates in the coming weeks. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the program, China pushing back.
I deal with Jensen, who's a great guy, and NVIDIA. The chip that we're talking about, the H20, it's an old chip. China already has it in a different form.
We'll get into the political controversy surrounding those chips with John Lieber of Eurasia Group, live from New York City this morning. Good morning. Inflation in focus this morning. The estimate's pretty wide. Let's focus on one print. Month-over-month core CPI. So strip out food, strip out energy. We're looking at a range of estimates this morning, anywhere from 0.1 to 0.4. But the bulk of estimates on Wall Street looking for something around 0.3. The previous read 0.2. That's going to set the tone for markets worldwide. Equity markets shaping up as follows on the S&P 500. Just about unchanged on the S&P, unchanged on the Nasdaq. Just got this tidbit out of London from a colleague, Dan Curtis. The Japanese bond, the 10-year, untraded all day for the first time since 2023. That just speaks to the calm before the potential storm.
Well, definitely. It's calm right now, but what's going to happen at 8:30? We're going calm into the CPI print. The CPI print is so important because the market is so stacked to one side right now. They're looking at the weakness in the labor market. They're thinking the Fed potentially is going to cut 2, maybe 3 times before the end of the year. What happens if we get a hot CPI later today? And what happens if we get another hot CPI print? And Jonathan, even worse, we get 2 hot CPI prints going into the Fed meeting and another weak jobs report. That is what everyone would say, stagflationary fears.
A lot still to play for. That data drops at 8:30 Eastern Time. Under surveillance this morning, China pushing back.
I deal with Jensen, who's a great guy, and NVIDIA. The chip that we're talking about, the H20, it's an old chip. China already has it in a different form. The Blackwell is super duper advanced. I wouldn't make a deal with that, although it's possible. But the H20 is obsolete. You know, it's one of those things, but it still has a market.
It's the latest this morning. Chinese authorities urging local companies to avoid using NVIDIA's H20 chip. Sources telling us here at Bloomberg that firms are being discouraged from using the chips, especially for government-related purposes. Joining us now to discuss is John Lieber of Eurasia Group. John, welcome to the programme, sir. I just wonder what the end game is here for the Chinese and what ultimately they're trying to achieve.
I think the end game is that the Chinese want to have their own chip. And they don't want to be dependent on the U.S. tech stack. And that's one of the reasons that Trump allowed these H20 exports, was because he bought into the argument that if the U.S. dominates chip technology, and if the Chinese learn to rely on that in their own technology stacks, then it gives the U.S. more power, not less here. And I think the Chinese recognize that argument. It's somewhat valid. And so what they want to do is encourage people not to use the American tech, and they know also how vulnerable they are to things like the foreign direct product rule and the other rules that the U.S. has used to weaponize their own technology supply chain over the past several years. And now that's the long-term game here. I think the H20 is just one part of that. But technological development is going to determine what happens here, not necessarily export controls.
John, when it comes to NVIDIA and AMD selling these chips, getting these export licenses to go back into China, what kind of pushback have you heard in Washington from both individuals who are questioning whether the 15% revenue cash back to the United States is legal and the China hawks as well in the Trump administration?
Yeah, I mean, the 15% revenue take makes it look like to certain people, and I think this is a valid argument, that national security is now for sale. I'm sure a lot of companies would be very happy if they had the opportunity to buy their way out of U.S. regulations that otherwise ban them from doing business. In a way, this is a version of a carbon tax where you're purchasing the right to pollute. But here, you're purchasing the right to undermine America's national security by selling these chips to the Chinese, which a lot of China hawks in Washington are not happy about because they believe that this is enabling Chinese technological development. This is contrary to the policy of the Biden administration and up until last week, the policy of the Trump administration, which was, of course, to deny the Chinese access to these chips. So this is a very controversial move. It's never been done before, as far as we're aware. And Trump's getting a lot of pushback, both from the security hawks and also people who argue this is an illegal export tax, which I'm pretty confident they'll find their way around. But this is something new we've never seen before.
Do you think this is a one-off, or we're going to see more policy like this?
That's a good question. I think we don't know yet. I don't think there's a lot of areas where this type of thing is doable, where you've got an export ban that somebody wants to that they're offering the chance to raise some revenue off of. So I'm not sure where else we could see it, but we still have one of the things that's really surprising to me to remember all the time is there's still 3.5 years left in this administration, and we know Trump loves to do these types of deals. So it wouldn't surprise me to see this show up in other areas. It's just hard to predict which ones yet.
Well, John, let's talk about what we learned from the first term under President Trump. In Trump Volume 1, there was a coherent ideology governing trade policy, whether you liked it or not. I happen to be sympathetic to the concerns they had about reciprocity in a country like China, who'd put barriers to entry up all over the place. John, now I'm struggling with what the framework is exactly this time around. How are you explaining this to people at the moment?
Yeah, I mean, a huge difference between this term and last term is you don't have the strong personality of Robert Lighthizer directing a lot of Trump's trade policies. What you have instead is the strong personality of Donald Trump directing these policies. And Trump is going every which way. And, it's obvious that in some cases, he's motivated to get a deal. We saw that with all these countries pre-August 1st. And in other cases, you see personal relationships starting to sour and take over the ability for the U.S. to cut deals, like what's happening with the U.S. and India right now. I think at the core of it, though, Trump remains a very transactional guy. He's somebody that wants to see higher tariffs, and he's somebody that wants to do deals in order to get those tariffs. With China, they've been able to leverage their use of rare earths and critical minerals to great effect. The U.S. national security community is in a panic about its ability to build weapons in the United States because of the choke points that China's been using to deny the U.S. those critical minerals. And Trump himself, and that's driving a lot of the China policy right now. So I don't think there's a consistent strain that you can pull through here. But it is worth pointing out that Trump ran on a campaign of higher tariffs, and now the U.S. is getting them with an average effective rate somewhere in the mid to high teens. And that's a huge shift that reflects Trump's own personality and his own policy preferences.
Well, let's just sit on that transactional nature. Nothing new, quite well understood. Where people struggle is what defines whether it's a good transaction or a bad transaction, and what kind of feedback loops is the president sensitive to?
Well, clearly he's sensitive to feedback from the private sector. I mean, the reason that the Liberation Day tariffs were paused in the first place was because of what he called the yippiness in the bond market. So that's one type of feedback. Another type of feedback he's clearly sensitive to is direct feedback from the business community. His meeting with Jensen Huang directly led to the selling of these H20 chips into China. And I also think that he's sensitive to the positive feedback he's getting from the deals that are happening where his U.S. trading partners aren't putting up any real resistance here. Nobody's retaliating. I think that's an important point, is that he's faced virtually zero retaliation, and that's allowed him to get away with these higher tariffs. And I think going forward, the feedback that might cause him to reverse course would be economic weakness, major complaints from the U.S. business community, big businesses who are going to have the ear of the president. And I think that means that probably small businesses are getting left out of this because he's not necessarily hearing their voices.
John, when it comes to the trade agreement, we, of course, have the punting of the negotiations when it comes to China and the United States. You mentioned the victory, really, of Beijing using those rare earth magnets in lieu of making sure they can loosen up export controls. Would you say Beijing has the leverage going into November?
Not necessarily. I mean, I think you have to be mindful of the fact that China is going to face higher tariffs. They're just comfortable, and their system's prepared for a level of higher tariffs, and they can deal with tariffs in the 30% range, which is where we think tariffs on China are going to end up here. However, I don't want to play down the fact that they have been able to play this critical mineral game very, very well, and the U.S. is obviously very, very sensitive to it. But this is not necessarily a positive story for the Chinese economy either.
When it comes to what the United States wants to see out of China, they're dealing with export controls, they're dealing with rare earths. The president the other day was truthing about soybeans. What else is on the list before potentially Xi and Trump can meet and potentially get to this grand bargain of a deal?
Yeah, I mean, we don't see a grand bargain. We don't think a grand bargain is necessarily the right way to describe this. We're thinking about this as a very transactional deal. So the U.S. is going to raise its tariff levels on Chinese goods. China will make some purchase commitments about market access. They're not going to fundamentally reform their economy, which was, of course, the goal in Trump 1 and the goal of some of the China hawks in this administration. But what they're going to do is make enough promises to buy enough time that they can live with these 30% tariffs and then hope to fight that out in the next presidential term. I'm not at all convinced these tariffs are going down. Even after President Trump's term is over, none of the China tariffs went down after his first term, and these things have a way of being enduring.
John, appreciate the update, the reaction from you, sir. As always, thank you. John Lieber there of Eurasia Group. Most people assume they'll stay and maybe even last beyond this presidency if they stand up to legal regulatory scrutiny in the days, weeks, months to come, and we'll see about that.
It's very true, because Donald Trump, the president, is using IEEPA to enact a number of his tariffs. And the issue is that is now, right now, being discussed in courts. I would push back on the one thing, though, that this administration does have, and yet the U.S. government has. They can use 232, 301. There are different ways to enact a tariff policy, but the whole broad IEEPA sweep potentially could be major pushback from the courts on Trump.
If you're just tuning in, welcome to the programme. Two-part story in the last 24 hours. Some of these chip makers, NVIDIA, AMD, securing export licenses into China so long as they give a 15% slice of the revenue back to the government, to the White House, to the Treasury. This is what we're hearing from the Chinese side, according to our reporting. The Chinese authorities have sent notices to a range of firms discouraging the use of those less advanced semiconductors. NVIDIA, slightly softer yesterday, slightly firmer this morning. Not seeing big moves off the back of this story. Up this morning at the pre-market now by 0.2%. Coming up on this programme, we'll catch up with Elias Galou of Bank of America as a record number of investors say they're worried about US valuations. Plus, we'll touch base with Yahara with your morning movers, with Intel rising after President Trump changes his tune on the company's CEO. The stock is up by 3.4%. Live from New York, you're watching Bloomberg TV.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Slow start to the trading week so far. It's going to get busier later on this morning when inflation data drops. Look at this, going absolutely nowhere on the S&P 500. Likewise on the Nasdaq. Let's lift the lid on the index and get you some morning movers. 3 hours away from the cash open. With those morning movers, here's Yahara. Hey, Yahara.
Hi, John. Intel CEO Lip Bhutan must have hit all the right notes because he is back in President Trump's good graces. And take a look at the stock. It is jumping 3.3%. They met at the White House yesterday, and according to President Trump's social media post, it went well because he called him an amazing man. Quite the contrast to what we heard days ago from President Trump calling for his ouster due to his alleged ties to China. So they left things on a positive note with more talks planned at the cabinet level. So something tells me we may get an announcement from Intel pledging more U.S. investments as the story goes. Next up, we have this stock, Big Bear AI, plunging in the pre-market, down 28% on a massive earnings miss. This is a company that provides AI software to the U.S. Department of Defense, and it says that the government efficiency drive is stalling federal contracts, and for that reason, it slashed its outlook quite dramatically. Very different from what we heard from Palantir, but of course, that company is in a league of its own. And we end on Apple, moving slightly to the downside, down 0.5%, but on some big drama. Elon Musk is accusing the tech giant of favoring OpenAI's ChatGPT in its app store, saying that Apple makes it very difficult, nearly impossible for all other AI apps, including his own, Grok, to reach the top of the App Store. So he is threatening legal action on antitrust grounds. Sam Altman of OpenAI has already hit back, and something tells me, given these billionaires' big personalities, the war of words is not over. John?
Yahara, thank you. That stock is down by about 0.5%. A stock receiving increased scrutiny over the year so far. That's the latest for Apple. On our radar this morning, China telling local companies to avoid using NVIDIA's H20 chips. Sources telling us here at Bloomberg that guidance over the past few weeks has been particularly strong against use of the chips for government-related work.
So after the U.S. said it will resume these sales, allow these sales and the export licenses for these chips to go into China, we saw Beijing starting to raise security concerns. And a lot of this was really socialized through local press. Now, what our reporters here learned, led by Mackenzie Hawkins, that they sent guidance to some of these companies strictly, please avoid these chips. They're worried about security concerns like tracking of location. But also for China, this is about making sure that they could dominate in this space. And they want their firms to use their national champions and not rely on NVIDIA or AMD.
We talked to John Lieber of Eurasia Group about this just moments ago. There is an alternative option, not just that one. Also, they might be pushing for more. Now they know that these companies can secure export licenses if they give a slice of the revenue back to the White House, to the US government. Can they push for more? Can they push for the higher technology chips coming out of these companies?
Potentially. And what did we hear from the president? He said that H20 is not as high, as sophisticated as some of the other chips that are out there. Maybe that is why the president was willing to reverse his own export control we saw in April. What I would say is that for the moment, this story is kind of calm between the rare earth magnets and the export controls between China and Beijing. But now, Jonathan, we have another 90 days of these countries going to be negotiating. What else could we see China want to get out of the United States?
It's a story getting a lot of attention, but not pushing around the market too much. NVIDIA this morning firmer by about 0.2%. Another story getting a lot of attention is this one right here. President Trump's search for the next Fed chair has expanded. Sources telling us here at Bloomberg that the Fed's two vice chairs, Mickey Bowman and Philip Jefferson, are now under consideration for the role, plus the Dallas Fed president, Lori Logan.
So I don't know if you want to call it The Bachelor, The Bachelorette, or Game of Thrones. Obviously, more names are being added to the list. This makes sense. We know about 10 to a dozen names are going to be on the list for the Treasury Secretary to sit down with these individuals. And then once he decides, say there's 3 or 4 names he likes, maybe 2, then he sends a shorter list to the president, and the president will then meet that person. I think the president's number one question for all these people is very obvious. Are you willing to cut interest rates? Do you want to cut interest rates? Do you see a path to cut interest rates? That's pretty much going to be it. What I found so striking about this, we mentioned it earlier, is Philip Jefferson. This was someone who was appointed by Biden, and then they're willing to take a look at.
Yeah, unlikely that he would get the pick from President Donald Trump, but it's very, very obvious that the Treasury Secretary is worried about the optics and interested in the process. And I think the fact that you cast the net wide and far lends some credibility to the process at a time when a lot of people are asking questions about who might be the Fed chair and what kind of approach they'll take to the job.
Exactly. And this is very different than we're seeing what the president do in terms of BLS. He does not want to make, at least the Treasury Secretary is not trying to make the Fed chair this highly partisan political appointee so he can go back and say, look at this search I had. We had Democrats, we had Republicans, we had individuals from Wall Street, individuals who, like Mickey Bowman, have been really one of these individuals talking about main Main Street and regional banks. The search was far and wide.
Let's talk about the BLS. You mentioned it. The president naming a new head of the Bureau of Labour Statistics. The president picking Heritage Foundation chief economist E.J. Anthony to lead the agency after firing his former head earlier this month. Anthony, subject, of course, to Senate confirmation. Now, this is a process that typically people wouldn't follow, because who cares about who runs the BLS? You don't even want to think about it. Now a lot of people are going to be following this very, very closely.
And I think it remains to be seen with this particular person on whether or not he will get the nod from the Senate. This is an individual who owned conservative economists. You have the senior fellow at the Conservative American Enterprise Institute describing him as, quote, utterly unqualified, as partisan as it gets. And it seems like he really pitched himself on Steve Bannon's War Room podcast. And he's already put a ton of doubt into the data coming out of BLS. And this is what individuals in the market are concerned about, that this is someone who wants to make the BLS partisan and politicized, even though if you're a market participant, you want that agency independent.
Best case outcome, has his opportunity, a fair hearing, he's heard, and he manages to secure some cross-party support, some bipartisan support, and we move on with life. That's the best case outcome. Unlikely, given what's developing in Washington at the moment.
Unlikely, and I would say the best case outcome would be if this individual, if Anthony was able to get to be the commissioner of the BLS, maybe then he can go to Trump and say, please lift your hiring freeze. I would like more statisticians at the BLS, and I would like to make the data more comprehensive and more reliable so that you're not going to see these revisions that you don't like and your truth about.
The data very much in focus this morning. Keep repeating here, but inflation data on deck, 8:30 Eastern time for that data point. Let's turn back to the markets. Bank of America out with its August Global Fund Manager Survey, showing investors are the most bullish since February, with a record 91% calling US stocks overvalued. Joining us now to discuss is Elias Galou of Bank of America. Elias, welcome to the programme. Let's just talk about that 91%. So a lot of people seem to think, many, in fact, the overwhelming majority believe the US stocks are overvalued. How many are short? How many are underweight at the moment?
Hey, John. Look, I mean, clearly that's a very important question to our investors and clients, because the valuation and the perception of global stock market valuation was really a highlight in this month's Global Fund Manager Survey, which was not really a decisive survey, not like the survey that came out in April, which was a clear moment to buy, or the survey from December 2024, which was a great moment to sell the market. But this month, the highlight was really the perception that global equity markets are overvalued. The highest share of investors saying they think the global equity market is overvalued since 1998, when we first started asking this question. The share topped even the highs observed during the internet bubble in 1999-2000 or the everything bubble in 2021. And of course, the perception that global equity markets are very rich, overvalued, is driven by the US equity market, with here as well 91% of FMS participants saying that they think the US equity market is overvalued. Definitely, valuations are very important for long-term equity investors. In fact, that is the one factor that matters when you invest in terms on stocks over the course of a 10-year period. However, this has not been an element that caused major concerns, because investors continue to rotate towards the US equity market. They were very underweight in April. This underweight is being cut progressively, and despite the very high perception of overvaluation, the FMS positioning in terms of US equities remain net underweight, which is really a silver lining for US stocks.
So, Elias, the way you see things is that this negative reservoir of pessimism that we can keep feeding on in the months to come, can we continue to see that grind higher?
I think, this negative reservoir of pessimism is really what emboldens the bulls right now, because when you look at the results from the FMS survey this month, is that the bulls will really focus on the macro pessimism that in fact increased versus where it was in July. Macro sentiment worsened a little bit, but also the bulls will focus on the fact that global equity exposure stands below the historical average. Net 14% of FMS investors said they were overweight the global equity market. The historical average since 2000 is roughly 25%. So based on these two metrics, the bulls will say there is further room to go in terms of positioning. However, there is also some substance to embolden the bear narrative, and in particular the fact that the average FMS cash level remains at a low 3.9%, which historically has been a strong signal to say that global risk assets are toppy, as now is a good time to retreat or hedge your position.
When you look at the pessimism, what has changed since the last few surveys in terms of how individuals are thinking about the uncertainty coming out of Washington?
Look, the uncertainty in terms of the way it is captured by the biggest tail risk in the fund manager has clearly receded, because back in April, if you remember, a global trade war triggering a global recession was by far the biggest tail risk, and in terms of the magnitude, the biggest tail risk ever in the history of the fund manager survey. And this risk has receded, with now less than a third saying that they think trade war and policy uncertainty is the biggest tail risk. What you also need to consider here is the convictions. That really changed over the past few months. I would say that FMS sentiment today is based on three major convictions. Number one, the global economy will dodge a hard landing. Only 5% of them expect a hard landing. The culprit here is the much more accommodative monetary policy they expect next year. One stat that really stood out to me, because you were speaking about the search for the next Fed chair just before our conversation, is the fact that a net majority of FMS participants think that the next Fed chair will actually resort to either QE or yield curve control to alleviate any concern on the US debt sustainability. That's a huge development. The second conviction is really the fact that policy uncertainty has receded via the trade war. And finally, and I would say the most important convictions, relies on AI, and the fact that AI and the Mag 7 will continue to lead this bull market. Long Mag 7 is now back as the most crowded trade. There was a 4-month interruption between long gold and short US dollar. But here you can see that the conviction on AI remains very much intact.
Elias, do you see that high-tech concentration in the US market as a source of stability or of risk? That's a debate we've had to start the week. How do you view things?
Of course, I mean, and this is why this is a concern, because investors, are very much concerned about equity market valuation, mostly because of the tech sector. However, when you look at the positioning on tech, it stands now below the historical average. When you also conciliate the sentiment data from the FMS, which is really the equivalent of soft data, to the hard data that we see in terms of flows, over the past few months, and in fact since Liberation Day, there has been zero net inflows to US equity funds. So there is still room for investors to buy the US equity market and to buy US stocks. And in fact, John, across our Bank of America platforms, last week we saw the 10th largest weekly buying from institutional clients in terms of US single stocks, which shows that the appetite to increase allocation to US equities and to US tech stocks remains very much intact.
It's a hated market, but they keep buying it. Elias, it's good to catch up, as always. Thank you, sir. Elias Galou there of Bank of America with the latest. Let's get the latest on stories elsewhere this morning with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. An explosion at a plant operated by U.S. Steel in Pennsylvania has killed at least one person and injured 10. The company says the incident involved coke oven batteries at its Clairton plant. The CEO of U.S. Steel says the firm is working closely with authorities to investigate the exact cause. Meanwhile, President Trump is downplaying expectations for his upcoming meeting with Russian President Vladimir Putin on Friday. Speaking to reporters yesterday, he called it a feel-out meeting and said, quote, "I'm going to be telling him you got to end this war," and that he'll warn him that'll be the end if a deal is not possible. And I mentioned this one earlier. Elon Musk is accusing Apple of favoring OpenAI, saying the company makes it impossible for anyone else to reach the top of the App Store charts. Musk said Apple's behavior is an antitrust violation and stated that xAI will take immediate legal action. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on the programme, inflation data on deck.
We think we're going to see something more in goods inflation. I think that's the consensus also, that more of that's going to bubble through. We have 0.29% month on month on core CPI. Even if you get a 0.4, if it's focused on goods inflation, that's not too concerning for Fed officials.
Up next, we'll catch up with the brilliant Torsten Slok of Apollo, live from New York City. This is Bloomberg.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Overcome operational constraints to focus on future growth? And unlock economic and social prosperity through environmental responsibility? With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
Live from New York City, welcome to the programme. Under surveillance this morning, inflation data on deck.
We think we're going to see something more in goods inflation. I think that's the consensus also, that more of that's going to bubble through. We have 0.29% month on month on core CPI. Even if you get a 0.4, if it's focused on goods inflation, that's not too concerning for Fed officials. If you think about the fundamental economics of it, what we should be concerned about is, do we have a persistent uptick in inflation, or does this look more like a one-time rise in the price of certain goods?
So here's the latest this morning. Investors are waiting inflation data this week, with CPI due out in less than 2 hours' time. Torsten Slok of Apollo writing, the market is clearly expecting rate cuts, but the upside risks to inflation are significant. The stagflation theme in markets is intensifying. Torsten joins us now for more. Torsten, good morning.
Morning.
Let's talk about the Fed's dual mandate. Should both sides of that dual mandate be treated equally?
Well, that's, of course, up to the committee and, importantly, up to the Fed chair. So far, it's very clear that Jay Powell and the committee have been putting a lot of weight on the worry that inflation is not yet at the 2% target. So for that reason, if you think that inflation is now at risk of going up because of tariffs, inflation is going up because of the depreciation of the dollar, all that is creating an impulse on inflation over the next 6 months, where there are some arguments to say, well, we should not be cutting because inflation is under some upward pressure. On the other hand, growth is slowing down, as you know from the employment report. There's some headwinds, of course, not only from tariffs. There's also headwinds coming from student loan payments restarting, especially middle-income households are facing some challenges as a result of that. That means that growth is slowing, which, of course, says the Fed should be cutting. But the current administration at the Fed, if you will, or the FOMC committee, is certainly putting a lot of weight on the inflation worries and the potential for more inflation impulse coming over the next several quarters.
Do you believe that derails some of the impulse to reduce interest rates on the FOMC?
Well, now, as you just talked about, we're expanding the search for who the next Fed chair will be. And, of course, some of these names certainly are more traditional Fed staffers and have been on the FOMC for a very long period. So that does begin to raise questions around, well, what is exactly the intention of the new Fed chair. But the important thing, as usual, is that there are 12 voting members on the FOMC. And even if the Fed chair comes in and says, I think rates should go down, if the other FOMC members say, no, we don't think rates should go down, well, then they will not be cutting, because it is a vote. And we will find out, of course, what the composition of the committee looks like.
Well, Jay Powell told us that the main number to watch is the unemployment rate. With this kind of unemployment rate, should they be cutting?
Well, the market obviously is saying we have 2 cuts this year. So I do think that the dot plot is telling you that the next move is that rates are moving lower. But it's very clear that this whole debate around, when you put it up on the scale, then the dual mandate, how much weight do you put on inflation, which is now at risk of going up? How much weight do you put on the unemployment rate, which is at risk of also going up? Well, that becomes a very, very difficult debate, because at the moment, the Fed is currently saying, well, maybe we still worry more about inflation. But if the labor market does deteriorate more meaningfully over the next several months, and there are chances that could happen, we have certainly seen some, of course, bad data, in particular, of course, on the employment report itself, but also the headwinds from, in particular, the consumers in the middle-income household group. High-income households have been doing well for a long time because of asset prices going up. Low-income have been stressed because of interest rates and therefore higher cost of borrowing for them. But the middle-income household now, for the last few months, also facing headwinds, is now also a downside risk to the growth outlook.
How much has this trade story been a headwind? Because in June, you wrote that Donald Trump might have outsmarted all of us when it comes to trade policy, which was welcomed by the White House.
But if you think about the trade deals that Trump has been able to generate, both with Europe and also what he's been doing with Japan, at least when you look at the tariff part of that, that is beyond what most people expected, even when you go back to Liberation Day. So from that perspective, I still think that Trump did manage to get higher levels of tariffs with a lot of different trade partners than what anyone really expected in the beginning of April during Liberation Day discussions.
Let's sit on the data we get later this morning at 8:30 Eastern Time. To what extent do you believe that inventory management has delayed some of the pass-through? And how many more months do we need to see of data before you get comfortable that we've seen the limits of this?
That's exactly right. That's why the census data for the inventory to sales ratio, first, companies were building inventory as, of course, we saw tariffs come in, and those inventories have now been running down, especially for retailers. And now those inventories are down now to a more normal level. So now we are getting into a situation where companies are pricing goods not so much on whatever is left in the inventory, because there's not much left in the inventory. It really is the new price that includes tariffs. And that's likely why the number this morning, what is most important is not only what's happening on the goods side, where most of the worries are about inflation, but the fact that ISM prices paid for services also showed a very strong uptrend in the latest data, is telling you that for a long time the story was, it's all about goods, services is fine. But the fact that ISM services paid for the last several months have started to move higher is telling you that there is a bigger risk, in particular also with deportations at the same time, removing labor from the economy. That means more upside pressure on wages, especially in the sectors where undocumented immigrants are working. That all means that service sector inflation could also be a very important part of the number that comes out here at 8:30.
Are you seeing this show up in inflation expectations? Survey-based inflation expectations of consumers can be very volatile. What are you seeing in markets?
Well, so the 1 year ahead swap, meaning what does the market price, and this is people putting real money, betting on what will headline CPI be in 12 months' time, is currently pricing that inflation at this time next year in 12 months' time will be 3.3. That's significantly higher than the Fed's 2% target. So that's also telling you that the market is pricing that inflation expectations have almost become unanchored already. Is that because people think that inflation will be higher on its own, or is it because the expectation now is that the Fed will be cutting and therefore there will be even more impulse to inflation, not only from tariffs and not only from the dollar depreciation, but also from potentially the cut that's coming from the Fed prematurely?
What do you think it is?
I still think the risk is that the market is beginning in the long end to look a little bit more wobbly when it comes to inflation expectations. Markets are, broadly speaking, especially when you take last week's auctions for treasuries, there was a number of issues with 3-year, 10-year auctions last week where you begin to worry about, well, if we now have on top of the fears that inflation might be moving higher, then rates in particular in the long end could also be moving higher simply because of the significant fiscal issuance and treasury issuance still in the pipeline.
Final question. Do you trust the data?
Well, what's really unique about this discussion in markets at the moment is that the BLS controls both parts of the Fed's dual mandate. They control non-farm payrolls, the employment report, and they also control the CPI and inflation statistics. So that's why, let's take, for example, non-farm payrolls. If non-farm payrolls is really good, the market may say, well, this is not necessarily the right data. This is just done for political reasons. And therefore, maybe the conclusion is that the data is not that good. Well, what if non-farm payrolls actually comes out as bad or really bad? Well, then the market will be also concluding, or maybe things are actually really a lot worse. So in that sense, credibility is very asymmetric. That means that credibility here really is that it is the case that if the data does come out a lot better, or in this case, say a lot worse, the market will be putting a lens on of beginning to ask questions about, is this the real true data, or is this data that is actually being painted with a different brush? So, broadly speaking, I do not believe under any circumstances the BLS staff and their staff, the way they collect the data can be really changed in any way. But it is, of course, a very important debate we're having at the moment when this discussion is, of course, about firing BLS commissioners, certainly the way it's been done here more recently.
Torsten, it's good to see you. Appreciate your time. Thank you. Torsten Slok there of Apollo. It's the Chinese effect. It's how we treat Chinese data.
Everyone's concerned, even in conservative economic circles, that this individual is just too partisan, and now the whole independent institution is politicized.
We'll see how things change down in Washington. Up next, we'll catch up with Stuart Kaiser of Citi, Michael Zezas of Morgan Stanley, Angela Zena of CFRA, and Elizabeth Economy.
The volatility so far this year is in the headlines. It's not so much in the market.
The market is being very sensitive to who are going to be the winners.
In the U.S.,
the tech-heavy largest companies have been dominating the rally.
I think the market is trying to take a slightly longer-term view.
Market returns aren't necessarily going to be blockbuster.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the inflation report in America, live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now. And check out this news at 7 a.m. Eastern Time. This market going absolutely nowhere on the S&P 500, on the NASDAQ, as we await the first big data point of the week. We're looking for CPI at 8:30 Eastern Time. Then it's on to PPI and retail sales later in the week. But the main event is later this morning.
Absolutely. The market basically on hold until they get the data when it comes to inflation. And the big question is how much of the tariff and trade policy story out of Washington is going to now bleed into CPI, which pretty much we've seen the CPI reports kind of shrug it off. A little bit started creeping into the last report. But given the fact that now the tariff policy is pretty much set, barring a few countries that they're still negotiating with, how much are we going to see that impact pricing pressure in the United States?
Payrolls growth has taken a big step down. Will inflation data take a big step up? And will that complicate the Federal Reserve's objective right now in the minds of a lot of people, what they'd like the objective to be, which is to reduce interest rates in September?
Absolutely. And this is their conundrum. So 2 CPI reports, 1 more job report before they meet and able to get what they would call the totality of data. And, Torsten Slok brought up a really great point. Immigration policy could also mean that we can have higher wages and wage pressure on the labor part of the story. So what you could potentially see is just inflation becoming much harder to tame. And how difficult is that going to be for this Federal Reserve?
Depends who the Fed chair is. We're casting the net far and wide. The new list of candidates will include Mickey Bowman, Philip Jefferson, 2 vice chairs, and Dallas Fed President Lori Logan under consideration to replace Chairman Powell next year.
And then, of course, you have the 2 Kevins still there. You have, of course, Chris Waller. You have James Bullard as well. The Wall Street Journal reported that name that is being floated out there. So we're looking at a dozen names on this list. The Treasury Secretary is running this entire process. He's the one making the calls. He's the one sitting down with these individuals. And then he's going to give 2 or 3 names to the president to sit down for an interview. And the number one question, Jonathan, is going to be, will you cut interest rates?
Give them some credit, though. These names are highly credible. This list, I think, is a really credible list. Reminds me of the list of the Treasury Secretary nominee. You remember that big race 6 months ago? How many months? 9 months ago?
Yeah,
something
absolutely.
like that. Time's flying. When you went through those names, they were all very, very credible. This list reminds me of that. Certainly some very credible figures in the mix.
Very credible and also bipartisan. You have individuals there like Philip Jefferson that was appointed and then also then given a higher job at the Fed under the Biden administration. And I remember when he was appointed and Kevin Hassett said, this is an individual that is very credible, who if I was still working for President Trump and it was Trump 1.0, he would have been on my list. But I have no problem recommending this name to the president.
We'll get into that conversation later on this morning. We'll get into a lot of things with equity futures totally unchanged on the S&P 500. The big focus is on inflation just around the corner. We'll catch up with Stuart Kaiser of Citi as Wall Street braces for that report. Michael Zezas of Morgan Stanley as the search for the next Fed chair is expanding. Plus, we'll speak to Angela Zeno of CFRA as China is urging firms to
नेचुरल गैस को देखोगे ना, नेचुरल गैस 15 मिनट में यहाँ पर कोई लेवल है नहीं नीचे, बिकॉज उतना पीछे सो ही नहीं हो रहा है. 30 मिनट में देखोगे तो मल्टीपल सपोर्ट है, वो भी काफ़ी बड़े बड़े सपोर्ट है. एज फार एज क्रूड ऑयल इज कंसर्न, क्रूड ऑयल में भी कोई खास सपोर्ट या रेजिस्टेंस है नहीं. अभी यहाँ पर लेना मत, अभी बाइंग बनी नहीं है. इसमें देखते हैं यहाँ पर अगर बाइंग बनती है तो डायरेक्टली मत एंट्री करना. ओपन इक्वल टू हाई कैंडल है, ठीक है. थोड़ा सा वेट करेंगे. अगर यही कैंडल कन्वर्ट रही तो फिर बाइंग नहीं करेंगे यहाँ पर. थोड़ा सा वेट करते हैं. ऊपर काफ़ी रेजिस्टेंस बन चुके हैं क्रूड ऑयल में, तो हाई लेवल से प्रेशर है, बट एक रिबाउंड होना चाहिए प्राइस को. अब लेट्स सी कितना और रुकता है यहाँ पे, या फिर थोड़ा और नीचे निकल के आता है. क्रूड में लेना मतलब भी थोड़ा वेट करना, ठीक है. कैंडल ओपन इक्वल टू हाई है, वी नीड टू वेट. इंडियन मार्केट ऑलमोस्ट गोइंग टू क्लोज 4 मिनट में. तो उस केस में फिर प्राइस थोड़ा सा और डिप कर लेगा क्रूड का. नीचे हैं सपोर्ट और भी, बट यहाँ पर ओपन इक्वल टू हाई में डायरेक्टली बाय नहीं कर सकते. नहीं तो फिर प्राइस 5430 की ओर जा सकता है. फिर वहां पर देखेंगे. नहीं तो इस पर लेना मत, अभी डायरेक्टली ओपन इक्वल टू हाई कैंडल है. थोड़ा सा वेट करना. चार्ट स्टक हो गया है. वेट वेट, चार्ट स्टक हो. नाउ चार्ट इज रनिंग. लेट मी नो इन द कमेंट बॉक्स. अब चल रहा है चार्ट प्रॉपरली या अभी स्टक है? आई होप अब चार्ट प्रॉपरली चल रहा होगा. नहीं चल रहा है तो बता देना एक बार. इस चार्ट इज रनिंग नाउ. अब क्लियर है चार्ट या अभी भी स्टक हो रखा है? आई थिंक चल रहा होगा क्लियरली. नाउ इट इज़ नॉट स्टक. ठीक है. वो कैंडल, हाँ लास्ट कैंडल ओपन इक्वल टू हाई थी. यहाँ पर एक बाइंग का प्लान कर रहे थे बट नहीं ले सकते. ये कैंडल भी ओपन इक्वल टू हाई है तो मत लेना, बाई मत करना. थोड़ा वेट करेंगे. ठीक है. थोड़ा सा लास्ट कैंडल ओपन इक्वल टू हाई बनी थी तो उस पर हम डायरेक्टली एंट्री नहीं कर सकते. थोड़ा सा और वेट करेंगे. थोड़ा अब मेरे को लग रहा है नीचे और आ जाए तो बेटर ही है. अब मैं यहाँ पर इंटरेस्टेड नहीं हूँ. लास्ट कैंडल ने थोड़ा सा यहाँ पर एक बाइंग का प्लान जरूर रखा हुआ था बट नाउ दिस कैंडल इज नॉट गुड इनफ. थोड़ा सा और नीचे आने का वेट करते हैं. आएगा तो चला जाएगा, कोई इशू नहीं है. क्रूड ऑयल में थोड़ा सा और नीचे आने का वेट करना, देन एक बाइंग यहाँ पर प्लान करेंगे थोड़ा सा डाउन साइड पे अराउंड 5440। डे हाई भी रेजिस्टेंस है एक एंड बट डे हाई से ज़्यादा अच्छा रेजिस्टेंस उसका ऊपर वाला एक लेवल रहेगा मेरे अकॉर्डिंग। अगर वहाँ तक एक बार पहुँचता है तो सेलिंग वहाँ पर करेंगे विच इज़ बेटर लेवल। उसको मैं फिर से मार्क कर लेता हूँ। इंडियन मार्केट भी हो गया क्लोज। इंडियन मार्केट ऑल्सो क्लोज। इन्वेंट्री भी है। फोरकास्ट तो बेयरिश है। लेट्स सी एग्जैक्टली कितना आता है डेटा। डे हाई भी रेजिस्टेंस ही है बट मेरे अकॉर्डिंग अब इसको निकल जाना चाहिए डे हाई को ब्रेक करके मार्केट को अपसाइड की ओर। बाकी कल लास्ट ट्रेडिंग सेशन है, ध्यान रखना फ्राइडे को 15 ऑफ अगस्त कॉमोडिटी मार्केट और इंडियन मार्केट दोनों क्लोज ही रहेंगे ओवरऑल। हाँ, बाइंग करते वक्त ओपन इक्वल टू हाई पे रिस्क ज़्यादा हो जाता है इसलिए अवॉइड करते हैं और कोई रीज़न नहीं है। थोड़ा वॉल्यूम भी कम हो जाता है, ध्यान रखना आफ्टर 3:30 कॉमोडिटी मार्केट में। एंड नेचुरल गैस में देखो 15 मिनट में तो कुछ नीचे लेवल दिख भी नहीं रहे, पीछे मार्केट सपोर्ट ले रहा है बट नहीं दिख रहे। 30 मिनट में यहाँ पर बहुत सारे सपोर्ट हैं और काफ़ी स्ट्रॉन्ग सपोर्ट भी हैं बट वो बहुत पास पास में है लाइक। तो थोड़ा सा मैं सोच रहा हूँ कि 15 मिनट में कोई नया सपोर्ट ही बना दे ये तो ज़्यादा बेटर रहेगा ट्रेड करने के लिए, क्योंकि उतना पीछे पेड वर्जन में भी देख रहा हूँ ट्रेडिंग व्यू के तो वहाँ पर नहीं शो कर रहा है उतने पीछे के कैंडल्स। 30 मिनट का टाइम फ्रेम वहाँ पर यूज़ करना पड़ेगा नहीं तो। भी थोड़ा नीचे ही आ जाए तो भी बढ़िया है। निफ्टी बिल्कुल इंडियन मार्केट की तरह ही कर रहा है। मॉर्निंग पे जैसे इंडियन मार्केट चल रहा था वैसा ही कुछ नेचुरल गैस एमसीएक्स में चलता हुआ। ठीक है, यहाँ पर वैसे देखा जाए 30 मिनट 15 मिनट का मुझे नहीं पता, यहाँ पर है नहीं है सपोर्ट दिख नहीं रहा है बिकॉज 30 मिनट में जरूर यहाँ पर एक सपोर्ट है बट वहाँ पर मार्केट ले चुका है सपोर्ट। 18 ऑफ नवंबर को लिया था 2024 में, फिर 19 ऑफ नवंबर को, उसके बाद अभी रिसेंटली कल फिर से आया था 24th ऑफ अप्रैल के आसपास एंड देन 25th ऑफ अप्रैल 2025 एंड देन अभी उसी लेवल पर रुका हुआ है। तो 30 मिनट में है सपोर्ट जरूर बट वो काफ़ी बड़ा हो जाएगा एंड मल्टीपल टाइम टेस्ट है तो 15 मिनट में कोई नया सपोर्ट बनाएगा तो देखेंगे, नहीं तो ऊपर रेजिस्टेंस पे आएगा तो वहाँ वापस सेल कर देंगे नेचुरल गैस को। मार्क करने के लिए लेवल पे क्या करता हूँ, थोड़ा सा लाइन ड्रॉ कर देता हूँ सो दैट थोड़ा इजी रहे। ये 30 मिनट टाइम फ्रेम पे कुछ सपोर्ट्स हैं। ऑल दीज आर 30 मिनट सपोर्ट जोन्स। ठीक है, ये नहीं है पूरा सपोर्ट जोन, ये मान सकते हो इस एरिया के आसपास, इस एरिया के आसपास काफ़ी बड़ा है 30 मिनट में, तो आई एम अवॉइडिंग। रेजिस्टेंस नेचुरल गैस में, नेचुरल गैस में अभी कोई ट्रेड नहीं है इसमें। देखो यहाँ पर सपोर्ट हैं 30 मिनट में है, बट वो काफ़ी बड़े हैं, नो मल्टीपल टाइम टेस्ट हो गए हैं, तो मैं उनके अकॉर्डिंग नहीं चल रहा हूँ। 15 मिनट में कोई सपोर्ट वहाँ पर शो नहीं हो रहा है मुझे, बिकॉज बिल्कुल बॉटम है, उसके पीछे वहाँ कैंडल ही नहीं है 15 मिनट टाइम फ्रेम पे। तो या तो 30 मिनट या हायर टाइम फ्रेम यूज़ करना पड़ेगा, नहीं तो कोई और ट्रेड बन नहीं रहा है वहाँ पर बाइंग के लिए स्पेशली। हो सकता है सपोर्ट हो, 15 मिनट का सपोर्ट ले रहा हो, बट शो नहीं हो रहा है, तो मैं कैसे कर लगा सकता हूँ, सही नहीं रहेगा। कोई नया सपोर्ट बनाता है तो देखते हैं। रिस्क ही लेना पड़ेगा फिर, नहीं तो बाइंग के लिए 15 मिनट में यहाँ पर काफ़ी बड़ा। के लिए छोड़ दो नेचुरल गैस को ना, अननेसेसरी रिस्क हो जाएगा नहीं तो काफ़ी ज़्यादा। मुझे लग रहा है फिलहाल के लिए भी 15 मिनट में भी कोई खास मोमेंटम हो नहीं रहा है, मॉर्निंग से एक रेंज के अंदर फंसा हुआ है। एक ये रेंज मान सकते हो इसमें 248 से लेकर 244.5। ठीक है, ये एक रेंज है, किसी एक साइड अगर ये निकल जाता है क्लोजिंग बेसिस पे तब शायद थोड़ा कुछ मोमेंटम मिले हमें। अभी के लिए मुझे इसमें कुछ खास नज़र नहीं आ रहा। अगर ऊपर आता है तो 255 के आसपास एक सेलिंग जरूर रखेंगे अगर अपर लेवल तक पहुंचा तो। थोड़ा दूर है लेवल, बट वो ऊपर अपर लेवल पे एक रेजिस्टेंस अच्छा बना हुआ है। कल कंप्लीटली मेजर सपोर्ट ब्रेक हुआ था तो दैट सपोर्ट बिकम अ रेजिस्टेंस नाउ। तो अगर थोड़ा ऊपर आ गया है 255 के आसपास, वहाँ एक सेलिंग जरूर प्लान करेंगे, बट वो थोड़ा सा काफ़ी ऊपर लेवल है, वहाँ पहुँचे ना पहुँचे वी डोंट नो येट। ये तो ऊपर एक रेजिस्टेंस जरूर है, यहाँ सेलिंग नेचुरल गैस में प्लान जरूर रहेगी। एक सपोर्ट बना दे थोड़ा सा नीचे और आके तो बढ़िया है, यू नो लाइक 15 मिनट में नया सपोर्ट ही बन जाएगा तो वो हमारे लिए बेटर रहेगा बाद में ट्रेड करने के लिए भी। नहीं तो अभी या तो 30 मिनट के अकॉर्डिंग चलना पड़ेगा और कुछ ऑप्शन है नहीं। एंड मैं एक्सपेक्ट कर रहा हूँ कि अभी तो ये रेंज ही है मार्केट में 248.1। 244.8। ठीक है, ये एक रेंज मुझे लग रही है फिलहाल के लिए बनी हुई है जो मार्केट कंटिन्यूसली फॉलोइंग दैट रेंज। बाकी गोल्ड को भी देखोगे, गोल्ड भी साइडवेज ही है, कल कुछ खास किया नहीं मोमेंटम सीपीआई के डेटा के बाद भी। कल पीपीआई का डेटा आएगा तो कल में भी हो सकता है मोमेंटम कर दे।
Two hours away from the opening bell, 60 minutes away from the inflation report. Equity futures totally unchanged. Said it all morning. It's like the calm before the potential storm. Futures down by not even 0.1% on the S&P. Basically unchanged on the Nasdaq. The S&P within 1% of all-time highs. As we count you down to the opening bell and that inflation data, let's take a beat to get you some morning movers. Here's Yahira. Hey, Yahira.
Hi, John. We start with On Holding soaring 11%, nearly erasing all of its losses for this year after reporting a surprisingly strong second quarter and lifting its outlook at a time when these footwear makers are under pressure due to tariffs because, like many others, On produces its shoes overseas in places like Vietnam. But it is undeterred, with the CEO saying that consumer energy remains strong and that they actually plan to open new stores globally to keep up with that strong demand. So watch out, Nike. Next up, we have shares of Hanes brand. They are absolutely soaring here, up more than 40% on a possible takeover by Canada's Gildan Activewear. The FT is reporting that the company is in advanced talks to buy the U.S. underwear maker, valuing it at nearly $5 billion, including debt. Hanes has been hurt by tariffs on top of weak sales, but it did report a good second quarter recently, so Gildan thinking that it could help turn things around for this struggling company. And worth noting again, Intel, because it is a new day for this company. Shares are up 2.6% with the CEO back in President Trump's good graces. They met at the White House yesterday, and apparently, according to President Trump's social media post, the meeting went well, with him calling Lip Bhutan an amazing man with an incredible story. Quite the contrast from just days ago when he was asking for him to resign over his alleged ties to China. So they left things on a positive note, and we may see a fresh pledge from Intel on U.S. investments. John?
Yahara, thank you. Appreciate it. Stock is higher by 2.6%. On our radar this morning, China urging local companies to avoid using NVIDIA's H20 chip, particularly for government-related purposes. Sources telling us here at Bloomberg that China aims to shift away from Western chips in favour of local alternatives.
So two things going on here with Beijing. One, they're concerned about some of the potential location tracking, they say, coming out of U.S. chips. You see NVIDIA really pushing back against that. And also, they want to make sure that their own domestic champions are the one that their firms are relying on. What's interesting about this, and according to Mackenzie Hawkins, the lead journalist on this story, after the U.S. said it would resume allowing these sales to go through, you've seen it in Chinese media basically saying stay away from these chips. But now that we've learned they've sent this guidance, there's more urgency from Beijing because the Trump administration told NVIDIA and AMD, go ahead, get those export licenses as long as we get 15% cut.
Hugely controversial 24 hours for this sector. In just a moment, we'll catch up with Angelo Zeno of CFRA to get his views on that. So stay tuned for that. I wanted to squeeze in this story as well that the president is tapping E.J. Anthony to lead the Bureau of Labour Statistics after firing the former head of the agency. Trump posting on Truce Social that Anthony, who comes from the Heritage Foundation, will ensure that the numbers released are, quote, honest and, quote, accurate.
So the concern is because this individual is highly political and very partisan, and even there's a ton of pushback from conservative economists. The question is, will this undermine the data? Will the data just be seen as political? And I still wonder whether or not he can actually get through the Senate. Libby Cantrell, after the firing of the BLS chief, put out a great note and was talking about the fact that this individual needs to get through a subcommittee, and that on that subcommittee, where they cannot lose a single Republican vote in order to make sure they can advance to a full hearing, there are individuals who have not been afraid to go against this president, voice their concerns, senators like Susan Collins. So potentially this might end up not happening at a very low level in the Senate. This person might not even see a hearing.
I think we've got to draw a distinction between dependable and credible. The data, when it's released, in the minds of a lot of people on Wall Street, isn't dependable because it's revised so much. It's prone to heavy revisions. But the process, the perception of the process on Wall Street is highly credible. And that's what we're talking about this morning, the credibility of the data and whether this will undermine it or enhance it. I think a lot of people on Wall Street share the views that we should have a look at the process, maybe enhance the credibility of that process, and then we can make it maybe more dependable. I think that's a worthwhile pursuit, and we've talked about it endlessly over the last week. With this selection, if it becomes heavily politicised in Washington, particularly the confirmation hearing, it's not going to help things. And you heard from Torsten Slock of Apollo, this stuff is very, very asymmetric. And a simple way of saying that is just look at how we treat Chinese data. Every single month it comes out. We've been doing this for years. When it's good, we say, can't be that good. And when it's bad, we say, it must be really bad. And you don't want to see that happen with US data releases.
Absolutely not. It undermines the institution, and also it undermines the market confidence of that data. The best case scenario could be if this individual doesn't talk about the data and just runs it as an independent institution, leaves it up to the statisticians, which, by the way, the commissioner only sees the report a day or two before it goes to the president of the United States. And maybe this person, given his close proximity and relationship with President Trump, could actually get the Trump administration to lift the hiring freeze. Maybe they get more statisticians. Maybe they look at AI advancements on how to actually make the data more reliable.
That's what a lot of people would like to see in Washington, that's for sure. That's the latest on the BLS. I wanted to squeeze in this as well. The president downplaying expectations for his upcoming meeting with Vladimir Putin. Trump describing it as a feel-out meeting where he plans to tell Putin to end the war in Ukraine, but says they might leave without reaching an agreement. You'll be there. How high are expectations?
Well, I think the president just really dialed down those expectations. And this is what I said yesterday going into this meeting. My thought process was always, as Trump said, feeling it out. This is basically a beginning of a process. But even if the president is able to say there's not going to be a peace agreement from one meeting when also one party is not there in terms of Volodymyr Zelensky, but if this is the start of a process to hammer out really difficult long-term concerns, especially security concerns, then potentially this is a path to getting to that bigger peace agreement.
That meeting's set to take place this coming Friday going into the weekend, so look out for that. Let's turn back to technology. Sources telling us here at Bloomberg that China is discouraging domestic companies from using NVIDIA's H20 chips. Angelo Zeno covers NVIDIA for CFRA and has a buy rating on the stock. Angelo joins us now for more. Angelo, welcome to the programme. So you've talked a lot about getting access to the Chinese market and the extent to which NVIDIA has de-risked their exposure to that story, but we'd just love your initial reaction to the news of the last 24 hours. Truly unprecedented.
Yeah, no, absolutely. It really is unprecedented. And, it'll be interesting to kind of see how this kind of changes the dynamics, for the tech industry and the semiconductor industry in the future, as well as potentially other industries. But I would say kind of on the surface, I think this is pretty good for both sides in many respects, especially for a company like NVIDIA. I mean, it does now give them access to the second most important semiconductor market out there. So they are going to get significantly higher revenue. We think the run rate is north of 30 billion at this point in time for this company. But, more importantly, the addressable market expansion story, the broadening expansion, customer base expansion story here, greater diversification and what have you. Great for the long-term potential of this company. Access to more developers is a huge key for Jensen Huang here. Half the world's developers are in China. So that's a huge part of the story here for NVIDIA and even an AMD out there. And then, we think also it helps kind of potentially slow down the Huawei story, right? I mean, there's been a lot of fear that NVIDIA not being in China would only strengthen Huawei. And by now, NVIDIA kind of being able to go back into China and even potentially at some point, rolling out a tempered down version of their Blackwell chip, I think gets developers more, tied to NVIDIA's ecosystem, hopefully slows down that Huawei story.
Angela, often difficult to get access to decent market data out of China, but I'd love your read on things at the moment, just how you're running the numbers. Can you share with us what you think the market share of Huawei is currently in China? And given that the last 12 months of business for NVIDIA has been highly disrupted, how you think about things looking 12 months out, their share of revenue going forward, and ultimately the kind of slice that the White House can anticipate?
Yeah, those are all great questions, right? And to your point, there's that very limited data there. I think when you think about what we know is, there was basically potentially an $8 billion run rate for NVIDIA just a couple of months ago. And when you think about what Jensen has said is, he viewed the 2026 market as potentially a 50 billion or so addressable market in China next year. And, our view is, Huawei has gotten stronger here over the last couple of months. We do think Huawei with their next gen chips in 2026 and the fact that China does want to continue to support that local brand and Huawei being that crown jewel that they are, will, continue to allow them to, gain more share on that side of things. But our view, again, of that $50 billion market, NVIDIA should be able to take at least 30 to 35 billion. And again, that doesn't really assume much higher growth from the current run rate. So we do think there's upside to that, especially if there's a tempered down Blackwell chip that does launch into China here over the next couple of months. And on the AMD side, it's going to be a lot smaller in nature, but we think at least 3 to 5 billion from their perspective. So you could almost kind of back into what Huawei would be on that side of things. But Huawei is going to be kind of a key, story for China here over the next couple of years. And as far as the administration is concerned here, I do think, they do want to make sure that, I think their growth agenda really over the next couple of years under the Trump administration is going to be tied to AI. So having access to those developers, what Jensen is kind of throwing into the U.S. administration, I think means a lot to how the relationship between China and the U.S. is going to go here.
Does it basically mean that export licenses are now for sale in the United States?
I think I think when you think about the U.S. administration here, I think they've got a pro-economic agenda more so than anything else out there. So if you're kind of asking me, is there a price for President Trump here? I think under the right situation, I don't want to say he can be bought, but in many respects, I think there is a certain price that can be paid to a certain degree, right? I think there are definitely national security issues tied to semiconductors here. But I think, maybe instead of being 3 to 4 generations behind, if you're potentially only 2 to 3 generations behind or 1 to 2 generations behind, I think there are conversations that can be had with this administration, if the price is right and the trade deal is correct.
So if China is telling its firms to snub the H20, what chip do they want to get their hands on that potentially the Trump administration would have put a price on?
Yeah, I mean, listen, I think when you think about the Chinese market here, it is really all about the developers, and the developers continue to be really tied and tethered to NVIDIA's software ecosystem, and that's why it's really important for developers in China to have access to the H20 right now. And again, I think ideally, the H20 is not suited for machine learning. It's great for inferencing, and I think similar when you see a tempered down version of a Blackwell chip. Again, it'll be Blackwell is kind of this inferencing massive platform out there. So I think when you think about the Chinese, when you think about China, they'd love to have that next gen platform. But, I don't know if there's kind of a situation out there where they're going to exactly get what they want from the U.S. administration. That is kind of the next latest and greatest chip.
Angelo, appreciate reaction. Thank you, sir. Angelo Zeno there of CFRA on NVIDIA and the developments of the week so far. Let's give you an update on developments and stories elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. The Trump administration is set to have expanded its list of potential replacements for Fed Chair Jay Powell. Sources telling us here at Bloomberg the central bank's 2 vice chairs, Michelle Bowman and Philip Jefferson, are now under consideration, along with Dallas Fed President Lori Logan. Meanwhile, Citi CEO Jane Fraser is in Mexico City for talks with President Claudia Sheinbaum. Sources telling us here at Bloomberg they're discussing a potential public listing of Citi's retail Banamex unit. It's unclear if Sheinbaum is imposing any conditions on the sale or IPO of the unit. And Ford has unveiled a $5 billion plan for a new line of budget electric vehicles, starting with a $30,000 pickup truck set to roll out in 2027. CEO Jim Farley calls it a bet to take on Chinese rivals, warning there are no guarantees in the unpredictable U.S. EV market, which, as we know, has been struggling as of late. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara in about 30 minutes' time. Up next on the program, dealing with China.
We've been dealing very nicely with China, as you probably have heard. They have tremendous tariffs that they're paying to the United States of America. They've been dealing quite nicely. The relationship is very good with President Xi and myself.
Up next on the program, we'll catch up with Elizabeth Economy of the Hoover Institution. Live from New York City, you're watching Bloomberg TV. Inflation data 42 minutes away. The estimates look like this. Core CPI month over month 0.3%. That's the median. The range is wide, 0.1 to 0.4, and the uncertainty is high. This from Citi just moments ago. Andrew Honhorst expecting the larger and more widespread upside to goods prices not likely until the fall. This is going to take a few months. That's the latest data you can anticipate in about 40 minutes' time. Here's the price action going absolutely nowhere going into it. We're down just 0.1% on the S&P. Similar move on the Nasdaq 100. And the surveillance elsewhere this morning, dealing with China.
China tariff deadline is tonight, but do you plan to extend that?
We'll see what happens. We've been dealing very nicely with China, as you probably have heard. They have tremendous tariffs that they're paying to the United States of America. And we'll see what happens. They've been dealing quite nicely. The relationship is very good with President Xi and myself.
Here's the latest this morning. President Donald Trump waiting until the 11th hour to extend the China trade truce for another 90 days, saying all elements of the agreement remain the same. Bloomberg's Enda Karen joins us now for more. Enda, welcome back to the programme, sir. It's been too long. Please translate the following. They've been dealing quite nicely. The relationship is very good with President Xi and myself. What does that mean, Enda?
Well, it certainly means they've got a new window now for negotiations, Jonathan, on these tariffs. You remember the tariffs, had that pause not gone into effect, you would have been talking about tariffs in the 50% range today. Instead, they're sticking at that 30% area. Obviously, the effective tariff range is much higher, but the broad point is tariffs are on hold for now, a new window for negotiations on all those topics such as export controls, fentanyl, maybe more soybean purchases, and of course excess capacity on the Chinese side. So all these issues are on the table, and on paper at least, taking this at face value, the thinking is it may lead to some kind of agreement in the fall when the two leaders have an opportunity to meet at one of those fall summits, perhaps one in South Korea, for example, and perhaps they can ink a kind of a trade deal there. But as I say, that's the headline take on it. Obviously, under the bonnet, there are a lot of tensions and differences still to be played out on all of this.
And Karen, down in Washington, D.C. Let's explore some of those differences. Joining us now, Elizabeth Economy of the Hoover Institution and the former Senior Advisor for China in the Commerce Department under President Biden. Elizabeth, welcome back to the programme. It's good to hear from you. I want to lead on your expertise here and your experience. And something I know you're thinking about at the moment. Are we blurring the lines between national security and trade?
Yeah, I mean, I think that is a question that was clearly raised over the past week or two with President Trump's decision to reverse his administration's earlier decision, April decision, to put the export controls on NVIDIA's H20 chip. Typically you put an export control on technology that you believe could contribute to, a country or companies in that country developing military capabilities that will undermine your national security. So that was the decision that the administration made just in April. And then we saw, just earlier this month that the president reversed that decision without any explanation as to why that decision was being reversed. And I think it points to a larger challenge with this administration in that they have not yet articulated a real China strategy. We don't know whether this president considers China to continue to be the greatest long-term strategic threat, which is something that his first administration did put out there as part of a China strategy. That helps an administration set priorities, understand the trade-offs that you're going to make or not make. But without that kind of overarching framework, we don't know, where this president is coming from, where he's going, whether everything is up for negotiation moving forward.
Elizabeth, given your work in the Commerce Department, have you ever seen anything like this? Some corporation able to get their hands on a license because they're willing to give some of the revenue back to the U.S. government?
No, I mean, that was certainly a new twist. But even taking one step back from that, it's a new twist to have the head of the Bureau of Industry and Security, Jeffrey Kessler, go to London to be part of the trade negotiations with China. In the Biden administration, and frankly, in all previous administrations, you would never consider linking export controls with trade negotiations. Export controls deal with broad issues of foreign policy and national security. Tying them in some way to trade really makes no sense. But that's what this administration has opened the sort of the door to. So I think it's a bigger problem, even more than just this one-off decision. Is just this new world that we found ourselves in. And as far as the 15% revenue, the sort of NVIDIA and AMD having to give 15% of their the revenues from the sale of these chips back to the U.S. government, of course, that only sort of amplifies or reinforces the sense that somehow our national security is up for sale. Because, does that mean that all chips moving forward or even other goods that the United States, sells to China can all then be subject to some kind of new tax of some sort and the revenues will have to come back to the U.S. government? It really is fundamentally changing the nature of the interrelationship between national security and trade, and frankly, just trade generally.
There's a number of issues brewing between these two economies. Fentanyl, China continuously buying Russian and Iranian crude, disagreements about U.S. business operations in China. When they sit down, what do you think is the U.S.'s main goal out of this relationship?
I mean, I would have said in the first Trump administration that there was an emphasis placed first on, of course, securing these big purchase agreements that, again, President Trump seems to place as a top priority. He mentioned just yesterday or the day before having China quadruple its purchases of soybeans. Of course, China's already diversified away from the U.S. It gets 70% or more of its soybeans from Brazil now because of the tariffs that the president began, the tariff war that he started when he first came into power. But I think, number one, yes, getting more purchases from the Chinese. But I think also the U.S. wants a secure and stable supply of rare earth elements from China, which are, of course, essential for both our national security and technology industries. And we saw what happened when China put the squeeze on those, earlier, just a month or two ago. Companies in the United States really began to feel the pinch. So I think that's probably the second priority. And then all of the trade adjacent issues that you just mentioned, fentanyl, China's economic support for Russia in its war of aggression against Ukraine. TikTok is still standing out there. But I think those fundamental issues around the Chinese economy, things like China's export of its overcapacity in many areas of core technologies, I think those are going to be very difficult for the Trump administration to make progress on. I don't think they have the leverage that they need, or maybe that they even think they have, to get China to sort of fundamentally change the way that it does business.
We're up against the clock here, but in the 45 seconds we have left, Elizabeth, why has it been so difficult to convince the Chinese they need to rebalance their economy when so many economists agree that it might be good for them?
I think Xi Jinping has a vision of how the Chinese economy should work, which is reliant on exports and heavy investment, investment now into core technologies. And he believes it is working for the Chinese economy and is willing to suppress Chinese consumer demand and Chinese incomes to achieve what he believes will put China in a stronger long-term footing moving forward.
Elizabeth Economy of the Hoover Institution. Elizabeth, thank you. Appreciate it, as always. That final point is so important. Treasury Secretary Scott Bessent has been on top of this now for quite a while. Pushing this economy, this country to rebalance is a big goal of his. It's incredibly difficult to achieve.
Incredibly difficult. And even when the U.S. was pretty much taken off the market for them with those sky-high tariffs, what did we see? We saw their imports, their exports into other economies like the European Union actually go up. They will find a place to dump.
Up next on the programme, one story dominates everything in financial markets worldwide. Inflation data on deck, 34 minutes away. We'll catch up with Greg Peters of PGIM Fixed Income, Sucharita Ghazali of Forrester, Tiffany Wilding of PIMCO, David Kelly of JP Morgan Asset Management. The third hour of Bloomberg Surveillance, up next.
We've been calling this environment stagflation light.
You're going to have inflation that is just kind of sticky, but you're not necessarily going to see a big pop.
We're not expecting a reacceleration.
What we should be concerned about is, do we have a persistent uptick in inflation?
It's also quite possible that we'll see a slowly increasing inflation rate.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now. Looking ahead to tomorrow, this just in, Treasury Secretary Scott Bessent in the studio here in New York City tomorrow morning, 7:30 Eastern Time. Get that one on the calendar. Don't miss that and don't miss this. 30 minutes away, inflation data. Here are the expectations. The median guess, 0.3% for core CPI, month over month. For headline, 0.2. For year over year, we could creep back into the threes going into the Federal Reserve meeting next month in the middle of September. Equities at the moment have been a snooze all morning going into this. Futures unchanged on the S&P, unchanged on the NASDAQ.
This is why the conversation tomorrow with the Treasury Secretary will be so important, depending on what we see from this data. How much of this insight will we get from the data on Trump's tariff policy? Are we finally starting to see the trade policy creep into consumer prices? And this is something, Jonathan, this administration, when they were on the campaign trail, ran on. We will make it a more affordable America. Well, is that going to be true, depending on these numbers we see later this morning?
This will shape a lot of guesses about what the Federal Reserve will and won't do come September. The man in charge of what this might look like next year is the President of the United States. And the man in charge of the list that will land on the President's desk is the Treasury Secretary. And that list to replace Chairman Powell is getting longer. It's not getting shorter.
It's getting a lot longer. There's about a dozen names or so now, I would say, 10 to 12 names on this list. And Talia Mosin, our colleague in Washington, D.C., has added last night 3 more. Michelle Bowman, Philip Jefferson, and Lori Logan. And you've done a really good job this morning pointing out that this list is highly credible, especially when you have the likes of individuals already serving on the FOMC and individuals like Philip Jefferson. This is someone who was appointed and then given a higher title under the Biden administration. So no one can look at this list and say this is not credible. These are highly successful economists, and other individuals in this space that could potentially take on from the chair.
This story is going to play out over a number of months. The inflation story as well. Going into it, equities and bonds doing nothing. I've talked about stocks. Bond yields this morning almost totally unchanged on 10s at 429, on 2s at 377. Coming up this hour, we'll catch up with Greg Peters of PGIM Fixed Income with risk assets holding steady. We'll speak to Sucharita Kodali of Forrester on the state of the US consumer, plus David Kelly of JP Morgan Asset Management reacting to that inflation data. We begin this hour with stocks little changed as markets await the latest read on inflation. Greg Peters of PGIM Fixed Income writing, higher effective tariffs are now a reality, but their impact on activity and inflation in the US and the rest of the world is still unclear. Greg joins us now for more. Greg, welcome back to the show, sir. It's good to see you. Let's talk about what you and the team are looking for in 27 minutes' time.
Yeah, so I think we're largely in line with consensus. There's a lot of focus, obviously, on this print. I think the bias is for anything kind of below 0.4 on core is a signal for the Fed to ease in September. Anything above calls that into question. So I think there's a real skew here. But you know what I haven't heard talked about a lot is the shelter component, which is a very large component to the overall CPI. It might not manifest itself in this print, but what I think you'll see over the upcoming months is this push-pull between, yes, you will see inflationary effects of the tariffs, and you're seeing it already, but that's going to be almost completely muted by what's happening on the shelter component side. And so I really don't see inflation getting out of control here, maybe moderately higher, but if anything, I see the bias lower, not higher inflation.
Greg, let's just stay on that theme. It's an important one. The offset that you might get from services inflation. If you're on the FOMC right now, is there good reason then to look through what you might see develop on the good side and put some more weight on developments on the other side?
I think so. I think that's the story. It is manifesting itself in payrolls too, and the labor force, right? So what you're seeing is companies have a couple decisions to make, of course, whether they eat the tariff, they lay off workers in order to defend margins, or raise prices, right? And what I think you're seeing is just a cooling in the job market writ large, and I think that's due to tariffs. And I think that should be the focus of the FOMC. And my suspicion is anything other than a really hot print around, CPI will, move them forward as far as the rate cutting cycle is concerned.
Greg, do you have an understanding yet of exactly how the tariffs are impacting consumers? What percentage are they paying if, say, the new average rate is 15%?
I don't think we know, right? This is what makes it so challenging. I know it's a terrible answer to say we don't know, but that's the right one. But I think we'll know more over time, right? We're still in the very early stages. There's been an inventory rebuild. There's been an ever-changing kind of tariffing rate. So I just don't think we know yet. But I do think over time, that cost will be passed on. And once again, it's going to be passed on either through less labor demand or increase in prices. But I'll tell you what we are seeing is that companies that are actually more levered, that have to defend their margins and must pass those price through, they're actually doing so. And companies that have a little more wiggle room, they're trying to buy share, and they're allowing kind of prices to remain fixed here. So over time, I think that'll converge, but that's an interesting development early on, I think.
Well, if you don't know and the Fed doesn't know, how much optimism are they going to have basically in September when the meeting rolls around to cut rates?
Well, because I think the focus will be on the labor side, and rightfully so. So you are seeing a cooling around labor. And then ultimately, the tariff inflationary impact is a quote unquote one-time impact, right? So it's not persistent as far as the change is concerned. Yes, that inflation's in the system, but doesn't obviously continue to rise necessarily. So I think the focus will be on labor and the economy more so than the tariffing effect.
So, Greg, I wonder how well received
that
might be for the rest of the market. If we can start talking about what this could mean for bond yields, if you begin to get a sense, if the broader market begins to get a sense that this Fed will prioritize one side of the dual mandate over the other and begin reducing interest rates with headline inflation maybe back into the threes, Does that unlock higher yields at the long end?
Well, I think it's a curve steeper no matter how you look at it, right? So, you're seeing that play out. I think there's more room for that to go, of course. But yeah, I mean, there's a variety of different reasons why I think back-end yields will remain stickier relative to the front end. Risk/term premium is one measure of that. And that's why I think what's kind of lost in here is that all this focus on the Fed reducing interest rates in order to get mortgage rates down and help the consumer, so on and so forth, that's going to be offset by the term premium effect, right? So you're not going to see the same pass-through into mortgage rates, as an example. And I think it's going to be somewhat of a self-limiting strategy.
We saw an episode of this drama just last year. Greg, you remember that? They cut interest rates by 100 basis points. Of course, that anchors the front end. Long end sold off. Do you see reasons for a repeat then? And what was the lesson from that experience? Is it the same thing all over again?
Yes, I do think, it's the same thing. What's interesting is that I thought the administration was very much attuned to that as well, but I think they've kind of shifted the narrative along the way. But yes, I do think that the bond market is going to reflect these additional risk factors, namely the debt and deficit, mainly the kind of the pushback around foreign, demand. So, all else equal, I don't think you're going to have the same response to the belly of the curve, the back end of the curve, to the front end that you ordinarily would.
Now, Greg, does that lead to tighter financial conditions overall? What would that mean for broader financial conditions?
Well, it should, all else equal, but financial conditions are just incredibly easy right now, which is why it's often hard to make the argument that policy is currently restrictive, right? If you just look at, financial conditions. But I think over time, just that beta effect, or less of a beta effect, where the 2-year will, let's say, rally 100 basis points and the 10-year will only rally 50, just as an example, I think that'll have an effect over time. And that does hurt consumers over time, which is why it's just incredibly important to show some path around the fiscal side, because I think what the bond market's looking for what is a greater focus on the fiscal. Now, somewhat ironically, the tariff income that's coming in, bond investors are looking at that and they say, wow, this isn't so terrible. But the question is, will that remain in place or not?
Greg, base the question. Just play this out. Let's just think about things. Let's say the courts come out and say these tariffs can't go forward. They vote against them. Let's go with that. Greg, what would that mean for fixed income? What would that mean for bonds? Would bonds rally or would they sell off?
Well, I think it would just enhance the curve steeper. I think what you would see is just additional kind of movement or lack of movement, I guess, in the front and back end. That just puts more pressure on the fiscal story and forces the government in ways to how to kind of cut spending. And I think we all know how difficult that is. So, yeah, I think that's bad for the bond market, just because those revenues are desperately needed.
Greg Peters of PGIM Fixed Income. Greg, appreciate the outlook. Greg Peters there, looking ahead to inflation and looking ahead to what might happen if the courts strike down these tariffs.
Well, two things I'd say. It would definitely hurt their talking points, because a lot of the times when they talk about the offset to the one big, beautiful bill is the fact that the CBO does not dynamic score with the tariff money coming in. So that's their first issue. The second, though, I would say is that we might get a knee-jerk market reaction, but then the market would realize the tariffs can stay. They're just going to have to use a different path forward. No more IEEPA. They're going to have to use 232, 301. There are other ways to enact a tariff agenda without using this broad sweeping IEEPA plan.
It gets messier, potentially more volatile. Nothing volatile about this morning so far. And that might change in about 20 minutes when inflation data drops. Let's give you an update on stories elsewhere so far this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. Chinese authorities are discouraging local companies from using NVIDIA's H20 processor, especially for government-related purposes. Sources telling us here at Bloomberg that Chinese officials are worried the chips could have location tracking capabilities and remote shutdown capabilities. NVIDIA denies that. Sticking with China, Chinese real estate giant Evergrande Group will be delisted from Hong Kong's stock exchange. The move marks the end of an era, with Evergrande at one point being the country's largest developer by sales, but its downfall symbolizing China's sweeping real estate crisis. Shares will be removed on August 25th. And for the Swifties, Taylor Swift has announced her 12th studio album. Swift revealed the new album titled The Life of a Showgirl during a cameo on the New Heights podcast hosted by her boyfriend, Travis Kelce, and his brother, Jason. There are no details on a release date for the album. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Thank you very much. Up next, the morning calls, plus Sucharita Kodali of Forrester with a read on the US consumer ahead of a key inflation print. From New York City, this is Bloomberg.
Number this morning, what is most important is not only what's happening on the good side, where most of the worries are about inflation, but the fact that ISM services paid for the last several months have started to move higher. Service sector inflation could also be a very important part of the number that comes out here at 8:30.
Torsten Stark of Apollo, just absolutely fantastic. Joining us on the programme a little bit earlier, anticipating the data point we're all looking forward to. 15 minutes away, inflation data in America. Equities trading water into it, unchanged on the S&P, likewise on the Nasdaq 100. That's the price action. Here are some morning calls. First up, Baird, upgrading Starbucks to outperform, citing confidence in its turnaround strategy. Your second call from JP Morgan, raising its price target on Micron to 185, emphasizing strength in pricing. And your third and final call from Loop Capital, upgrading 5 below to buy, highlighting recent merchandise and pricing changes. That stock is up by 1.6%. Let's stick with the consumer. CPI data just minutes away. Sucharita Kodali covers retail for Forrester and joins us now for more. Sucharita, welcome to the program. Welcome back, I should say. Let's look ahead to this data point in 14 minutes' time. What's the pass-through that you've gauged so far from the tariffs, which are now fixed in many cases, to the consumer?
Well, we haven't seen the tariff impact significantly on consumer spend yet. The consumer spend levels to date seem to be relatively resilient, although the story is varied depending on the kinds of retailers that you're looking at. It does appear that a lot of shoppers are trading down to value merchants, whether it is the dollar channel or it is the mass merchant channel through stores like Walmart or even off-price stores like a TJX. So that's certainly what we seem to be seeing is more of the psychological impact of what could be tighter wallets that shoppers need to have versus necessarily that they're seeing any inflationary impact of tariff prices being passed on to shoppers.
Are you gauging a much more limited price tolerance this time around compared to, say, the inflation scare coming out of the pandemic?
Well, I think that there's a lot that remains to be seen. It depends on which categories that are going to be facing those higher numbers, where we've seen a number of inflationary issues where we saw them following the pandemic was in a lot of very prominent shopper-facing items, primarily whether it was gas prices or it was grocery goods, things that you purchase on a regular basis. And when those are higher, there's sticker shock. What we've seen is a number of those goods be more normalized now. We're actually seeing deflation in categories like apparel, which also are extremely consumer facing. And a lot of the inflation numbers now are in utilities, they are in shelter, in home, and it's in categories that are not necessarily that closely tied to the consumer goods that we saw being the biggest issues post-pandemic.
Sucharita, how long will it take to see the entire impact on the supply chain of the tariff rates?
Well, it's still it's still very early to tell because there have already been so many preemptive actions that a number of suppliers and merchants and retailers have done. They've done everything from drastic moves like trying to reconfigure their manufacturing bases to they've front-loaded a lot of inventory earlier in the year. They may be housing some of that in bonded warehouses, or they're managing some of that merchandise in other ways. So they've offset some of the potential impact in that way. I expect by Q4 or even in early 2026, if these tariffs persist, though that's when we'll see more of the impact. But you also have to remember that a lot of this, the tariffs were a threat to try to get negotiating leverage with these other trading partners of the United States. If these other countries come to the table, we may see a lot of these tariff rulings actually being eliminated. So there's still very much, it's a work in progress and TBD what ultimately happens in 2026.
Fluid situation for sure on the trade front. When it comes to front loading, how much is left in inventory for some of those companies that went out and decided to do this?
Well, from the conversations that I've had with merchants, there is enough to take them through Q3 for certain, and even probably for some of their key goods into Q4. You have to remember that in a number of categories, they're highly seasonal. And for some of their best sellers, they have either negotiated deals that can ensure that those prices are going to go, that will hopefully they will remain stable and they'll have enough inventory to not run out of stock like we saw issues during the pandemic and following the pandemic. So I think that what we'll ultimately see is hopefully no shortages of major demand goods in Q4. But kind of that's certainly a blanket statement, and there's no doubt that there will be here and there retailers and likely certain product categories that we may see some shortages, and that may also create some panic buying for some shoppers in some categories in November.
Sucharita, appreciate your time. Sucharita Katali there of Forrester. Your question, I think, is a really important one. Tariff management has had a dampening effect on pass-through over the past few months. That could change. This is a process that's going to take time. And this is something that Andrew Honhorst of Citi has pointed out, who believes the Federal Reserve is still going to cut interest rates, by the way, but believes the goods inflation will firm up through fall.
And if your inventory is run out, what does that mean later on in the year, especially as we get closer to the holidays and Christmas? That may become politically challenging for this administration.
Mike McKee is going to join us now with a preview. Mike, welcome back to the programme, sir. The data 8 minutes away. What are you looking for in just a moment?
Well, we're looking for a couple of things. Obviously, we are looking to see what tariff-influenced price changes we get. We'll look at apparel, electronics, things that are imported that might already have been tariffed, especially things made with steel like washing machines. But we're also going to be looking, and Torsten Slock brought this up with you guys, at services prices. There's a feeling that a decline we've seen in airfares is going to reverse, and the same will be true with lodging away from home. And motor vehicle insurance, that could push up the CPI faster than it had been expected to rise. And some people are saying, even some economists are saying in our survey, even a 0.4 rise in the core, which would put us at 3.1% year over year. And that would be something that would certainly get the Fed's attention.
And Mike, in some ways, is this data getting harder to forecast?
It is because of the timing of the tariffs. We know the president has threatened tariffs for a long time. The reciprocal tariffs have just gone on, but we don't know what the pharmaceutical tariffs, the semiconductor tariffs, all the other ones that are hanging out there, we don't know when they would be imposed. And so it's going to be a continuing process, and that'll be part of the debate at the Fed because, of course, you have someone like Chris Waller saying they're a one-off. And yes, in each category they're a one-off, but if the categories keep getting pushed out, then we'll continuously see some inflation effects as the months go by.
And Mike, I'd love your thoughts on another issue. You mentioned Torsten Slok. Torsten also talked about the BLS and the changes that he's anticipated, pointed out that ultimately they produce the data that governs both sides of the dual mandate at the Federal Reserve. What's your reaction been to developments not just in the last week, but particularly the last 12 hours?
Well, I think that the new BLS commissioner designate, E.J. Antoni, is going to be a quite controversial pick. He will probably get confirmed because Republicans control the Senate, but Democrats will ask some interesting questions. He's tweeted a lot of his criticisms of the BLS, calling them a random number generator from the magical world of make-believe. He's accused them of having a negative bias towards the administration, and he's questioned all of their methodology. It would take a lot to change that methodology, but maybe they're just getting started on that, or maybe this is an effort to put somebody in there who will challenge bad numbers and try to get the public to believe that the numbers are wrong rather than the tariffs and other Trump policies are having an effect.
Michael McKee, thank you, sir. Looking forward to you breaking down the inflation numbers in about 5 minutes' time. Just going to put my hands up and concede that I have also on occasion called it a random number generator, and I'm not alone.
On more than one occasion, you've called it a random number generator. When I saw that and looking back at some of his old tweets, I thought maybe he's watching surveillance and taking that cue from Jonathan. But that gets to the crux of the issue the president has. Why are these revisions, not just this year, also more than 800,000 revisions last year? This is a concern for a lot of people in the market. They want better data. The issue with this individual is that even in conservative economic circles, he is a controversial pick, as Mike was just saying.
I should say, we often say that because it's prone to large revisions and not because we're accusing the BLS of any particular political bias.
Yeah.
OK, got that out of the way with. Up next, the CPI report. We'll catch up with Tiffany Wilding of PIMCO, David Kelly of JP Morgan Asset Management. The data, 5 minutes away. Inflation data 25 seconds away. Your scores going into CPI shaping up as follows on the S&P 500, almost totally unchanged. On the Nasdaq 100, firmer by 0.1%. Some outperformance on the Russell. The small caps up by 0.4. In the bond market, 2-year, 10-year, 30-year bond yield shaping up as follows, unchanged as well. This market has been a snooze all morning anticipating this number. The 10-year at 428.49, the 2-year at 377. With your economic data, here's Mike McKee. Good morning, Mike.
Good morning, John. Well, let's see what we've got here. A rise in the CPI on a month-over-month basis, bang on with consensus up 0.2%. The core is up 0.3%. We'll check that out in terms of 3 digits. On a year-over-year basis, that takes us to 2.7% for headline and to 3.1% for the core on a year-over-year basis. That's more than thought, so this must have been a very high 0.3%. Trying to take a look at some of what we're seeing in terms of the actual changes in the categories, and we'll look here to see some of the ones that come up when we look at tariffs. The tariffs for, I'm looking for apparel up just 0.1%, so not a big deal there. But used cars up 0.5%. New cars were up were flat basically on the month. So apparently, auto companies absorbing some of the tariffs there. In terms of services, rent of primary residence up 0.3, owner's equivalent rent up 0.3 for the third month in a row. Medical care services up 0.8. Motor vehicle insurance only up 0.1. There was a thought that might be higher, but look at airline fares. After being down for 3 months in a row, they're up by 4% on the month. So that's one of the reasons that we are seeing that core rate go up. I'll look at more numbers. Let me just note that food prices were flat on the month. And you guys can check the markets and come back and I'll give you some more of these tariff numbers.
Hey, Mike, thank you. Give me some time to break down the details. Just the early reaction. The first move, not always the right move, but this is what it looks like. Equity futures positive now by 0.4%, trading on the fact that we don't have an upside surprise. That's the good news this morning. On the Nasdaq, higher by 0.5. Then outperformance on the Russell continues. In the bond market, unlocking some lower yields at the front end of the curve, down 5 basis points at 371.84. Not the kind of number at least for the first look, that derails the Federal Reserve's efforts to cut interest rates maybe as soon as September. With those moves at the front end of the curve, you look at the FX market, euro-dollar, euro stronger, dollar weaker, euro-dollar back to about 116.36.
Bang in line. So there's no real drama, Jonathan, as you would say, when it comes to this number. But we should note that for the first time in 6 months, the monthly core CPI reading failed to undershoot the median forecast. So you do have this question on whether or not does this mean this is an inflection point going forward that potentially we could see a little bit more of hotter prints.
Mike McKee still with us. That number in line for month-over-month CPI headline, stripping out food and energy, month-over-month in line as well at 0.3 versus a 0.3% estimate. Mike, you've had a second look at the numbers. What do you see now?
Well, gasoline played a big role in holding down the overall number because it was down by 2.2%. It has been up a little bit, but the seasonal adjustment for this time of year takes some of that away. As I mentioned, food prices were flat on the month and used vehicles up 0.5%. So you get a little bit of the tariff impact, a little bit left out of it, and apparel prices up just 0.1% on the month. Still looking to get to the electronics portion of this, which we should see some increases as people buy more stuff from Asia. But I'll get back to you on that one in a second.
Mike, thank you, sir. Tiffany Wildiger-Pimpos is going to join us in the meantime. Tiffany, welcome to the programme. Is the door still open for a rate cut in September?
Yeah, I mean, I think the CPI was completely in line with expectations. How we've characterized the sort of tariff-related pass-through, the evidence is that it's happening, but it's happening slower than I think many people expected, going back to April when the more dramatic tariff announcements were first implemented or announced. It's happening more slowly, and across industries, it's more uneven. So I think the broader story here that we're still seeing is that it's very concentrated within goods. It's happening slowly, and outside of that, inflationary pressures look very manageable. So I think for a Federal Reserve, that is a very good sign. In addition to that, there's, I would argue, better news in terms of the so-called second round effects with higher prices leading to higher wages and getting more into the inflationary process. We've actually seen inflation expectations from various surveys start to moderate. The University of Michigan survey, which we'll get later this week, the longer-term inflation expectation index for that one had accelerated more, but it's moderated more recently. So I think all of this points to, a central bank that can get on with normalizing policy rates back to neutral.
Tiffany, something we've been exploring throughout the whole of this morning, and to be fair, over the last several months, is whether the tariff story is delayed by the fact that we've seen fantastic inventory management from some of the retailers at the moment, and that maybe we haven't seen the full extent of this. When would you get comfortable that we've seen the limits of it all?
Yeah, I mean, I think we expect a good portion of the pass through over the next several months. But I think the bottom line is that companies have room. It appears that companies have room as a result of still high margins coming out of the pandemic. Companies have room to sort of more slowly pass this on to consumers. And so what that means is that, goods inflation could be a little bit more persistent over time, but you're not necessarily going to have that bigger surge that many people expected as you get that faster price level adjustment this year. So I think for the Fed, I think that's all good news. The other thing that we see when we look at, a range of data, is that companies so far are absorbing, we think, the lion's share of the additional costs of tariffs. And as I mentioned, they can do it. Their margins were elevated post-pandemic. That has remained the case. And so they do have room here. At least the largest companies have room to sort of manage this process. And we think that's what they're doing. The other thing is the tax legislation that was recently passed, the One Big Beautiful Bill, that is, reducing the effective tax rates for a lot of companies, especially those companies that are capital intensive. They invest a lot. They're getting, upfront expensing tax credits, and that will help offset the impact of the tariffs as well. A lot of those tax credits were retroactive for 2025. So all of that just means that companies do have a little bit of flexibility here and can manage the pass-through rate.
So, Tiffany, are you basically saying that because of the One Big Beautiful Bill, companies are able to eat more of the higher tariffs from this administration?
Yeah, I mean, I certainly think that that's the case. Now what we estimate in terms of the tax savings in aggregate for 2025 is around 150 billion. The tariff tax collections that are happening, we annualize at about 350 billion. So the tax legislation is not completely offsetting the additional taxes paid by tariffs, but it certainly is in mitigating some of it. And so that's why, we've argued you'll still see, we think, some pass through of higher tariffs onto prices. You'll get some price adjustment. But we think the risk here is just that it takes longer than many people are expecting. The inflationary effects of this in the back half of this year are somewhat less. And again, that just sets the Federal Reserve up to continues to restart its cutting cycle to get back ultimately to neutral policy rates.
Tiffany Wilding, PIMCO. Tiffany, thank you. It's got to catch up and get your reaction to the inflation report. The numbers just dropping about 8 minutes ago, in line with expectations. Headline month-over-month CPI coming in at 0.2%. The core number, stripping out food and energy, coming in at 0.3, leaving the door open for a rate reduction at the Federal Reserve. Weighing on yields at the front end of the curve, yields down, unlocking higher equity markets this morning as well, up by 0.5% on the S&P 500. That follows the first look at this data. Let's get a second and third look at this data with Mike and McKee. Mike, I know you've got more.
Yeah, John, we're looking to see what the impact of tariffs is, and it's very mixed. We are seeing tariff impacts in certain areas, but in some of the areas you'd think would be showing some more movement, they are not. One thing that stands out is tomatoes, up 3.3%. Remember, the president put a tariff on Mexican imported tomatoes. Coffee prices, and we've got a tariff on Brazil, up 2.3%. From Asia, household furnishings are up 0.7%, but appliances down 2.2%, including washing machines down 1.8%. They had moved up a lot in the last couple of reports. Video and audio equipment up 0.8%, however, while toys are only up 0.2%. So you get some that are up, some that are not. There are obviously some pass-throughs from overall tariffs, but we're not seeing a major increase in every category, at least not yet.
Mike, do you think the head of the BLS can get a job back now? I'm joking. Don't answer that. Michael, thank you. Michael McKee, thank you very much. David Kelly of JP Morgan Asset Management with us around the table. David, good morning.
Morning.
Not going to ask you that question. Just want to ask you the following. When will you be comfortable that we've seen the limits of this? How many more months of data do you need?
Oh, we're just getting started. I mean, what we saw today was plenty of inflation without tariff effects. We didn't have a big increase in new car prices. We didn't have a big increase in apparel prices. But let's look at where we did see an increase. Airline fares have come down a lot because the airline industry was very weak. But if you look at the recent data on people going through TSA checkpoints, it's firmed up. And so domestic airline travel is now back on a positive year-over-year basis. We've got a lot of fiscal stimulus going to kick into the economy early next year. But also in the tariffs, even in July, we saw a lot of money collected, but it still equates to about a tariff rate of about 8%. We think this whole tariff rate is going to go up to about 14.5% measured by that later. So we've got most of this tariff increase still ahead of us in terms of just affecting the data. And then, people say, oh, the retailer is going to eat it. No, they're not. They just wrote the check. So of course it looks like they're eating it. Walmart writes a check, but eventually they're going to pass it on. And yes, they've got good margins, but how do they manage to sustain these margins? Because they're great at figuring out how to stiff consumers, and that's what they'll do. And so this thing will feed through. It's just a matter of a number of months. And inflation's going up, but it's going up very steadily, and it will be above, we think, about 3.5% in CPI by the end of the year.
You've made two important points here. One is that you believe that goods prices will continue to firm through the year ahead, and that you're not going to see an offset from services. Is that right?
That's correct, because what's going to happen is the economy is going to be slower in the second half of this year as this goods inflation feeds through. But the big kicker here that people are not talking about is a huge rush of income tax refunds that's going to kick in at the start of next year. It's going to be like an extra stimulus check. And that, we've seen what happens. You give him as a cookie, he's going to want a glass of milk. You give an American consumer a stimulus check, they will spend it. And you're going to have a surge of spending in the first half of next year with limited supply because of all these tariff and supply chain disruptions. You are going to get a second round of inflation, which is going to sustain inflation well above 3%, which begs the question of, why again is the Fed cutting?
Well, that was
if inflation's heading the wrong way slowly.
That was my next question to you. What does the Fed do with this kind of data?
They should stay on hold. I think there's very little argument that in favor of the Fed cutting rates. Rates are not abnormally high. I don't know why they think 3% is a neutral rate in the long run. It doesn't equate to history before the pandemic. I think something 4.5% is more of a neutral rate anyway. But there is no urgency about cutting rates. Now, I think they will cut rates for political reasons, which is very unfortunate, but I don't think they should based on these data.
As you're talking, traders are actually adding to bets of September Fed rate cut because this basically came in line when it comes to inflation. But why for political reasons when actually we saw a trend, 3 months of not so great unemployment numbers?
Well, yeah, but if you look at the overall mosaic of employment, it's still growing. And remember, we've got a labor supply problem too. And one of the things that Jay Powell pointed out is he's not looking at payroll growth. He's looking at the unemployment rate. If we've got fewer jobs being created, but we've got fewer workers, then you've still got a certain amount of inflationary pressure. You just said that the growth potential of the economy has gone down. Well, they can't do anything about that. So if you're not, this economy is not going to spark a huge surge in unemployment. And I think the basic point is by the end of the year, we think maybe 4.5% unemployment. We think over 3% inflation. They're missing their inflation target by more than unemployment. Therefore, they shouldn't be cutting.
Just tallying this up, though, but you believe they will be cutting. So you've got a Federal Reserve cutting interest rates at a time when inflation is picking up. And the key phrase you used was second-round effects. You don't believe this is a one-off. You're actually going to see second-round effects in the first half of 26. Yeah. What's your market view on top of that?
Well, so I think the market view is not too bad because I think, for political reasons, I think unfortunately the Fed will cut twice this year, maybe 3 times next year. They'll get going and cutting. It's not going to really change the economy that much. But if you bring bring short rates down enough, it does push extra liquidity into the equity market. And so you could just maintain these bubbly asset markets. I mean, what we've got is a tortoise of an economy and a hare of a market. And we're just giving more sugar to the hare.
That's the stock story. What about the fixed income story for bonds? Because we've had guest after guest come on this programme and say, get ready for a steeper yield curve. They go aggressive. At the front end, you're going to see yields lower. At the long end, you're going to see a questionable development.
Well, it's again, it's hard for a tortoise-like economy to generate a really steep yield curve. So, but I think you could see rates move up a bit. I wouldn't be long duration here because I don't think this economy is going to go into recession. I think by the time the tariffs really hit, we're going to be on the verge of fiscal stimulus because of this income tax refund thing, and that will keep this economy moving forward. And if the economy is moving forward, you've got inflation printing at 3, you shouldn't really have a long bond lower than 4.2.
What do you think inflation is going to peak at in the next 12 months?
I think CPI is going to peak at about 3.5% and then hang there between 3.5% through about June of next year. And then finally it's going to come down again because this is sugar. These income tax refunds, it's a sugar rush. It's not protein. It will wear off. And then by the end of next year, then I think the economy is finally cooling again. Unless, of course, you get some more stimulus. And that's really the problem because if the Fed keeps on cutting rates whenever the other side of Washington asks them to, then it enables more and more rounds of fiscal stimulus to always keep this economy a little bit too hot. So it's not it's called inflammation. Doctors don't like it.
David, it's good to hear from you. I'm not sure if markets will like we've got to say this morning either. David Kelly there of JP Morgan Asset Management. Equities are firmer by 0.5, call it 0.6% on the S&P, and bond yields at the front end of the curve initially reacting to this data lower. They stay lower. We're down by 5 basis points on a 2-year at 3.72. The view in this market is that it's not an upside surprise and we can carry on as normal because the Fed's going to cut come September.
And they're adding to more bets that September is not just on the table. September almost feels like, for some, a done deal. But when David talks, I'm reminded of what Mohamed El-Arian has said as well, that this market inflation picture is likely going to stay around 3%. And maybe the Fed actually, Mohamed's argument was, needs to start targeting a 3% inflation rate, not 2%.
Outperformance on the small caps this morning. The Russell up by 1.25%. With an update on stories elsewhere. With your Bloomberg Brief, here's Yahara. Hey, Yahara.
Hi, John. We start by recapping the latest economic data. Underlying U.S. inflation accelerated in July to the fastest pace since January amid a pickup in services prices. Core CPI rose 0.3% from June, which came in line with expectations and rose 3.1% compared to a year ago, above the 3% that economists expected. Meanwhile, President Trump has named E.J. Antony to lead the Bureau of Labor Statistics after firing the previous chief following weak July payrolls data. Antony is chief economist of the conservative Heritage Foundation and has been vocal about his concerns with BLS jobs data and revisions. The position is subject to Senate confirmation. And Elon Musk accused Apple of favoring OpenAI, saying the company makes it impossible for anyone else to reach the top of the App Store charts. Musk said Apple's behavior is an antitrust violation and stated that XAI will take immediate legal action. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next, we'll set you up for the day ahead. Plus, Ira Jersey of Bloomberg Intelligence as traders add to bets for a September rate cut following this morning's CPI data from New York City. You're watching Bloomberg TV.
CPI was completely in line with expectations. How we've characterized the sort of tariff-related pass-through, the evidence is that it's happening, but it's happening slower than I think many people expected. The broader story here that we're still seeing is that it's very concentrated within goods. It's happening slowly, and outside of that, inflationary pressures look very manageable. So I think for a Federal Reserve, that is a very good sign.
That was Tiffany Wilding of PIMCO. Inflation data out just 21 minutes ago, and equities like what they don't see. They like what they don't see, and what we didn't see was an upside surprise. Equity futures positive by 0.6%. That data unlocking this move in the bond market. At the front end of the curve, yields lower on a 2-year bond yield in America right now. The 2-year Treasury yield at the moment down about 4 or 5 basis points to 3.72. With less than 1 hour to go until the opening bell, let's get you some morning movers. Here's Yahara. Hey, Yahara.
Hi, John. The bar was high for one of the year's hottest IPOs, Circle Internet, and it appears it has cleared it, with shares up 11.5% in the pre-market. That's because investors are focusing on its stronger than expected revenue and shrugging off a bigger than expected loss in the second quarter. We'll see if these gains hold given that weak spot and given, as I said, that expectations are sky high, with this stock up 400% from its $31 IPO price. What a jump. Next up, we move on to another stock also rising, soaring 16% on holdings after delivering a surprisingly strong second quarter and lifting its outlook at a time when these footwear makers are under pressure due to tariffs, because like many others, On produces most of its shoes overseas in places like Vietnam, but it is undeterred, with the CEO saying that consumer energy remains high for its shoes. And we end on Tapestry. Shares are up 1.8%. This is a company that reports on Thursday, and ahead of that, Dana Telsey is raising her price target to $125. What Dana is saying that results will be powered by its Coach handbag unit, which she says is resonating well with younger shoppers, which makes sense because a Coach bag will run you about $300 to $500, not thousands of dollars the way those luxury handbags are. John?
Yahara, appreciate it. Thank you very much. I wouldn't know. You might know.
Coach is actually cool again.
That's accessible.
It's kind of on trend.
Entry-level luxury?
Yes, definitely.
When did it stop being cool?
It was definitely cool when I was in high school, like, in the mid-2000s. But then it became kind of uncool, and now it's, what's old is new again.
There you go. Helpful stuff. Okay, let's get back to the market and the inflation data. Joining us now is Ira Jersey of Bloomberg Intelligence. Ira, welcome to the program, sir. Your reaction to that data from 23 minutes ago?
Yeah, so more or less as expected, but there was certainly a lot of investors that we had spoken to that were worried that we were going to get a slightly hot inflation print, particularly on the core side of things. So more like a 0.4 instead of a rounded down 0.3 as we received. So I think that's one of the reasons why you have this a little bit of a relief rally in the front end of the yield curve.
We've had two different reactions so far this morning, Ira. One reaction is, this is good news, leaves the door open, the Fed's going to cut in September. Another reaction, David Kelly at JP Morgan said, get ready for firmer goods inflation in the months ahead. This ain't over. This process will continue. What's your reaction, and what would you put more weight on this morning?
Well, I think that the goods inflation story is one that will probably linger for at least the rest of the year, because we don't know exactly who's going to pass through the inflation pressures to the consumer, or will that wind up being more of a margins and producer price story. And I think that that's something that we're going to find out tomorrow, right? Will we see higher goods input prices and intermediate goods in the PPI tomorrow? So again, this is not something that's going to go away in terms of core goods. But in terms of the Fed, I think that there is going to be a little relief, and the Federal Reserve could certainly shift toward thinking about cutting because of the softer jobs data that we got a week and a half ago. So I do think that this leaves the door open. Keep in mind, though, we do get another set of inflation data prior to the next meeting. So we have another CPI, another PPI, plus the July PCE deflator. So we still have a lot of data to get through before we are certain what the Fed's going to do in September.
Ira, thanks for the reaction. I know you've got a busy morning ahead of you. Ira Jersey there of Bloomberg Intelligence. Busy morning ahead of us tomorrow. Here's the lineup. Oksana Aronoff of JP Morgan Asset Management, Libby Cantrell of PIMCO, Subhadra Ishapra of SocGen, and then the Treasury Secretary, Scott Bessent.
What's so exciting with the Treasury Secretary coming on is he is leading the search, Jonathan, for who could be the next Fed chair.
Looking forward to that conversation tomorrow morning. From New York City, this was Bloomberg Surveillance.
Day 5 at the Cincinnati Open. World number 1 Aryna Sabalenka had to battle the heat and Emma Raducanu on her way to the 4th round. The defending champion closing it out in the deciding set breaker after over 3 hours on court. 7 aces and 51 winners for Sabalenka in the victory. And don't forget, you can watch all the action live daily on Tennis Channel.
I think that inflation data yesterday answered a few questions over the balance between growth and inflation, right? Which is, of course, the perennial problem that the Fed is trying to solve. And so, yeah, yesterday's data really showed that there are some parts of the inflation picture that can be explained away by seasonal factors, or perhaps not something to be worried about. And, you know, especially given the combination of that and the more, the softer picture for the labor market in the U.S., I think the balance really tips toward rate cuts, which, as you can see from the price action overnight, markets are really happy about.
Yeah, I mean, thinking about what could go wrong between now and September, though, I mean, we do have another jobs report to get before then as well. Where are the potential, I suppose, disruptors to that current narrative?
Yeah, I mean, I think what we might see as a potential disruptor, Stephen, is any change in that labor market data, right? I think part of the uncertainty over that is the big revisions that we've seen over the last couple of releases. And so there's a question over whether, you know, the next data point, is that something that traders can rely on as or an indicator of the overall path of the U.S. labor market, or is that going to be subject to change? And so it's just a question of, you know, how clear of a picture can the data really give us in terms of the overall state of the labor market, and if there are any surprises, for instance, revisions to the next set of data that could change the current trajectory, would be something for traders to keep an eye on.
We're going to be speaking to Scott Bessent, the team stateside, in the next few hours. Later today, we'll be broadcasting that, of course, the Treasury Secretary of the US. And he has been pushing, or at least trying to open the door to a jumbo cut from the Fed, 50 basis points. How are the markets reacting to this? How should traders and investors be thinking about the Treasury Secretary pushing for a jumbo cut?
Well, Tom, in less unorthodox times, a 50 basis point rate cut, especially from the Federal Reserve, would be considered alarming. And that would be something in the past that would cause investors to think, well, hang on, is there something in the data that we're not necessarily seeing that the Federal Reserve is particularly worried about? But, we're not necessarily in orthodox times at the moment. And so, you do have this administration that is increasingly pressing the Federal Reserve to cut rates more. And there is a mix of data, at least on the inflation side, as well as on the labor market side, that is opening the path to such a move. I think that's not something that markets are necessarily pricing in at the moment. They are still looking for a more measured 25 basis point rate cut. But if we do see that, that's something that could potentially create, at least in the short term, a large amount of volatility, just given that it is not within the base case of market expectations at the moment.
Another question, though, over the data that we've been mulling over, these comments from E.J. Anthony, the man nominated to take over the Bureau of Labour Statistics. The jobs report should perhaps go to a quarterly report rather than monthly while they sort out issues with the data. I mean, how would a move like that go down with markets?
Well, Stephen, markets love certainty, right? And the more data that they can pin that certainty on, the more, relaxed they are about things. And so the fact that this suggestion has come up, it's probably not going to go down initially with investors, because they do like the frequency of that data. I mean, in New York, there are watch parties sometimes that happen when there are labor market figures that are coming out that are quite important. And so, yeah, I think at first blush, that's probably not going to go down well with markets, but it just depends on, whether this even comes to fruition and how they're going to carry it out.
What does a jobs report watch party look like?
It's a lot of alcohol involved.
Oh, it is.
Stephen.
It is like you'd expect an Oscars watch party.
Exactly. Yes, but for Wall Street.
Yeah, and very early in the morning. So that could be, that's sort of interesting.
Clearly, Christina Kino has been an attendee.
Clearly she gets the invites that we don't, Tom. Is I think what we've.
This is what we're missing.
In a world of seismic change, will your business shape the future or be?
And then the third is the institution itself, which I think is what President Trump has been focused on quite a bit too.
After you do this process, how many names are you going to give to the president, and when does he start those in-person interviews?
Yeah, we don't have a timeline. By putting Stephen Myron in, that gives us more time. And again, I want to cast a wide net. The president's very open-minded. Before he chose Jay Powell, Janet Yellen was interviewed. John Taylor was interviewed. Two of them couldn't be more different. So, they were under consideration.
I give you credit for coming up with a really credible list to replace the Federal Reserve Chair, Jay Powell. Without a doubt, I think most people that come on this programme agree with that. What I want to talk about is the BLS now, because there's some controversy around this pick. I'm sure you've heard some of the concerns. E.J. Anthony had said the following earlier this week before getting the pick from the president. Until this issue with payrolls is corrected, he said, quote, the BLS should suspend issuing the monthly jobs report, but keep publishing the more accurate, though less timely, quarterly data. We'd love your thoughts on this. Is that something you'd support?
Not at all. And look, what somebody says when they're a private citizen is very, very different. I called for a shadow Fed chair, and now that I'm in the seat, I don't think we need to do that. And I was there when EJ was interviewed, and he is incredibly qualified. And I think the most important thing here is that we get back to the integrity of the numbers, because it just became okay, just like so many things in our government, for it to get sloppy. And EJ is precise. He has a doctorate in economics. I think President Trump put a lot of thought into this. He was very thorough in his questioning of him. So what we want is good data, because you can't make good decisions without good data. As I just said, it's very likely that the Fed would have been doing something else if, in June, in July, if they had had this data.
Well, let's talk about the data we've got and the process we have and how we might improve that process. As you know, that data is prone to big revisions. In your career on Wall Street, we've all been dealing with this for a long, long time. Because of the process and the lag time in the responses, it is constantly reviewed month on month as you get more responses from corporate America. How can we improve that process so this data is less prone to these big revisions?
Well, I've been in government now for 7 months, and I can tell you that if we take the IRS, which I'm now the head of, they've been working on a tech upgrade since 1990. We brought in a young person to fix that. The tech upgrade has been underway for longer than he is old. So he wasn't born when the tech upgrade started. So, I just think like this idea that we're accepting this mediocrity in government, why don't we bring things into the 21st century? Why don't we bring it into the digital age? Because, I don't know about political bias one way or the other, but what I can tell you is that the sample response size kept getting smaller and smaller, and then they filled in the cells. And anytime you get judgment versus data, then things become qualitative and not quantitative. And I think EJ is going to do a great job of bringing back quantitative standards. I think these attacks in the press, I think are all wrong of him.
It's not in the press. It's even within conservative economic circles that don't think that he is credible to run the commission. Is the Trump administration open to putting more resources then to BLS, maybe lifting a hiring freeze?
Well, Anne-Marie, that's more of a Democratic idea that, we need more. It's always money. It's always money. It's, whether it's New York City schools, Chicago schools, DC schools, you get terrible outcomes. I think that he's going to sit back, look at the process, and how can we use technology to do this better? I got to Treasury, and it was shocking. We process 1.5 billion payments a year, and 500 million of them, 1/3 of them, did not have what's known as a TAS, Treasury accounting symbol on them. And people were just hitting send, and it wasn't a gigantic leap just to try to get people to do their jobs.
This has big implications for how people view credible economic data, but also the markets as well. So let's talk about financial markets and the bond market. You've always been a 10-year man. The spread between the 2-year and the 10-year, I think, has been really stable over the last several months. Where we've started to see some leakages between 10s out to 30s. That 30-year bond, as the Treasury Secretary, I remember you referring to yourself as the nation's top bond salesman.
Yep.
What's the usefulness of issuing a 30-year bond when it feels like at the moment we're outsourcing borrowing costs to what happens in Japan, what might happen in the UK, what happens in Europe? What's the value of issuing that?
That's a great question, Jonathan. And look, we are committed to keeping inflation expectations low, and this is a global phenomenon, whether it's the 10 or the 30. The U.S. 10-year is one of the few 10 years where the yield is down on the year. So that tells me that there's credibility from Treasury, credibility from Fed, that the inflation expectations are well anchored, but there's definitely leakage from the Japanese have an inflation problem. I've spoken to Governor Ueda. My opinion, not his, they're behind the curve, so they're going to be hiking, and they need to get their inflation problem under control. In Germany, we saw a substantial spike in German rates in the past week also. So, our 30-year is getting dragged along with that. We've been refilling the Treasury General account, which during the debt ceiling standoff got run down, and we're doing that with short-term bills.
Do you see more reason then to pare back on 30-year issuance with all this in mind? And this is a change again for you now in the seat as you look at these developments and rethink things. How are your thoughts on that matter evolving?
Yeah, they are evolving, and we'll see where things go. I do think as we bring down this big deficit that we inherited, I think that the U.S., that the entire U.S. curve can have a parallel shift down relative to the rest of the world.
Do you think you can work with the Federal Reserve on this matter? So if we take the weighted average maturity of Fed holdings at the moment, I believe that's running at about 9 years. The issuance of the average maturity of outstanding bills, notes, bonds, that's closer to 6. Do we need to narrow that gap a little bit?
Yeah, look, I don't think the Fed needs to get back into the large-scale asset purchase business, and we've had very good demand, especially in the belly of the curve, which is where asset managers seem most interested now.
When it comes to other things you're working on in Washington, D.C., there's still this stock ban legislation that has been circulating around Congress. Is the president prepared to sign that bill?
I don't think we have the perfect bill yet, but I am going to start pushing for its single stock trading ban, because it is the credibility of the House and the Senate that you look at some of these eye-popping returns, whether it's Representative Pelosi, Senator Wyden. Every hedge fund would be jealous of them, and the American people deserve better than this. People shouldn't come to Washington to get rich. They should come to serve the American people, and it brings down trust in the system, because I can tell you that if any private citizen traded this way, the SEC would be knocking on their door.
Do you think it needs to extend, though, beyond single stocks? These individuals can still have ETFs and other products.
Well, what I used to do at my old firm was you could buy ETFs. They had to be widely held ETFs, so they couldn't be of a small size, and there was a long holding period. The House and the Senate, they're supposed to be working for the American people, their constituents. They're supposed to be making law, and they shouldn't be trading every day. I'm not going to name names, but there was one person in Congress who had 1,200 or 1,300 trades 2 years ago, and my hedge fund didn't have that many trades.
Do you think it needs to also extend to the executive branch and include the president and the vice president?
I think that they would be fine on the single stock and the holding period.
Maybe they're just great traders, Mr. Secretary. Do you not think they're just great traders?
It is a statistical anomaly. Warren Buffett wrote an essay once, and he talked about the zoo in Graham and Doddville, and if all the orangutans in that zoo kept typing the Bible, then there's something going on in that zoo. There is something going on Capitol Hill in terms of information leakage that is statistically not sound.
Do you think those restrictions should extend to the executive branch?
Sorry?
Do you think those restrictions should extend to the White Has you spoken to the president about this? Is he comfortable?
Well, the president's come out in favor of this, and Hakeem Jeffries is in favor of this too. And I can tell you, if I were Congress and I were looking at my ratings with the American people, I would be pushing this because, again, it's an extractive class. You should not come to D.C. expecting to line your pocket. You should come to D.C. to do the people's business.
We couldn't agree more, and it's been greatly disappointing to see that there's tighter restrictions on how journalists trade than over some members of Congress in Washington.
Yeah, I mean, again, it is one of the things that I think we can do to get trust back into the system.
Just wanted to finish on the president's visit to Alaska going into the weekend. Anne-Marie's going to be there. What do you think we can accomplish this weekend?
I think the president has been thinking about this a long time. He believes, as do I, that this war never would have started if he had been president, and he is committed to ending the bloodshed, but not at any cost. Not at any cost. I think everyone has been frustrated with President Putin. We expected that he would come to the table in a more fulsome way. It looks like he may be ready to negotiate. And we put secondary tariffs on the Indians for buying Russian oil, and I could see if things don't go well, then sanctions or secondary tariffs could go up.
What about China? They're the main purchasers of Russian crude.
Again, I'm not going to get ahead of the president, but the president is the best at creating leverage for himself, and he will make it clear to President Putin that all options are on the table.
So sanctions can go up, or they can also be loosened.
Sanctions can go up, they can be loosened, they can have a definitive life, they can go on indefinitely. You know, there's this Russian shadow fleet of ships around the world that I think we could crack down on them. But Anne-Marie and Jonathan, the one message I would leave you with, it's that President Trump is meeting with President Putin, and the Europeans are in the wings carping about how he should do it, what he should do it. But the Europeans need to join us in these sanctions. The Europeans need to be willing to put on these secondary sanctions. I was at the G7 meeting in Canada with President Trump, and the Europeans kept talking about Senator Graham's bill to do the secondary tariffs.
Yeah.
And I looked at all the leaders around the table and I said, is everyone at this table willing to put a 200% secondary tariff on China? And you know what? Everybody wanted to see what kind of shoes they were wearing.
I imagine the Germans went very quiet, and that's been a problem for a long time.
Yeah, it's put up or shut up time. The president is creating his own leverage. We need the Europeans to come in and help create more leverage.
Mr. Secretary, appreciate your time.
Good to see you.
You're enjoying this. I get the feel that you're enjoying this.
Sorry?
It's good to see you. You seem happy.
I think things are going well.
The Treasury Secretary, Scott Bessent. Mr. Bessent, thank you. We appreciate it, sir. From New York City, the conversation continues. The third hour of Bloomberg Surveillance just around the corner. We'll catch up with Xana Aronoff in just a moment.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
More coverage and capacity, it's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
The top names at the Fed are on Bloomberg.
We're seeing pressure on the inflation side of our mandate. That's where our miss has been bigger, and it's been lasting for longer. We haven't hit on inflation in 4.5 years. What I hear from people is that the pain of inflation is really biting. And so we have to balance those two sides of our mandates when we think about setting correct policy. And we have to look at, if we're missing, by how much and for how long do we expect those misses to last?
Nobody covers the Fed like Bloomberg.
In case you missed it on Balance of Power.
The president says grocery prices are dropping. Is that what you're seeing?
If you go back to COVID and everything, they've obviously gone up since then. I think you see a pause in grocery prices right now because we don't know what to do as far as buying those right now. The other big one that hit us today was this. India grows most of the shrimp in the world right now.
Wow.
And now this, what do we do now? This just got 50, is it 50% or 25%? I don't even know.
So how long do you think you can sustain margins here if these tariffs do not change? You mentioned the holidays. Is that when this starts to kick in?
Yeah, we're hanging by our fingernails right now. I mean, we can't do this forever. And I'm hoping all of Trump's tariff deals and everything will work themselves out.
Don't miss Balance of Power live every weekday.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom McKenzie in London. Watch Bloomberg Tech Europe. New episode Friday, only on Bloomberg Television.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Bersachi in Vienna, and this is Bloomberg.
We certainly have seen signs of very rabid risk-taking.
The bulls will say there is further room to go.
From a technology and an innovation standpoint, it's still hard to beat the U.S. markets.
The big picture for the equity markets, it's about profits, profits, profits.
Equities are just focusing on the profit story, and I do think that there's some durability.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now, and your scores are shaping up as follows. All-time highs continue. We add to them. We're up another 0.2% on the S&P 500, up by 0.24 on the NASDAQ. In the bond market, check out the front end of the yield curve. The 2-year this morning down 3 basis points. The 2-year breaking 370, 369. The focus on Federal Reserve policy. The Treasury Secretary on this program just moments ago making the argument for the Federal Reserve to cut interest rates 150 to 175 basis points.
So basically, the Treasury Secretary is saying that when you look at the labor market data and you go back and look at the revisions, that the Fed should have already been cutting. They shouldn't have been waiting for September, which is why he thinks they need to be more aggressive when it comes to September. The question is, Jonathan, if they go 50 basis points in September, does this signal to the world that actually the U.S. economy is not on solid footing?
The good news at the moment is the tariff pass-through has been muted relative to what was expected. That's the good news. The bad news is that might change in the months to come, and that can change in a number of ways. Maybe you pass it on to consumers, or perhaps at the moment companies continue to absorb the costs, but ultimately they start cutting costs themselves and unemployment starts moving in the wrong direction. These are the kind of things that can rebalance in the months to come, and the jury's still out.
We need to see the mitigation efforts when it comes to these companies that have been absorbing some of these tariff costs. I really keep coming back to the autos, because right now what you're not seeing in the data that car prices are going up. But what you do see when you hear from corporate America, especially out of Detroit, is that they are absorbing billions of dollars when it comes to some of these costs, and they have yet to pass it on. Does this mean we're going to see layoffs in this industry, or does this mean that your car, if you're looking to buy a new car at the end of the year going into 2026, is going to be high?
Imagine
heavier.
Cutting rates 150 basis points over the next 6 months or so, with equities already at all-time highs and credit spreads that tight. Coming up this hour, Oksana Aronoff of JP Morgan Asset Management. As investors add to the recent rally, we'll catch up with Erica Najarian of UBS as Wall Street banks face pressure from the White House, and Tom Porcelli of PGIM Fixed Income reacting to the latest read on inflation. We begin this hour with stocks higher as optimism grows over Fed rate cuts. Oksana Aronoff of JP Morgan Asset Management writing, the 2% inflation target is dead. The Fed continues to be in a very difficult spot, but the odds are so high for September now that I don't think they dare to disappoint. Oksana joins us now for more. Oksana, good morning.
Good morning.
What would disappointment look like in the next few months?
Well, it's really interesting to me, first of all, around some of the comments that preceded me here in this studio.
Let's talk about
the
them.
aggressive cuts. It's really fascinating to me, the entire rhetoric, not just Treasury Secretary, but there is this rhetoric out there that rates are restrictive, and yet, financial conditions are easiest that we've seen in years, as tracked by Bloomberg. Obviously, risk is at all-time highs. Whether you look at equities, whether you look at credit spreads, are at all-time tights. Credit spreads are tighter than 99%. Of readings, over the last several decades. So it's not clear to me what a cut that is that aggressive going to do, by cutting at the front end of the curve. Like, what are we really hoping to achieve, right? We want lower borrowing costs for small businesses. We want lower borrowing costs for mortgage borrowers. But is that really going to occur if we continue to cut at the front end? But the long end is not moving off of the things that the front end is moving off. The long end is moving off of risk premium. There's a lot of uncertainty. The long end is moving off of the fiscal picture, which, by the way, July exposed some of the worst deficit-related data on record. And so the long end doesn't really care how much the Fed cuts at the front end. And so that's not really going to do anything for mortgage borrowers or small business borrowers.
In fact, it might push longer end yields up.
Exactly.
Even
and we
more.
saw exactly that last year when the Fed probably was too aggressive with a 50 basis point cut in an environment that did not really warrant it from an economic standpoint. And the market said, I don't know what that is. And yes, that will provide a runway for more appreciation for risk assets, and that's probably what a cut will do here, and that's where the disappointment comes in, right? So we may see a sell-off if that doesn't come through. So I think the Fed is in a really difficult position because they know how to restart the economy that is slowing. This is the playbook that's been their playbook for over a decade. But they have seen that their efficacy with respect to constraining inflation is much, much less effective.
You think they're going to move in September, though. So let's talk about recent developments in the yield curve. Yesterday, we got the data. A lot of people thought September's a lock. Yields lower at the front end, higher at the long end. That's the steepness that you're talking about.
Exactly.
Do you expect that to continue?
I think the long end is essentially locked in this 4.5% to 5%. It could go a little bit lower, but the tendency is towards the high fours and ultimately possibly even a 5 handle on the 10-year because of the fiscal backdrop, because of the risk premium. Like, what is the 10-year Treasury? It is really the rate of growth plus the rate of inflation plus that long-term premium. And the long-term premium was dead for many years. It was essentially zero when the Fed and other central banks were in zero-rate policy. There was really nothing to see there, right? Everything was kind of stagnant, if you will, from a growth and inflation standpoint. That has changed. Inflation is alive and well. I think the 2%, it's really interesting to me that, core came in at 3.1, but the market is like, oh, this is great news. We should cut here. Like, several months ago or a year ago, that number coming in at 3.1 would have been a disaster because we thought we were on the trajectory down to 2.
Well, you think the Fed should just be targeting 3% anyway?
I think that's the reality of the world we are in currently. And I think ultimately, when some of this political noise dies down, I think the Fed will, and it's already seeing that the markets are accepting the 3% inflation rate, essentially, right? And so I think the Fed eventually will guide towards a range, not a 2% target, but more of a range in terms of their target. And I do think that has ramifications for the long end of the curve as well, just kind of anchoring it where it is even further and possibly, giving it a 5 handle, if you will.
If they cut in September, is that basically them admitting that we are now targeting a range of inflation? We're not even going to attempt to get it back to 2%?
I think that definitely is part of the, or should be part of the conversation, because the markets are definitely saying, you know, we're okay with this. Let's cut here. That wouldn't have been the case in any other environment where unemployment was at 4.1 to 4.2%, where markets were marching ahead the way that they are, where consumer spending continued. Yes, it's a bit weaker, but it is still, continuing because layoffs are relatively limited. So consumers still have money to spend. In any other environment, this would not have been the sort of economic backdrop where you cut or, let alone cut aggressively.
Yeah, but what you describe, Oksana, just tells me equities are going to keep on going higher. Credit spreads are going to keep on grinding tighter. What's the counterpoint to that?
So, look, at the end of the day, some amount of inflation in the system is not a bad thing, particularly for the bottom of the cap structure, right? So the fact that equities are going to keep going higher is not a counterintuitive thing. Goosing them higher by cutting rates at the front end, that's a different story. And by the way, the Fed had this experience, a very different Fed, but had this experience in the 90s, when in the mid-90s they cut initially in a similar environment, frankly, from an economic standpoint, probably the only other time in history where you can draw that parallel. And then they saw that next leg of a very rich stock market kind of started developing, and eventually they went back to hiking. And I think we are possibly seeing that play out. And we've said for a long time that the environment we're in is not like the prior cutting cycles where you just cut aggressively or where the Fed has cut aggressively. We're really more in a late 90s type environment where the Fed cut initially and then went back to hiking because inflation remained around that 3% target as opposed to around that 3% as opposed to their 2% target.
In the meantime, shouldn't I just keep dancing? Keep buying?
I think this is not bad news for risk, and we're definitely not against risk. This is not great news for bonds, though, because if we continue to see resilience in the economy the way we've had, yes, there is definitely some slowing, but I don't think there is it's appropriate to talk about an imminent recession at all. That is going to be challenging for bonds. We're also seeing, obviously, stubborn inflation. So maybe we're seeing somewhere down the road, maybe a stagflation light, but for right now, the economy continues to be resilient, and a resilient economy or even a stagflation light environment, neither one of those are great for bonds, particularly when valuations are this rich in credit. And by the way, again, being constructive on the economy overall, yes, balance sheets are generally in pretty good shape. But the reality is that the combination of very rich valuations and tremendous complacency, I mean, you guys wrote over the past few days the frenzy in the AT1 market, for example, a somewhat nichier part of the market. We were buying it a couple of years ago when it was really trading at, 70 cents on the dollar. Right now, it's above par, and people cannot get enough. I mean, a great symptom of the kind of complacency and chase for yield that is happening out there. And I think a combination of complacency and price richness is just a bad combination for price stability going forward. And that's not saying anything around the fundamentals of those.
Does it feel like then we're at a top?
Absolutely. In credit, 100%. We are at a top. And I've always find it fascinating that there's so much appetite to understand where's the equity top. But in fixed income, the tops are so easily identifiable. I talk about this all the time. When rates are this tight, yes, you are at a top. And the question is simply whether you're going to be able to clip that coupon before the music stops, or is there going to be a price discovery, particularly in the lower rated part of the market, right, where that price discovery can beget more selling, and now you have an entire private credit ecosystem. How is that going to react as people possibly pull liquidity? So I think, again, combination of price, very rich price valuations in credit, and complacency is what's to be watched here.
Oksana, it's good to see you.
Thank you so much.
It's great to catch up, and thanks for reacting to that interview with the Treasury Secretary a little bit earlier. Oksana Aronoff there of JP Morgan Asset Management with an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. Treasury Secretary Scott Bessent said interest rates should be 150 to 175 basis points lower. Speaking on our show in the last hour, he said the Fed should be heading into a series of rate cuts in the coming months, starting with a half-point reduction in September. Meanwhile, Ukrainian President Volodymyr Zelensky is rejecting Vladimir Putin's demand that Ukraine give up the Donbas region to secure a ceasefire. He's insisting that any talks must include Kyiv and its European allies to address both territorial and security guarantees. Zelensky says Donbas could be a bridgehead for a future new Russian offensive. And in sports, it was a banner night for the New York baseball teams. Pete Alonso crushed his 253rd career home run, passing Darryl Strawberry for the most all-time in franchise history as the Mets defeated the Atlanta Braves 13-5. And on the other side of the city, Aaron Judge homered to help lead the Yankees to a 9-1 victory over the Minnesota Twins. That's your Bloomberg Brief. John?
Yahara, thank you. Anne-Marie happier. I've just found out why. You just didn't mention it.
Yeah, exactly.
Yankees mug ready to
Yankees,
go?
I know, but it's been a little bit of a rough season. I just love how they also feel like they have to do the Mets. Everyone knows we just want to know about the Yankees.
There we go. Up next on the programme, the Morning Calls Plus, Erica Najarian of UBS with the banking industry facing pressure from the President, Donald Trump.
For over a decade, BGRIM has stood with Thailand in its mission to save the tigers. With compassion, businesses can exist in harmony with nature.
Hi, I'm Lisa Mateo, introducing you to the new Stock Movers Report from Bloomberg. These are short audio reports, 5 minutes or less, delivered right to your podcast feed throughout the day. Stock Movers fills you in on the day's winners and losers on Wall Street and tells you about the news and data that's driving those gains and losses. If you want to stay plugged into the stock market but don't want to spend all day watching tickers scroll across your screen, then Stock Movers is a place for you to get informed. Listen a couple times throughout the day to find out what's moving equities and why. Search for Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Karen Moscow. New developments in the efforts to end the war in Ukraine. President Volodymyr Zelensky, along with the leaders of France, Germany, the UK, Italy, Poland, and Finland, will hold a call with President Trump and Vice President J.D. Vance later today. The call comes ahead of President Trump's summit with Vladimir Putin on Friday. Meanwhile, Ukrainian President Volodymyr Zelensky says he will not cede the eastern region of Donbass to Russia. We get more from Russian Economics and Governments editor Greg Sullivan.
These are very important comments coming from Zelensky, even if they're not new. It's important to remember that Zelensky is not set to be at the meeting in Alaska. He won't be at the table. Neither will the European allies. So this is his chance to stake a red line and try to telegraph what Ukraine is not willing to accept, especially amid all the talk between the White House that there could be a potential land swap or that land deals are on the table. President Vladimir Putin has made very clear demands for what he wants. That includes territories. And he's also demanding land that he doesn't currently hold and can't get militarily. So any kind of deal that cedes that would be a concession to the aggressor in this war. And Zelensky clearly doesn't want that.
Bloomberg's Greg Sullivan says Putin is heading into Friday's planned summit with President Trump, confident that Russia is in a dominant position on the battlefield as his military advances in Ukraine. Turning to the markets now, futures they're higher following yesterday's record close on Wall Street. Traders said yesterday's largely benign inflation report all but locks in a 25-point rate cut next month by the Federal Reserve. However, Treasury Secretary Scott Bessent says he's open to a 50 basis point rate cut. Speaking to Fox Business, Bessent also waited on the search for Chair Jerome Powell's replacement.
I talked to the candidates. I'm looking at three things: monetary policy, regulatory policy, and the ability to run and revamp the organization, because it's really gotten bloated, and I think that this bloat puts its monetary independence at risk.
And that's Treasury Secretary Scott Bessent speaking to Fox Business. President Trump is hitting at Goldman Sachs CEO David Solomon over the bank's tariff calls. In a Truth Social post, the president said the firm made a bad prediction on the market repercussions and the tariffs themselves. And quoting here, "I think that David should go out and get himself a new economist, or maybe he ought to just focus on being a DJ." White House trade advisor Peter Navarro kept up the criticism on Bloomberg's balance of power.
The Wall Street Journal personally twice in lead editorial said there was going to be a Navarro recession because of tariffs. This never happened, and Goldman Sachs was one of the big voices that was always doing the panic and inflation kind of thing.
And that's White House trade advisor Peter Navarro speaking on balance of power. Goldman Sachs has declined to comment on the president's remarks. The fight over redistricting in Texas may be coming to a head. The Democratic lawmakers who left the state to block a vote on a new map now say they're considering their options. ABC News is reporting they could return to Austin as soon as this weekend after the State House failed to again reach a quorum yesterday. Republican House Speaker Dustin Burrows says that's prevented votes on other issues, like flood relief for Texas Hill Country.
Help families and communities who've lost their homes, their businesses, their livelihoods, and in some cases, their loved ones.
Texas House Speaker Dustin Burrows. The Democrats could insist that Republicans focus on flood relief first and leave the state again if their demands are not met. Wildfires are raging across southern Europe, killing at least 3 people in Spain, Turkey, and Albania. Thinly stretched crews are fighting to contain blazes after weeks of searing heat. Sections of Alaska's capital city are bracing for the arrival of what could be record floodwaters. That's due to rainwater and snowmelt flowing downstream from a basin dammed by the Mendenhall Glacier. Residents in some parts of Juneau have evacuated. Air Canada's more than 10,500 flight attendants say they'll strike beginning Saturday if a deal on a new contract is not reached. The airline said it's gradually suspending flights as a result. U.S. mortgage rates dropped last week by the most since February, enticing homeowners to step up refinancing. The contract rate on a 30-year mortgage declined 10 basis points to 6.67% in the week ending August 8th. The rate on a 15-year mortgage retreated below 6% for the first time in 4 months, matching the lowest level since October. And a rally in global stocks is pressing on as mounting expectations for a Federal Reserve interest rate cut stokes risk on sentiment and drives bond yields lower. S&P futures are up 0.2%, Dow futures up 0.3%, Nasdaq futures up 0.2%, 10-year Treasury yield 4.25%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Hi, I'm Lisa Mateo, introducing you to the new Stock Movers Report from Bloomberg. These are short audio reports, 5 minutes or less, delivered right to your podcast feed throughout the day. Stock Movers fills you in on the day's winners and losers on Wall Street and tells you about the news and data that's driving those gains and losses. If you want to stay plugged into the stock market but don't want to spend all day watching tickers scroll across your screen, then Stock Movers is a place for you to get informed. Listen a couple times throughout the day to find out what's moving equities and why. Search for Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts. Hi, I'm Lisa Mateo, introducing you to the new Stock Movers Report from Bloomberg. These are short audio reports, 5 minutes or less, delivered right to your podcast feed throughout the day. Stock Movers fills you in on the day's winners and losers on Wall Street and tells you about the news and data that's driving those gains and losses. If you want to stay plugged into the stock market but don't want to spend all day watching tickers scroll across your screen, then Stock Movers is a place for you to get informed. Listen a couple times throughout the day to find out what's moving equities and why. Search for Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts. Hi, I'm Lisa Mateo, introducing you to the new Stock Movers Report from Bloomberg. These are short audio reports, 5 minutes or less, delivered right to your podcast feed throughout the day. Stock Movers fills you in on the day's winners and losers on Wall Street and tells you about the news and data that's driving those gains and losses. If you want to stay plugged into the stock market but don't want to spend all day watching tickers scroll across your screen, then Stock Movers is a place for you to get informed. Listen a couple times throughout the day to find out what's moving equities and why. Search for Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Karen Moscow. Treasury Secretary Scott Bessent is calling for a 50 basis point interest rate cut after this week's consumer price data. In a one-on-one conversation with Bloomberg Surveillance, Bessent said that could be the start of a new rate-cutting cycle.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back.
And Secretary Bessent says he agrees with President Trump's too late nickname for Jay Powell because the Fed has been too data dependent. Meanwhile, Bessent said he's casting a wide net in his search for a successor to Fed Chair Jay Powell. He teased that there are more names to come.
We had a series or a list of current Fed members. We're going to have some private sector, very well respected,
like who?
Very well respected people.
And Treasury Secretary Scott Bessent would not name names in that interview with Bloomberg's Anne-Marie Hordern. CNBC is reporting the new names include Jefferies Chief Market Strategist David Zervos, BlackRock's Chief Investment Officer for Global Fixed Income Rick Reeder, and former Fed Governor Larry Lindsey. And you can hear the full conversation with Treasury Secretary Scott Bessent on the Bloomberg Talks podcast. President Trump says he's going to be speaking with European leaders shortly in a call that will include Ukrainian President Volodymyr Zelensky. And this comes as President Trump prepares for his summit later this week with Russian counterpart Vladimir Putin. It's going to be focused on the war with Ukraine. We get more with Bloomberg's Roz Matheson.
It's interesting that Zelensky is actually seemingly going to be in Germany alongside the German Chancellor for this call today, as you say, with US President Donald Trump and Vice President J.D. Vance. And this is the sort of really the last opportunity for these European leaders alongside Zelensky. So this is Germany, the UK, Italy, and more, to really press Donald Trump to make the case before he goes into this meeting with Vladimir Putin to not overcommit or pre-commit to too many things in the absence of Ukraine at that meeting.
And that's Bloomberg's Roz Matheson. President Trump is ramping up his diplomatic efforts to end Russia's war in Ukraine. Now well into its fourth year, he'll be holding that face-to-face meeting with Putin Friday in Alaska. President Trump is hitting at Goldman Sachs CEO David Solomon over the bank's tariff calls. In a Truth Social post, the president said the firm made a bad prediction on the market repercussions and the tariffs themselves. And quoting here, I think that David should go out and get himself a new economist, or maybe he ought to just focus on being a DJ. White House trade advisor Peter Navarro kept up the criticism on Bloomberg's balance of power.
The Wall Street Journal personally, twice in lead editorial, said there was going to be a Navarro recession because of tariffs. This never happened, and Goldman Sachs was one of the big voices that was always doing the panic and inflation kind of thing.
And that's White House trade advisor Peter Navarro speaking on balance of power. Goldman Sachs has declined to comment on the president's remarks. The fight over redistricting in Texas may be coming to a head. The Democratic lawmakers who left the state to block a vote on a new map now say they're considering their options. ABC News is reporting they could return to Austin as soon as this weekend after the state house failed to again reach a quorum yesterday. Republican House Speaker Dustin Burrows says that's prevented votes on other issues, like flood relief for Texas Hill Country.
Help families and communities who've lost their homes, their businesses, their livelihoods, and in some cases, their loved ones.
Texas House Speaker Dustin Burrows. The Democrats could insist that Republicans focus on flood relief first and leave the state again if their demands are not met. Wildfires are raging across southern Europe, killing at least 3 people in Spain, Turkey, and Albania. Thinly stretched crews are fighting to contain blazes after weeks of searing heat. Sections of Alaska's capital city are bracing for the arrival of what could be record floodwaters. That's due to rainwater and snowmelt flowing downstream from a basin dammed by the Mendenhall Glacier. Residents in some parts of Juneau have evacuated. Air Canada's more than 10,500 flight attendants say they'll strike beginning Saturday if a deal on a new contract is not reached. The airline said it's gradually suspending flights as a result. U.S. mortgage rates dropped last week by the most since February, enticing homeowners to step up refinancing. The contract rate on a 30-year mortgage declined 10 basis points to 6.67% in the week ending August 8th. The rate on a 15-year mortgage retreated below 6% for the first time in 4 months, matching the lowest level since October. And a rally in global stocks is pressing on as mounting expectations for a Federal Reserve interest rate cut stokes risk on sentiment and drives bond yields lower. S&P futures up 0.2%, Dow futures up 0.3%, NASDAQ futures up 0.3%, and the 10-year Treasury yield at 4.25%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Wall Street might do even better if the Federal Reserve cuts interest rates. The president was pretty clear yesterday, put out this comment, Jerome too late Powell must now lower the interest rate. Is it reasonable to give them a bit more time to draw conclusions about what's happening here?
Well, I think what we could see is that, first of all, what if the BLS data had been the higher quality and we'd had those numbers, Jonathan? So if we'd seen those numbers in May, in June, I suspect we could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. And I think President Trump is very good at giving these nicknames. And I think the reason that the Jay Powell gets the nickname too late is because he wants to go into a series of rate hikes. He's not willing. He's not Alan Greenspan, who was very forward thinking. They try to be more data driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. So, it's just very old fashioned thinking, but I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September.
A 50 basis rate cut in September, does that signal that the economy, though, is not doing well?
That signals that there's an adjustment and the rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower. So I think the committee needs to step back. I think probably one of the most politicized governors just went off the board, and that she was very, very political, I believe. And I think that
what did she do that gave you that impression? I'd love to know.
Sorry?
I imagine you're referring to Governor Kugler. What did she do that gave you that impression?
I think there's a lot of inside baseball. And look, Governor Kugler, you read what she was saying when Kamala Harris was running, that we needed rate cuts, we needed this, we got to foam the runway. And then all of a sudden, it was hard to know whether, TDS was a Trump dementia syndrome or Trump derangement syndrome or tariff derangement syndrome.
Today, Russia takes more territory as Putin prepares to meet with Trump. Homeless voice their fears as National Guard troops arrive in Washington, D.C. Markets digest inflation news, holding on to hopes of Fed rate cuts. And calls to boycott American goods grow in India over tariffs. It's Wednesday, August 13th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. I'm Kim Vanell in Wanganui, New Zealand. Russian troops are pushing deeper into eastern Ukraine just days before US President Donald Trump sits down with Russian President Vladimir Putin in Alaska. It's one of the most extensive incursions so far this year and is part of Putin's effort to take full control of the Donetsk region. Trump has said any peace deal would involve some swapping of territories, but that's not something Ukraine's President Volodymyr Zelensky is willing to accept. European leaders are mounting pressure, saying Kyiv's interests must not be sacrificed. Donald Trump is due to hold a virtual meeting later today with Europe and Ukraine's leaders. Russia chief political correspondent Andrew Osborne is keeping an eye on these advances in Ukraine and what impact they might have on Friday's talks.
So I think this is significant in the sense that it's come as a surprise to a lot of people, and it could develop into something serious, and clearly it presents a challenge for Ukraine. But I think it's too early to say how serious this will become, because what has happened is that we've had small groups of Russian forces on motorbikes, we think, who have managed to penetrate the Ukrainian defense line to a depth of about 10 to 15 kilometers over a period of about a week. But what hasn't happened yet is that the Russians have not been able to bring in larger numbers of troops, tanks and armored vehicles and all that to capitalize on this.
What does it mean for Russia going into these talks with Trump?
So what Ukrainian President Volodymyr Zelensky is saying, and indeed what pro-Russian voices are saying, is that this could help Moscow shape the narrative. Namely, obviously Moscow wants to create the impression that really it's winning this conflict, that it has momentum. It already controls 75% of this region, the eastern Ukrainian region of Donetsk. It wants the other 25%, but of course it would much rather get that without having to fight for it. The reality, though, is much more complicated because the bit which it doesn't control yet is very heavily fortified and contains at least 4 of these so-called Ukrainian fortress cities. In other words, if it were to try and take this on the battlefield, it's not something that it could do easily or quickly.
I got a truck parked all the way in the back.
A convoy of National Guard troops rolls into Washington, D.C., ordered in by President Trump to take back the capital. Trump's painting the city as beset by constant danger from criminals, although violent crime dropped to historic lows in the past 2 years. Regardless, the extraordinary deployment has Democrats asking which city is next.
We have other cities that are very bad. New York has a problem.
Trump blames bail reform for crime in New York. Mayor Eric Adams says New York City has crime under control.
We are realizing crime is at the lowest this year. Outside of 2 years of the pandemic.
Adams says he's happy for New York to work alongside the federal government if it comes to that, but has a clear message for President Trump.
We don't need anyone to come in and take over. We got this under control.
The White House says as part of this crackdown, those on the streets will be given the option to go to a shelter and will be offered addiction or mental health services. White House spokesperson Caroline Leavitt says if they refuse, they can face fines or jail time.
Again, these are pre-existing laws that are already on the books. They have not been enforced.
It's rattling nerves among the homeless, like 56-year-old Flaggette Rippey.
Give us a home. How about that? How about just giving people that need a home inside? Then we'd be inside. You just want to just throw us to the rats.
Yeah, bring some trays up after 5.
At Miriam's Kitchen, that's a non-profit helping the unhoused, director Andy Wasenick is also worried.
There is a problem in homelessness. This is not the way to solve it.
The White House is also launching a sweeping review of some Smithsonian museums and exhibitions to assess their tone and historical framing. It follows President Trump's accusation that the institution promotes anti-American ideology. The Smithsonian says it will engage constructively with the White House and Congress. The institution is independent in its decision-making, but gets most of its funding from Congress. Civil rights advocates warn the move could politicize history and roll back decades of social progress. Global stock markets are surging, with record highs from Wall Street to Tokyo, as inflation data lands in a sweet spot, not too hot, not too cold. To unpack what this means for monetary policy and the Federal Reserve's next move, here's US economics editor Dan Burns.
Well, if you're at the Fed, you're thinking, I'm still a little anxious that inflation seems to be drifting away from our 2% target. It's not running away from it, and there's still an argument to be made, as some Fed officials have, that this is a process of a bit of a one-time price reset that we're seeing, rather than the start of a real trend inflation move. And if that's the case, you could turn your focus toward rate cuts beginning as soon as next month.
Staying with the Fed, a White House spokesperson says President Trump is considering a lawsuit against Federal Reserve Chair Jerome Powell over the renovation of the central bank's headquarters. Trump suggested poor oversight and potential fraud have driven up the cost of the renovations, which are $500 million over budget. The Fed says the expenses are mostly due to labour and material costs. Reuters has uncovered new details about the Trump administration's flagship Golden Dome missile defense system. According to a government presentation, the system will include 4 layers. 1, a satellite system, which will track missiles and intercept them from space. 3 others will be on land and will include missile interceptors, radars, and potentially lasers. A lot of uncertainties remain, including how many launches, interceptors, and missile sites will actually be needed. Traders in India's northern Kanpur city calling for a boycott of American goods. The demonstration is part of growing anger over huge US tariffs. As Aditya Kalra in New Delhi explains, the market for US goods there is big.
Take WhatsApp, for example, right? 500 million users, biggest market by users for WhatsApp. Domino's is the biggest restaurant chain in our country, more restaurants, around 2,000 than any other restaurant. So it's the 1.4 billion people, which most companies target. And the other advantage which companies are trying to cash in on is, of course, the rising affluent population, right? People are getting richer, they want to spend. And for many Indians, the foreign goods are considered kind of an aspirational upgrade. Has it had an impact on sales? Not right now. We don't see, you go to a McDonald's, you will still see McDonald's is pretty crowded, and KFC and eating burgers and their pizza McPuffs. But of course, there's this growing call and angst, both online and offline, to kind of boycott American goods and look at Indian options.
South Korea's former First Lady has been arrested. Kim Kyung-hee is the wife of ex-president Yoon Suk-yeol, who is himself in jail facing trial over a botched bid to impose martial law in December. She is accused of stock fraud, bribery, and illegal influence peddling. Kim denies the accusations. For today's recommended read, Cooked Alive is how a mayor of a town in Portugal describes the heatwave and wildfires that are sweeping across Europe. Tourism spots have been hit with temperatures pushing above 104 degrees Fahrenheit. There's a link to that in the pod description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favourite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily headline show. Today, President Trump deploys the National Guard in Washington, D.C. to combat crime. The US and China extend their trade truce as Trump opens the door to sales of a version of NVIDIA's next-gen AI chips in China. And Anchorage prepares for Putin and Trump. It's Tuesday, August 12th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every single day. I'm Kim Vanell in Wanganui, New Zealand.
I'm announcing a historic action to rescue our nation's capital from crime, bloodshed, bedlam, and squalor, and worse.
US President Donald Trump is deploying 800 National Guard troops to Washington, D.C. to combat what he says is a wave of lawlessness.
This is Liberation Day in D.C., and we're going to take our capital back. We're taking it back under the authority.
The government will also take temporary control of the police force, overseen by Attorney General Pam Bondi. Numbers show violent crime did shoot up in D.C. in 2023, but have been rapidly declining since. D.C. Mayor Muriel Bowser striking a diplomatic tone in her response.
And while this action today is unsettling and unprecedented, I can't say that given some of the rhetoric of the past, that we're totally surprised.
Trump also vowed to remove homeless encampments without providing details on how or where homeless people would be moved. Reporters Trevor Honeycutt and Steve Holland are in D.C. Steve, President Trump has also signaled that other major cities could be next, including Chicago. How major is all of this?
Well, this is an extraordinary assertion of presidential power, something that we're rarely going to see. What's behind this? President Trump wants to see himself as a law and order president. You'll notice that a lot of these policies here he is pursuing in big cities that are run by Democrats. If he can put pressure on Democrats, expose them as he would feel like he's exposing them as weak on crime, it could help Republican candidates in the midterm elections in 2026 when Republicans would typically lose seats in Congress with the president in power.
Trevor, hundreds of officers and federal agents have already fanned out across the city in recent days. How long could they stay?
It's not clear how long this policy is going to last. Under the Home Rule Act that the president invoked in order to take control of the D.C. Police Department, that is a 30-day initial time frame. He may need action from Congress to extend that further. And the National Guard deployments, those might be pulled back as the military finds other things to do, other things that it needs to do with those personnel.
Meanwhile, the trial over Trump's decision to send National Guard troops to Los Angeles back in June is underway. They were sent there because of protests over mass immigration raids. However, a judge has heard that the troops were sent despite intelligence assessments showing little danger. The administration says troops there were protecting federal property and ICE agents and were not used in civil law enforcement. President Trump says he's nominating economist E.J. Antony as the new commissioner of the Bureau of Labor Statistics. It comes 10 days after he fired the agency's previous leader, accusing her of manipulating job market figures. Antony is the chief economist of conservative think tank Heritage Foundation and contributed to Project 2025, a controversial conservative plan to overhaul the government. President Trump has signed an executive order to extend the tariff truce with China for another 90 days. The move puts a 30% tariff on Chinese goods coming into the US, rather than the threatened 145%, while US products going the other way will pay 10%, rather than the threatened 125%. The extension buys crucial time for imports in preparation for Christmas. And staying with China-US relations, President Trump is suggesting US chipmaker NVIDIA may be allowed to sell a scaled-down version of its advanced GPU chip in China That's despite fears Beijing could use it to supercharge its military and leapfrog ahead of America in the AI race. But China's relationship with NVIDIA has just got a little messier. As Brenda Goh in Shanghai explains, state media there has blasted the chip maker's popular H2O processors over security concerns.
I think that maybe one of the simplest way to explain is that NVIDIA makes the most powerful AI chips on earth. China wants to buy these chips because it wants to stay competitive against the US in the AI race. But at the same time, China wants to build its own domestic chip makers. It wants to be self-sufficient. It doesn't want to rely on NVIDIA's chips because they are ultimately a US product. There is this self-sufficiency push that China has been campaigning for over the last couple of years. But also, there have been, in the last couple of weeks, warnings from Chinese authorities and Chinese state media saying that they believe that NVIDIA's chips carry security risks.
And what does the US gain if NVIDIA can sell a version of its advanced chip in China?
I mean, I think it's also just about competitiveness. In his speech, Trump was saying that the H20, the current chip that's allowed to be sold, is obsolete. And China is making its own versions that are equally powerful, might very soon be more powerful than the current version that's being allowed to be sold to China. So if you allow a lower scale Blackwell into the China, then the argument is that that will keep NVIDIA in the game.
Trust in US data is key and will be tested with US inflation data out later today. Markets are bracing for the Consumer Price Index, which will shape expectations for Federal Reserve interest rate cuts. Easing inflation could strengthen expectations for a rate cut next month. However, if evidence surfaces that Trump's tariffs are driving up prices, the central bank may opt to hold steady for now. Meanwhile, news of the China-US trade truce extension is buoying Asian stocks, with Japan's Nikkei climbing to a record high powered by tech shares after returning from a long weekend break. Anchorage, Alaska is gearing up to host Russia's President Vladimir Putin when he and President Trump meet there on Friday to discuss the war in Ukraine. It'll be the first time a Russian president has visited since Russia sold the state to the US in 1867. Residents like Pam Cravers and Tyler Wilson have mixed feelings.
I'm just really sad that these two people think that they can have the kind of impact that they have on the world. That they're doing it here is kind of an insult to Alaska.
I think it's an interesting meeting, although I think that Trump continuing to be involved and to back the Ukrainians seems counter to his stated goals of being America first.
Ukraine's President Zelensky will not be at the talks, and European allies worry President Trump may agree to unfavourable terms for Kyiv. Don Durfee is our foreign policy editor. Don, how might Putin and Trump's relationship impact things here?
The last time they met was in 2018 in Helsinki, and a lot of people in the United States were quite surprised to see how chummy the two of them were. And that was the time when Trump seemed to suggest that he was prepared to take Putin's word on election interference over that of his own intelligence agencies. And since then, he's generally said pretty favorable things about Putin until pretty recently, stemming from his frustration with Russia's unwillingness to end the conflict in Ukraine, and has gone as far to threaten sanctions and to promise new weapons for Ukraine that the Europeans would pay for. And the question now is it this tougher version of the Trump-Putin relationship?
This is Bloomberg Daybreak Europe. I'm Tom McKee. The details. Good morning, happy Tuesday. So a couple of catalysts then coming through for these markets in terms of the tech story, with President Trump suggesting that he is open to some sales of those chips, of those AI accelerators into the Chinese market. Of course, we also had that extension by 90 days in terms of the conversations and the negotiation between the US and China. And then specifically, one corporate, Micron, standing out yesterday with an upgrade to its forecast as well. So those are the catalysts feeding into the brighter picture across these equity markets after a bit of downside pressure across European equities by the end of the close yesterday and a flat close for US markets. Today, European futures pointing higher by 0.5%. Here in the UK, the FTSE 100 ahead of wage data, pointing higher by 20 points, up 0.2%. S&P futures then, again, after closing flat yesterday, pointing to gains of just 0.1%. And then Nasdaq 100 looking to add 34 points. Let's flip the board and look cross-asset. The US 10-year then at 4.28, largely unchanged. The data point of the day, of course, is US inflation. CPI data expected to tick up marginally. Look at the core data when it comes out later today and the pass-through potentially from tariffs, the impact on consumers and what that means for pricing around the Fed, with markets pricing in a little over 2 cuts by the end of the year for the Fed. Euro-dollar at 116, up 0.1% on the single currency. Brent at $67 a barrel, up 0.5, so reversing some of the losses of yesterday. And gold, the yellow metal, also gaining 0.4%. The Asian session has been pretty strong. Let's flip the board and have a look. Cross-asset in terms of the broader picture on the benchmark over in Asia, gains of 0.6%, propelled by the strength coming through from the Nikkei. The Japanese index soaring 2.5% at fresh record highs. Japan coming back with a bang after a holiday yesterday. The HSA over in Hong Kong currently flat, and the Japanese yen also a beneficiary in terms of what's happening in terms of the equity markets, a weaker yen, and that is propelling the gains as well. Another catalyst for upside for Japanese stocks. The yen softer by 0.1%. So President Trump has signed an executive order extending the US tariff truce with China for 90 days. Not a huge surprise, but nonetheless giving some clarity for the markets. Earlier, the president also signaled he is open to allowing NVIDIA to sell China a scaled-back version of its most advanced AI chip. For more, let's bring in Bloomberg's China correspondent, Minmin Lo, with the details. Minmin, a busy day then for you and the team. What do we know about the terms of this US-China truce extension? Not a big surprise, but nonetheless, the 90-day extension is there. It takes us up until November.
Yes, not a surprise, and essentially it maintains the status quo, whatever had been decided at the Geneva trade deal. China put out a statement saying that they are continuing to suspend some of the non-tariff retaliatory measures, such as the export controls on a number of U.S. defense contractors, but the tariffs remain the same for now for another 90 days. So essentially it's kicking the can down the road, buying the two sides more time as they work out the final details of a potentially a larger trade deal. And of course, we are looking ahead to a potential meeting between the two presidents, maybe at the sidelines of the APEC summit in South Korea in October. That's a potential window that, of course, falls within the 90-day extension. So if the two sides continue to pick up the trade negotiation, we could see potentially more substantial outcomes being announced when the two presidents meet. Have a listen to what President Trump had said about the talks so far.
We've been dealing very nicely with China, as you probably have heard. They have tremendous tariffs that they're paying to the United States of America. The relationship is very good with President Xi and myself.
So there are still quite a number of issues on the table, right? Of course, China wants the U.S. to remove all of that fentanyl-related tariff, the 20% tariff on Chinese goods. China has also been pushing for the rolling back of these tech curbs. President Trump, on his part, has posted on Truth Social yesterday calling for the quadrupling of Chinese purchases of U.S. soybean. And of course, there has been an ongoing secondary tariff threat on China as well for its purchase of Russian oil. All of these things still on the table for discussion.
OK, and meanwhile, we heard from the US president, of course, Donald Trump, suggesting that he would be open to letting NVIDIA sell a scaled-back version of its most advanced Blackwell AI chip to China. We're getting red headlines crossing right now across the Bloomberg. This is a Bloomberg scoop that at the same time, or at least shortly after what we heard from President Trump, China has in fact been urging its own companies not to use NVIDIA's H20 chips in new guidance. This, again, is according to Bloomberg reporting. I've got more details on this. So China has put out notices to a number of state-owned and private companies, urging them to avoid using these H20 processors. These were the ones, of course, initially banned by the President Trump and his administration, before, again, we got the news yesterday that Nvidia could start selling them into the Chinese market if they give 15% of those revenues to the US Treasury. Over the past few weeks, according to Bloomberg reporting, Chinese authorities have sent notices to a range of firms discouraging the use of less advanced semiconductors. This, again, according to people familiar with the matter. Min, this is a response from China. It firms up what we expected, what had been signalled from state media and state media affiliated blogs yesterday, suggesting that China has concerns about national security risks that they claim are associated with some of these chips. They have suggested there are backdoors, for example, in some of these Nvidia chips. Certainly that has been a concern that's been flagged. And now we have confirmation that China has been sending out official notices. How significant is this?
Yeah, definitely very significant. The timing as well, very significant, coming on the day when President Trump had announced the extension of the trade truce. And we know China had been pushing so hard for the rolling back of these tech curbs. And clearly, China doesn't see the reversal of the decision to sell H20 chips to China as a win or a concession at all. And this comes as U.S. officials had been publicly calling for the installation of these location tracking capabilities in the chips that are being sold to China. You add to that, H20 isn't even the most advanced chips that the U.S. has. And so China had repeatedly, through its state media, signaled that it's opposed to these sort of backdoor to the U.S. government, and also saying that the H20 chips are not the most efficient chips out there. It remains to be seen whether or not the sale of the Blackwell line of products, because it's more advanced, whether that is enough to appease Beijing to put aside some of these security concerns. Because, of course, on the U.S. side, President Trump has shown a willingness to put aside national security concerns for a price if Nvidia pays them, 15% of the China sales revenue. They had been open to sell those, to issue those export licenses for the H20 chips. Now, of course, the big question is, is chips still at the center of this trade tussle between the two sides? Will China still want any of the chips that U.S. can offer if the security concerns are not addressed? That's a big question. And of course, China will likely continue to pour in more resources to double down on its self-reliance and self-sufficiency push.
Indeed, as they try to ensure that Huawei builds out its footprint when it comes to semiconductors, of course, focused on AI, and those AI accelerators coming from the likes of HiSilicon within Huawei as well. Min Lo in Hong Kong with the latest. Min, thank you very much indeed. Meanwhile, President Trump has named E.J. Antoni to lead the Bureau of Labor Statistics, the BLS, after firing the previous chief, of course, following weak data. Antoni is chief economist of the Conservative Heritage Foundation, has been vocal about BLS jobs data and revisions. Let's bring in Bloomberg's news desk editor Balash Pence. Balash, what do we know then about Antoni and the kind of effect he may have on the BLS, and whether or not he's going to be leaning in a certain direction when it comes to the statistics, whether or not this is a body and an institution in which investors can still have trust?
Well, that's certainly the big question, isn't it? As you said, Tom, it comes from the Heritage Foundation, which has been a very important source of policy ideas for the Trump administration. And even perhaps more importantly, Antoni has been championed by Steve Bannon, the president's advisor. Just after the big jobs data revision came out, Antoni jumped on Bannon's podcast. And as you might expect, he was very, very critical of the BLS. He called for a top-to-bottom review of all the processes at the Statistics Agency. He called for more transparency. He called for a complete revision of everything the agency does. And as you might expect, from the other side of the political spectrum, there's been a lot of criticism calling into question his ability to navigate this, what has become, frankly, a minefield of statistical data, and also his qualifications for a job like this. Obviously, on the other side, on the president's side, everybody has been raving about what a great economist he is and how qualified he is and how well he's going to do at the head of the BLS. So clearly, as you said, this is a crucial piece of data, this is a crucial institution for investors. So everybody will be watching very, very closely how he does.
OK, so that is one appointment that we have some clarity on. Meanwhile, Bloomberg reporting that President Trump and his team, led, of course, by the US Treasury Secretary, are expanding their search in terms of potential candidates for the head of the Fed. Where does that stand?
Well, less clarity, for sure. What was down to like a 2-3 person race not too long ago, now it's almost 10 people there. It certainly tells us that after the appointment of Stephen Moran to the Fed, or the nomination of Stephen Moran to the Fed, the administration now feels like they have a little bit more time to go through a larger number of candidates, to do a little bit more vetting, to find somebody who's to the president's liking, who's to Scott Bessent's liking, who's in charge of this job search. It looks like a wide open race with a lot of different types of candidates, with candidates from lots of different backgrounds and lots of different policy stances. So we can expect a lot of positioning, a bit of a horse race, a bit of a beauty pageant in the lead up to this nomination.
OK, Balash, thank you very much indeed with the latest in terms of that appointment at the head of the BLS, at least the nomination, and of course the expanded search for the next Fed chair. Bloomberg's Balash Pence joining us with the details. Turning to the economic data right now. Talking of economic data, we're watching out, of course, for US CPI due out later today. It is the big one for the day, arguably for the week as well. Let's bring in Bloomberg's Valerie Teitel now in terms of what we should watch for when it comes to the inflation data out of the US, Val.
Tom, it's going to be a big one, biggest data print of the week, arguably the month after that payroll miss just a few weeks ago. Core CPI month on month is really where the drama and where the market attention is going to be. It came in soft last time around at 0.2%. It is expected to tick up to 0.3%. But Tom, the market reaction could really be based more on what components drove the core CPI. Remember last month, it was really this beginning evidence that this tariff-induced inflation, the tariff pass-through, is starting to show up in some key components. These are the four components that saw a decent pickup due to tariffs in last month's print. Now, Tom, we can get a different narrative today. Perhaps these components don't show any increased inflation impulse, and that could be an argument that Waller or Bowman can lead on to argue that tariffs are a one-off price impacts onto CPI, or we could see a continued price increase in some of these components, backing the more hawkish members of the FOMC and saying that tariff-induced inflation could become persistent. The other thing to keep in mind, Tom, is just the balance between core goods and core services. Now, many out there argue that tariff-induced inflation will cause core goods to rise steadily, but that could be outweighed if we see continued deflation in core services. That's components like housing that make up a big component of that. So those are the kind of themes to watch out for in today's print at 1:30.
OK, so some of the granularity when it comes to CPI out of the US later today. Gold, meanwhile, Val, you got your eye on the yellow metal. Took a bit of a knock yesterday, but a turnaround today.
Took a bit of a knock yesterday, and I have to say that a lot of the pricing in of the fact that tariffs will not include gold did happen in yesterday's session. So over the last two sessions, we've seen gold futures drop 2.5%. We've been keeping our eye on gold futures because those settle in the U.S. and are more sensitive to U.S. tariffs. But now with the confirmation from Trump that they will not be tariffed, we are holding on to the declines of yesterday.
Thank you very much indeed. With what to watch for in terms of the CPI stateside and, of course, the moves around gold as well, with President Trump saying there will be no tariffs on the yellow metal. Here's what else to think about in the day ahead then. UK unemployment data drops at 7 a.m. We will, of course, break that down for you. We know there's some messiness around the UK data, but we'll give you the context, of course, within that and bring you the details as we start to see evidence of further softness in the labour market here in the UK. The German ZEW survey, meanwhile, comes out at 10 a.m., so a gauge in terms of the health of the largest European economy as we look ahead to that fiscal stimulus from the relatively new government, of course, in Germany. And the big one in terms of the data front, it is the US July CPI data, 1:30 p.m. UK time. We will, of course, break that down for you and give you all the details and market reaction. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Front and centre, it is the extension of that deadline in terms of those US-China talks. No doubt that will be updated with China and the news on their commitments, or at least their notices around the H20 chips being sent to companies in China. Coming up, getting on the phone, EU leaders and Volodymyr Zelensky plan to hold a call with US President Donald Trump tomorrow. ahead of that summit in Alaska later this week. Details next on the geopolitical story of the moment. Plus, we speak to the CEO of Dutch unicorn Data Snipper about the role of AI in auditing and finance, as well as its partnership with Microsoft. That interview coming up later this hour. This is Bloomberg.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Harness technology and AI to shape the way we live our lives and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Welcome back to Bloomberg Daybreak Europe. Now, EU leaders and Ukrainian President Volodymyr Zelensky plan to hold a call with US President Donald Trump tomorrow. This ahead of the planned summit between Presidents Trump and Putin this Friday in Alaska. This is lines dropped right now from the EU releasing a joint statement from all members except Hungary, saying that the EU is ready to further contribute to Ukraine's security guarantees. The EU saying that the Ukraine diplomatic solution must respect Europe's sovereignty. All members signing that apart from Hungary. Let's bring in Bloomberg's Tony Halpin right now, who leads our coverage on the Russian economy and government. Tony, what will European leaders hope to achieve then? They've put out this statement just in the last couple of minutes, and they expect to have this call with the president tomorrow.
Yes, morning, Tom. Well, I mean, they're pretty much resigned to the fact that Trump is going to meet Putin on his own without Zelensky or a Ukrainian presence at all. And that's always been pretty much their nightmare scenario. So they're hoping to now influence Trump and to make clear what they would consider to be unacceptable concessions based around sovereignty and territorial integrity before he gets to sit down with Putin and hear what the Russian leader has to say. What they're really concerned about is that he might make too many concessions in the discussions with Putin that makes it very difficult then either for Europeans to back that deal or for Zelensky to sell it to his people at home.
And Trump, meanwhile, yesterday, being asked about this meeting with Vladimir Putin in Alaska on Friday and seemingly downplaying expectations for what may come out of that.
Yes, I mean, we have to remember that, you know, Trump is focused on one thing, really, which is to achieve a ceasefire. He came to power promising to end the war, and he's less concerned with the European worries about sovereignty and territorial integrity. So he wants to see what Putin has to say. He downplays the expectations because maybe, as he said, that there won't be an opportunity to reach a deal and he'll have to walk away. But I think the fact that he and Putin are meeting after 6 months indicates that both sides believe that there is something on the table that they might be able to reach agreement on. And so he wants to test that thesis when he sits down with Putin in Alaska.
Tony, what is our understanding of the Kremlin's expectations for this summit?
Well, the Kremlin's pretty happy, actually. I mean, Putin has been pressing for direct talks with President Trump for some time now. He's now got that. He hasn't had to concede a ceasefire in order to get that sit-down. So he comes from a position of strength. His forces on the battlefield are advancing in Ukraine. He's managed to sideline Ukraine's leader and the Europeans. He gets to sit down directly with Trump and make his case for why he should be given this land that he's already occupying and has occupied now for a number of years.
Bloomberg, Tony Halpin, thank you very much indeed on the expectations from both sides leading up to this summit, of course, on Friday. Tony, thank you. Coming up, Spain's second largest bank, when a switch focus, BBVA, is sticking with its takeover bid for Banco Sabadell. We're going to bring you the details next on that Spanish banking story that continues to evolve. This is Bloomberg.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Harness technology and AI to shape the way we live our lives. And unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence. In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Overcome operational constraints to focus on future growth. And unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
Welcome back to Bloomberg Daybreak Europe. To the banking space right now, Spanish bank BBVA has decided to maintain its takeover offer for Banco Sabadell. That is despite Sabadell investors backing the sale of its UK unit, TSB. For more, let's bring in Bloomberg's Kriti Gupta. So, Kriti, this has been a story that's been evolving. What is the latest? How significant is this decision by BBVA?
Well, this is a fight that Banco Sabadell has been trying to put up for some time. The idea here simply being if they can return enough shareholder capital, enough dividends, enough buybacks, really juice up the stock, then maybe the shareholders won't actually vote for the BBVA takeover. And right now, because of all the juice they're basically pumping into that reward and that prospect, you are actually seeing Sabadell's share price trade above what BBVA is offering. That being said, TSB is a really big part of that because the piece that could undermine that entire case is this idea that at the end of the day, maybe that money runs out and that sustainability of returns doesn't actually exist. And that's really what's the key takeaway here and why the TSB sale is ultimately a fundraising exercise for Banco Sabadell. This idea that they can kind of stave off that BBVA bid. That being said, the time is running short because, of course, they do have that approval now, buying it or selling, I should say, to Santander, who's long been trying to get their hands on that TSB unit, given their massive UK business as well. BBVA is now going to take over that tender period starting in September. So you have about a few weeks' time for Sabadell to really make their case before shareholders ultimately have to make that decision.
Where do regulators sit in this whole dance between these banks at this point?
The question is the regulators where? The regulators in Brussels or Team BBVA? Their team consolidation. This is a conversation that's been going on for quite some time with the idea that banking consolidation is the predecessor, the precursor to something like capital markets union, a more unified banking approach, loan loss provisions, etc. Regulators in Spain have a very different perspective of the whole thing. They're looking at this as Banco Sabadell, which is really catering to small, medium-sized companies, catering to a good chunk of the workforce, specifically in Catalonia as well, and branches that they say BBVA is going to get rid of, given their expertise in digital banking. So it's, again, two different teams. Ultimately is coming down to Brussels versus Madrid in a story that really started out with Brussels versus Barcelona.
Okay, it's those domestic concerns, once again, putting a bit of a spanner in the works when it comes to banking union. Okay, we watch for the latest then in terms of how this story continues to adjust. With the latest, the BBVA is maintaining that bid. With the details and the context, Kriti Gupta, thank you very much indeed. Anchor, of course, of the opening trade. Now to some other stories making the news this Tuesday. Norway's $1.9 trillion sovereign wealth fund has divested from 11 Israeli companies and is terminating all contracts with external managers in Israel following public outcry over its investments linked to the war in Gaza. Norges Bank Investment Management held stock in some 61 Israeli companies as of the end of June this year. Offshore wind farm developer Ørsted plunged the most on record yesterday as investors digested a planned rights issue that's effectively a handout from and by the Danish government. The company lost nearly 1/3 of its value after announcing it would sell shares. The wind pioneer hopes to raise $9.3 billion from the issuance. Coming up, Tesla CEO Elon Musk accuses Apple of favoritism towards Sam Altman's OpenAI in the company's App Store. That story is next. A tech roundup. We'll check in on the markets right now. Futures a little softer than they had been at the start of the morning, at the start of this show, on the news that China has put out notices to some of its biggest companies urging them not to purchase NVIDIA's H20 chips. So semiconductors and chips back in focus for these markets. Plenty more coming up. This is Bloomberg.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Donald Trump hits the snooze button with another 90-day pause on China tariff rates. Tech stocks point higher in Asia. The US president taps an economist from a conservative think tank to lead the Bureau of Labor Statistics. We are told the Fed's two vice chairs, meanwhile, and the Dallas Fed president are in the running to succeed Jerome Powell. Plus, Elon Musk accuses Apple of favoring OpenAI in its App Store, threatening legal action. We're going to bring you the details on that. Let's get to the markets right now, with the other factor feeding through to the equity markets being the Bloomberg scoop that China has sent notices to many of its biggest state-owned and some private companies as well, urging them not to buy and use NVIDIA's H20 AI accelerators. That is weighing on US futures. S&P E-minis had been higher prior to that news, now flat after a session that saw losses of around 0.2 yesterday. Nasdaq 100 futures a little softer as well, just down 0.1%. European futures still pointing higher by 0.3. FTSE 100 futures ahead of wage data later, 7 a.m. UK time, currently pointed gains of 14 points. Let's flip the board and have a look cross-asset. The data point of the day is CPI and inflation out of the US, with expectations that you will start to see evidence of the feed-through of tariffs and a potential impact on consumers. That data expected to edge up month on month. The 10-year currently yielding 4.27, euro-dollar at 1.16. Brent slightly higher after the losses of yesterday by 0.4%. Gold also getting a lift up 0.3%, currently at $3,353 per troy ounce. So, within the last few minutes, China has urged local companies to avoid using NVIDIA's H20 processors, as I mentioned, particularly for government-related purposes. Joining me now for more and a roundup of some of the other big tech stories is Bloomberg's Ed Ludlow here in London, and of course the anchor of Bloomberg Tech stateside as well. Ed, let's start with the latest line then, the Bloomberg scoop on the H20. We'd been seeing moves by China to pour skepticism and to put question marks over the H20. Now it seems it's official. They've been sending out notices to some of the biggest companies. How significant do you think this is from the Chinese perspective, and what it means for NVIDIA and AMD's prospects?
Well, it's significant from the Chinese perspective because look at the reaction of China's semiconductor industry in the session, Hong Kong listed and domestic. Those stocks are jumping because the idea is that this doesn't directly correlate to the events of the last 24 hours. It has nothing to do with NVIDIA and AMD splitting revenues from China with the US government. These advisories, their guidance, first of all, not binding. They went out in the last few weeks, so it kind of predates the events of the White House yesterday. But it's just deeply rooted in national security, just as America has national security concerns, China, and this applies to smartphone handsets, electric vehicles from US manufacturers. It's really normal for government entities to say to staff in particular, don't use that technology, particularly if it's relevant to a national security use case. Why are futures moving down? Because analysts in recent weeks have really baked in billions of dollars of NVIDIA H20 revenue very soon. Yeah. And that just puts that into doubt. And given the market cap of NVIDIA, you might see it go the other way.
So there's now a big question mark around those billions that maybe some had hoped that NVIDIA and AMD would be harvesting from the Chinese market, as export licenses maybe would be approved under the new terms of the Trump administration. But you're absolutely right. The national security focus, they have not been walking back from that in China. Meanwhile, in terms of, and switching focus slightly, the latest in terms of the feud, I mean, partly it's a feud being extended again between Musk and Sam Altman, but more directly, at least in the moment, targeted at Apple. How significant do you think this is? Musk is threatening legal action over the App Store and the positioning of Grok versus GPT.
Musk is historically litigious when it comes to him trying to advance his companies and interests. What happened while we were all asleep is that XAI put a fresh version of the Grok app on the App Store. The claim that Elon Musk is making is that Apple, in sort of some affirmative action, influences the rankings on the App Store. How Apple actually does it, based on their public disclosures, is that if you go on top 3 apps, it's done by volume downloads, velocity of downloads. There's metadata relating to how developers do it. But he's clearly aggrieved that ChatGPT, which is OpenAI's generative AI tool, is number 1, and Grok is currently number 5. And he has basically said that he'll bring illegal action under the umbrella of antitrust. Apple has not commented publicly, but again, you can find the parameters by which Apple and Apple algorithm does rank things on the App Store pretty easily out there. And as for Mr. Musk and Sam Altman weighed in as well, they got beef. So that's all quite known in the public domain.
They got beef. OK, we'll see if there is an official response from Apple. But looping back to the tech story, but with a focus on a different component, which is Intel and the still relatively new CEO. So Lip Bhutan, who, of course, has been under pressure, I mean, pretty direct pressure from President Trump as of last week. That mood, President Trump, after a meeting with the CEO of Intel, seems to have kind of adjusted his views.
Things can change very quickly, and Intel were very quick to put out this statement about how constructive the meeting was. On paper, Intel is everything that the administration is looking for. An American company who is trying to bring manufacturing of something back to the country. They already have a very large manufacturing footprint. It's just that they are frankly not very good at it. They're behind at the cutting edge of making chips. Lip Bhutan is frankly a legend in the semiconductor industry for 40 years worth of legend. And he has had historic ties to China as a venture capitalist, making investments in Chinese startups, and is the CEO of a company called Cadence, where he was investigated, frankly, for supplying technology which China, it's alleged, was used in a military context. So the president's met with him. They plan cabinet meetings going forward. Not sure what that means. But in terms of what America is doing with the semiconductor industry, particularly inviting foreign entities, Samsung and TSMC, to ramp up capacity in states like Texas and in Arizona, on paper, Intel should be there or thereabouts. And that's how the narrative's changed with Intel under Lip Bu.
And it feels like there's going to be more to come in terms of how that story evolves as well. But the pressure, at least for now, easing on the CEO and the head of Intel, given the comments from the president. Ed Ludlow, fantastic. Thank you very much indeed with that tech roundup. Of course, the anchor of Bloomberg Technology, joining us in the studio here in London. Now to some other stories making the news this Tuesday. Staying on the tech space, Micron raising its fiscal fourth quarter sales and profit outlook, citing stronger DRAM prices and high bandwidth memory demand. Shares closed more than 4% higher after it said revenue is now seen up to $11.3 billion. Micron has been one of the best performing chip stocks this year. And Ford has unveiled a $5 billion plan for a new line of budget electric vehicles, starting with a $30,000 pickup truck set to roll out in 2027. CEO Jim Farley calls it a bet to take on Chinese rivals, warning there are no guarantees in the unpredictable US EV market. The plan includes a $2 billion overhaul of Ford's Louisville plant. Paramount is buying the exclusive rights to show all events from the Ultimate Fighting Championship in the US. The 7-year deal is worth $7.7 billion and bolsters the Paramount Plus streaming service. Paramount says it will also look at buying international rights in the future as they become available. And after a strong start to the year, UK GDP figures are likely to show that the economy here slowed sharply in the second quarter. We're going to get the latest in terms of employment data today and GDP on Thursday, with economists warning about the effects of higher taxes on growth. We can speak now with Bloomberg opinion columnist Rosa Prince in terms of what to think about when it comes to the data front here in the UK. So, Rosa, UK GDP remaining a problem, a challenge for the Chancellor, a challenge for the Prime Minister, and so far, a lack of evidence that we're really being able to turbocharge this economy?
Yeah, if you look back to the end of last year, just after the budget, the government really put everything they had into growth. That was the big ambition. The economy was going to be boosted by growth. And as you say, that went quite well at the beginning of the year, but really has come to a halt now. And what looks like it happened was that a lot of businesses and individuals were getting ahead of those Trump tariffs, got all their business out of the way, and now they've kind of ground to a halt, partly as a result of those tariffs, but also partly as a result of some of the measures that Rachel Reeves herself introduced in the budget, that sharp hike in national insurance for employers really having a drag effect on the economy now.
Rosa, when we think about the data then, and that story, and how things have adjusted, are we getting to a point where we're starting to see green shoots? Are we starting to see a turnaround as companies and the broader economy adjusts to those higher taxes? Or are there further challenges ahead? Where are we in this story?
I think that's not totally clear. One issue that I think is developing is that there are two impacts on growth and on confidence more broadly and on spending. One is the impact of national insurance rises and, of course, tariffs, as I mentioned, but also going forward, it creates a vicious circle. So Rachel Reeves now has a bit of a black hole in her finances. She was unable to cut public spending a few months ago. You'll remember those rebellions in the House of Commons when she tried to bring down the welfare bill. Didn't happen. Then what happened? She hasn't achieved growth. She doesn't want to borrow anymore because of the impact that could have. So now she's left to having the prospect of raising taxes. And there's a lot of talk about taxes, a lot of talk about where those taxes would fall. And businesses are kind of voting with their feet. They're holding back because they're worried about what could be coming down the track. And I think that's something that we will see in the labour market statistics as employers are pausing on recruitment.
One of the other data points, of course, that certainly the BOE has been focused on, no doubt the Chancellor as well, has been the relative stickiness of inflation in the UK. And then the services side, we've had this Oasis tour, of course. We've had a number of kind of sellout concerts, of course, not just in Wembley in London, but also in Edinburgh and in Scotland. We've talked about the Taylor Swift effect on inflation. Is there an Oasis effect on inflation? Is this something where the Chancellor may be thinking, I'm going to look back in anger on this?
Yes, terrible pun. Yeah, I mean, you would think that something like a big concert would actually have a beneficial impact on the economy. You think, we should all be spending, that's a good thing. Actually, what looks like happening is a lot of people save money elsewhere. So they'll say, oh, okay, well, I'll go see Oasis and that means I won't go on my staycation holiday instead. And therefore, what can happen is that there's an inflationary impact, as you say. Look at the tours right now in Scotland. It's coinciding with the Edinburgh Festival, and that's the worst possible time because what it means is that hotel prices are going up and the current inflationary drive is very much on food, on retail and hospitality. And so the last thing that economists really want is for everyone to go to see Oasis, I'm afraid. That's exactly the same problem that manifested with the Taylor Swift tour last year. So, yes, I think Rachel Reeves is currently looking back in anger.
OK, Bloomberg opinion columnist Rosa Prince. Thank you very much indeed for picking up on my terrible pun as well. Rosa, thank you for the details in terms of what to think about that UK data and maybe the inflationary impacts of that Oasis tour as well. Coming up, how AI is being used in auditing and finance. We're going to speak to the CEO of Dutch unicorn, Data Snipper, about how that company is helping with precision and speed and its partnership with Microsoft. That conversation is coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's turn to AI now because tech giant Microsoft has partnered with Dutch unicorn Data Snipper to develop agentic AI solutions within the world of financial auditing. The collaboration integrates with Microsoft's cloud infrastructure, Azure, of course, and enables embedding of its AI agent directly into auditing workflows to boost efficiency and productivity. Important for the world of finance, of course. For more, I'm very pleased to say we can bring in the CEO of Data Snipper, Vidya Peters, joining us in the studio bright and early this Tuesday morning. Vidya, thank you for joining us. What does this Microsoft partnership mean for you and the business, and how significant is it, and how deep could that partnership go?
Tom, it's a pleasure to be here. Thank you for having me. This is a significant partnership because the world of audit and finance loves Microsoft's Office. And so we have been longtime partners of Microsoft, and now we're even more excited to build agents with them, bringing the power of AI into Microsoft Excel. So imagine you could just use your natural language to say, hey, here are all the tasks I'm looking to do. Go ahead and do it for me. And it's done for you in seconds.
What kind of response have you had so far? It's early days, of course, but what response have you had from your customers? What is the kind of adoption rate you are expecting to see from this particular product?
The customers are hungry to bring more AI into their day-to-day work. Why is that? Because there's a massive talent shortage in audit and finance. Most people don't realize that most audit and finance teams are struggling to fill the roles that they have open. There are fewer and fewer people graduating with a degree in accounting. And so we have these firms, our customers, trying to do more with less, to be more efficient, to reduce the level of errors and flaws that they have with limited resources. And so we actually find that 60% of our new customers are choosing our AI products, which is just a phenomenal adoption rate.
Where is within the segments that you focus on in terms of the client base, where is the fastest adoption at this point?
We're watching customers, large and small, adopt them, but we actually find that the smaller teams tend to be more innovative, more risk-taking, and they're willing to bring in technology because they just have fewer resources and they have to do more with less.
What are the biggest bottlenecks right now?
Building products fast enough. We want to solve problems all along the audit value chain. We're coming out with a new agent for disclosures. So this is a process where auditors have to answer hundreds of questions that leaves them very exposed to compliance. And it's a very erroneous process that takes hours and days for them to do. We're just going to have an AI agent take the first swap of the work for them, allowing them to really become reviewers rather than the doers of the manual work.
Okay, and you talked about the fact that there is a shortage of auditors within the industry. But for those who are auditors, should they be concerned? What is the future of auditors and financial analysts in the years ahead as companies and businesses adopt some of these AI agents and the development and the innovation continues?
The world and the economy thrives on trust. You and I are able to function because we're able to trust the news information you publish, the earnings reports that we see. And we trust because there are armies of humans behind them that sign off on those audits, on those financial procedures. So I don't believe there is a world where there won't be an auditor signing off an audit or a finance team that doesn't actually stand behind a procedure. And so I believe AI will take away the manual work without actually replacing jobs completely.
So you'll always have to have human in the loop for that trust layer? I mean, how are you balancing innovation with compliance, with risk, with data security, with trust?
The human in the loop is a critical component of this work. Given AI's hallucinations, their tendency to make errors, let me just say, even if GPT-5 is considered a PhD student, how often have you seen a PhD student allowed to be done the entire project unsupervised? I just haven't seen that in the real world, and I don't think we will leave AI unsupervised to do their work unchecked.
What are your ambitions then, as the CEO and for the business, beyond auditing? How far does this go? What are your ambitions in 5 years' time, for example?
The question is quite universal, which is, how do I bring in data from the outside? How do I extract it? How do I analyze it, check it? And how do I always create a cross-reference for it? And so if I think of that, that is a multi-billion-dollar opportunity globally. It's not just audit, it's finance more broadly. And so I'm excited about the number of products that we still have to build. AI has given us the opportunity to innovate and solve many more problems than we ever could have before.
And you're profitable now. Are you looking to do you need to fundraise? If you're profitable, do you want to be fundraising so you can expand into other markets? What are you thinking about in terms of the fundraising story, in terms of profitability, in terms of key markets?
We have been profitable. We've always focused on growing the business sustainably. I do not need to fundraise. And so my focus is on innovating, building products, and continue to serve our customers globally. We have customers in over 170 countries. We have offices in New York, Tokyo, Kuala Lumpur, Amsterdam, and we have all of the resources we need to continue to build and grow.
Priority markets regionally? Where does the US stand?
The US is very important to us, as is Western Europe. And we're very proud to be very global.
Okay, Vidya, thank you very much indeed on that partnership with Microsoft, agentic AI, auditing and expanding beyond auditing into the broader financial space as well. Vidya Peters, CEO of Data Snipper, based in Amsterdam, the Netherlands, of course. There's plenty more coming up. We're going to be a preview of the CPI data. It's the data point of the day out of the US. We'll check in on crypto prices as well and the outperformance of the FTSE 100. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. I just want to highlight for you what's been happening in terms of the crypto space with a focus, of course, on Bitcoin and the unrelenting gains that have come through year to date, up 25%. So in terms of the context of some of the upside that we've seen for Bitcoin, not an historical number in terms of the gains, but you are closing in on a $2.5 trillion overall market cap in terms of Bitcoin. Part of this coming down, of course, from institutional investors continuing to lean in to the biggest crypto by market cap. You've had the ETF story as well, the spot ETFs, and some of the regulatory changes in the US. The gains continue to come through for Bitcoin. It's hard to see what derails this at this point, according to some of the views out there, at least. Corporate treasury buyers as well. Really interesting in terms of the numbers coming through. Digital asset treasury companies amassing a stockpile of $113 billion worth of Bitcoin. So just something to keep an eye on in terms of the further upside, maybe reaching that $2.5 trillion market cap for crypto and for Bitcoin. We're checking in on the stock story as well in the UK. The outperformance versus the stock 600 year to date, the outperformance versus the S&P 500. Of course, part of this is a valuation story. Part of this is down to the fact that some of these UK listed FTSE 100 companies have slightly less exposure to the tariff risk than some of their European counterparts. And there is potentially an FX impact as well. Our MLive team highlighting that softer pound typically correlated with further upside for the FTSE 100. Again, the outperformance is there, and could a weaker pound give further upside to UK stocks in terms of the FTSE 100? The big data point of the day, of course, is US CPI, and the expectation is that you're going to see a modest tick up in terms of the inflation story out of the US. The components will be important, of course. The core number will be crucial. Markets pricing in terms of the Fed reaction to the inflation story, but also, of course, a weakening labour market. More than 2 cuts at this point, around 60 basis points, 58 basis points the last time I checked, by the end of this year. The CPI print, of course, could lead to adjustments in terms of that view, and so the market impact could be there as well. The estimates then year on year, looking at a print of 2.8% versus 2.7%. The core, this is important, of course, 3% is the number that you could hit according to the estimates, slightly above the prior print of 2.9%. On a month-on-month basis, you could be looking at a number of 0.3% when it comes to core CPI. The number's dropping at 1:30 UK time. In terms of the futures story, we've had the news out of China that they have sent out notices, advisory notices to some of the biggest companies, pushing them to think twice about buying Nvidia's H20. National security concerns in focus. So the stock story, the chip story, I should say, is back in focus for these markets. Nonetheless, European futures pointing higher by 0.3% after ending the day essentially flat yesterday. You saw a bit of pressure on US stocks by the end of the close, down 0.2% today. Flat right now on the S&P 500, a similar picture for the Nasdaq 100. Looking for more clarity, investors, it seems, when it comes to this semiconductor story. That truce between China and the US has been extended, of course, by 90 days. The next edition of Bloomberg Tech Europe, by the way, airs this week. We're going to be exploring how AI is changing the way we all work. That's at 6:30 a.m. London time on Friday. The opening trade is up next. This is Bloomberg.
गाइस क्रूड ऑयल की इन्वेंट्री आनी थी, क्रूड ऑयल की इन्वेंट्री आ चुकी है। 3 इन्वेंट्री आती हैं क्रूड ऑयल की। 8:45 पे प्रेसिडेंट ट्रम्प की स्पीच भी है, उसका भी ध्यान रखना। तो क्रूड ऑयल की खुद की इन्वेंट्री नेगेटिव है, जितना फोरकास्ट किया था उससे ज़्यादा आ गई है, तो इट इज़ बेयरिश फॉर क्रूड ऑयल प्राइस। एंड बाकी की अगर दो जो और इन्वेंट्री आती हैं, एक EIA का डेटा आता है और एक सेकेंड आपका गैसोलीन की इन्वेंट्री आती है, तो वो दो डेटा भी नेगेटिव ही है। तो तीनों डेटा नेगेटिव है प्राइस के लिए, मतलब प्राइस को डाउन ही जाना चाहिए एज पर द इन्वेंट्री। लेट्स सी जाता है या फिर नहीं जाता है। क्रूड ऑयल इन्वेंट्री इज बेयरिश फॉर क्रूड ऑयल प्राइस। क्रूड ऑयल की जो इन्वेंट्री है बेयरिश है क्रूड ऑयल के प्राइस के लिए, ठीक है। 3 के 3 इन्वेंट्री बेयरिश ही आई हैं क्रूड ऑयल में, क्रूड ऑयल के लिए। अब कोई डेटा तो नहीं है, 8:45 पर स्पीच है, तो थोड़ा सा इम्पैक्ट वहाँ पर हो सकता है।
Is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders.
देखो नेचुरल गैस में एक बाइंग का एंट्री यहाँ पर वापस कर सकते हैं, ठीक है। बुलिश बाइंग का ही ट्रेड लगाया। क्रूड ऑयल में आया नहीं एग्जैक्टली, नीचे लेवल पे नहीं आया, ऊपर भी नहीं आया रेजिस्टेंस पे, ये भी थोड़ा सा एक रेंज के अंदर ही ऐसा फंस गया। लेट्स सी थोड़ा ऊपर लेवल पे आता है या फिर नीचे सपोर्ट पे पहुंच जाए, वहां से बाइंग सेलिंग फिर से प्लान करना। कि नेचुरल गैस में जरूर बाइंग कर सकते हैं पर्टिकुलर जोन से।
Here,
Good
filling
to
in
have
for
you.
Tim. Nice to see you.
Nice to see you. On a day where it kind of feels like there's stuff going on, but I don't know, the markets seem to be okay.
Yeah, those inflation data kind of coming in as analysts and economists expected, but still having an effect on the markets today as it kind of makes people come around to the conclusion that September, we're likely to see a cut when the Fed meets
I'm
next
guessing
time.
Mike McKee's going to say, hold on,
No
everybody.
doubt.
All right, we're going to get to him in just a moment. We're also going to talk about China's maneuvering because, David, it feels like this new world order feels like the train has left the station, certainly with tariffs. Things are going to be different because of the U.S. actions, and you see China moving a lot.
Yeah, trying to consolidate some of its influence with other members of the BRICS group. And of course, we've seen the tariffs that have been imposed on India and other countries as well. We'll see if that's leading to anything tangible, if it's more bite than anything else.
That's a really good point. And we're going to also talk about alt energy, everybody. We've got Bloom Energy with us. Shares are on a tear. What's interesting in an alt energy world where I feel like the administration's backing off, not necessarily for some of these names.
And of course, like so much tied to AI, artificial intelligence, and the need to fuel all these data centers that are being built across this country and around the world.
I always think, what happens when the spending stops?
There you go.
All right, folks, we got a lot coming your way in 60 minutes. Stick around, David and I, here on Bloomberg Business Week Daily. Right now, though, a check on the trade with Charlie Pellet.
Hi, thank you very much. We are on track for a record close on the S&P 500 index. Just under 2 hours to go until that bell clangs on Wall Street with the Dow. The S&P, NASDAQ solidly in the green. S&P topping 6,400, hitting a record now, up 1%. We got the S&P up 66, the Dow up 493, Dow Industrials up 1.1%, NASDAQ also at a record up 1.2%, and the Russell 2000 index of small cap shares surging now by 2.5%. The 10-year CPI Tuesday 4.29%, the 2-year 3.72%, spot gold up $6 the ounce, 33.49, up 0.2%, and West Texas Intermediate crude down 1.1%. 63.24 for a barrel of WTI. Bitcoin to 119,377. Bitcoin now up by 0.4%. Bottom line here, stocks are at records. AI startup Perplexity says it will make a formal offer to acquire Google's Chrome browser for $34.5 billion in anticipation of requirements that may be imposed on the search giant in antitrust antitrust proceedings. A Perplexity spokesperson said the unsolicited bid was sent to Alphabet's Google this morning. Right now, we've got Alphabet shares up by 1.3%. So again, recapping, stocks higher. S&P right now at 64.39, up by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, along with David Gore. Tim is out on assignment. We'll be back tomorrow. So, hey, we want to talk a little bit about the inflation report because, David, as you mentioned at the top, I mean, it really did feel like investors like what we got, that there wasn't any kind of big surprise here.
Yeah, just to give everyone an update on what we did learn, the core consumer price index, excluding that often volatile food and energy categories, increased by 0.3% from June, from the month before. That's according to the Bureau of Labor Statistics data that was released this morning. Largely in line with what economists were forecasting, Carol, and on an annual basis, it picked up to 3.1%.
It's one of those, whew, okay, yes. Not worse than could have been. All right, let's get more on the release, the outlook for U.S. inflation and really Fed policy. With us is Bloomberg TV and Radio international economics and policy correspondent, of course, our Michael McKee. He's here in studio. And also with us is Poojam Sriram. She's Vice President of U.S. Economics Research over at Barclays. She's joining us from New York City. Welcome to both of you. So, Mike, for those who maybe, I don't know, slept in on this Tuesday, what do we need to...
Not you, Mike.
It wasn't Mike. What do we need to know about the inflation print this morning?
Well, I think what you want to say is don't count your chickens before they're priced, because there is some evidence of tariff pass-through in these numbers. There's maybe some evidence that Chris Waller's right, that it's a one-time increase, because we saw things that went up in price last month because of tariffs come down. So it may be a one-off, but it may be a continuing one-off that pushes inflation higher, because you saw things like used cars go up 0.5%. New car prices, which had been declining, are now flat, which the president claimed as a victory. But then you look at the profit margins for the automakers in the second quarter, and they were all minuscule or negative because they're absorbing it. And they're not going to continue to do that. So there is no proof that the tariff issue is over in these numbers. And the other aspect of it is
we haven't figured out all the details with some of our big trading partners.
Services prices have gone up. Yeah. They went up more than anticipated. So that's something that doesn't have to do with tariffs, but is a concern to economists, and it'll obviously be something the Fed wants to watch.
Could you pick up on that, if you would? I was looking back at a recent note that you wrote before these numbers came out this morning, and you said that while firms intend to raise prices, they've been resorting to other mitigation measures first. What did these data this morning tell you about the way the economy has been reacting, is reacting to the president's trade policies?
Yeah, sure. Great question. The release this morning was, to us, a pretty mixed bag. What was interesting is a lot of the acceleration that we saw in core CPI came from the core services component. Core goods prices were up. Inflation was, on the core goods side, still at 0.2%, very similar to what we saw in June. But really, the increases in prices, they're not as broad-based as one would have expected. Now, to be clear, we think it's too soon for us to conclude that the tariff pass-through is not happening or is more muted. We do think there are a couple of things that could have happened in July, which just made the core goods side of the report look a little softer. One is, if you remember, July was a big promotion period. We did have an Amazon Prime Day event that lasted longer than usual. And we had similar promotions from retailers like Walmart and Target. So it's plausible that we just had, slightly lower looking prices this July than we did last July. And if you look at some of the details within categories, that seems to corroborate with this narrative. But I also will allude to what Mike McKee pointed out earlier. We are seeing signs of early tariff pass-through already in the economy. Within the CPI release itself, we've been flagging for a while that household furnishing prices, for example, are up 3% just year to date. This is very different from how prices historically have behaved. Something very similar can be said about appliances in the U.S. So I just think tariff effects are in train. And while today's report may not suggest that we are seeing much tariff effects. I just think it's too soon for us to dismiss that effect altogether.
Mike, let me ask you, if I could, about housing. We looked at these data for some indication of those costs as well, and we have for many months now. What is it telling you about the state of the housing market in the U.S. today?
Well, we're not seeing price declines, but certainly the price increases have leveled off. This is the third month in a row that owner's equivalent rent was up 0.3%. And on a year-over-year basis, we see slight declines here in home prices. We're seeing in the more immediate data, the Case-Shillers and things like that home prices are not rising as fast because at this point, people have given up on selling, it appears. And so they're not raising prices because it's a seller's market. But let's see what happens going forward. The interesting question is going to be, how does the housing market recover? Is a Fed rate cut or two going to be enough? How much does it have to go down before people get out there and start buying again?
One thing I wanted to ask both of you, and Mike, let me start with you first, is that I think I heard it on Surveillance this morning, the idea or the concept of it's not just the number and where it goes to, but the percentage of the increase or decrease. So when we think about that, I mean, I know the numbers came in line, but what we've seen in terms of trends in inflation, are we seeing it continue to kind of move down in a significant way, like that percentage change?
If you if you have a Bloomberg, go ahead and put in CPI YOY index GP and graph it. And in the last 2.5, 3 months, the inflation arrow has changed from going down and to the right to going up and to the right. It's not been a huge change yet, and we don't know for sure that that's going to happen or if it's just going to continue to steadily rise. But it definitely shows the inflation trajectory has changed.
All right, so let's cut to the chase. What does this mean for the Fed? Pooja, weigh in on this. I know Mike tends to say, and he's always right about this, that there's a lot more data coming our way before the next Fed meeting. So has this changed anything for Jay Powell and company?
Well, I think not. The Barclays baseline for a while now has been one rate cut and all the way at the end of the year in December. Now, we're looking quite out of consensus, admittedly, but we think, there is a lot of data to come. Nothing in this inflation print to us was suggestive of inflation being more muted or the tariff effects are not coming. So we do think that, the next employment report is going to be the big one to watch out for. Also, we're going to hear from Chair Powell at Jackson Hole. And so we think those would be good signals to watch for. But right now, we maintain our call. The Fed is in no rush to cut rates, and we have a call for December.
I believe Mike's getting his cowboy boots
you
ready.
Mentioned Jackson Hole, and Mike lights up. You can't see it on the radio.
We're getting ready for
that. You can. But Mike, how are you sort of thinking about the way this influences Fed decision making going forward? The report today, and of course, sort of what this might tell us about the PCE report coming up a little bit later.
Well, I think it puts them in the category of if we get the same numbers that we've gotten, and by that I mean inflation numbers and another round of bad jobs numbers, the Fed might be more inclined to cut. But when you parse who the voters are and what they've said since the last Fed meeting, you got about 2 people who think they should go down, 2 people who think they should not, and 2 people who are undecided. The rest have yet to weigh in. So we will hear more over the next couple of weeks, including from the chair, and we'll see where they are going into September. But again, there's another jobs report and another CPI report and a PCE inflation report. And so there's a lot of information to come that will help decide what's going to happen. The odds are now 96% that they cut in September, but I wouldn't put money into that market right now.
I feel like I've seen this movie before.
Yes.
Expectations that change very quickly on a data point. Michael McKee, thank you so much. Always appreciate it. And of course, Pooja Sriram, Vice President of U.S. Economics Research at Barclays. Hey, coming up later next week, do join us for our live coverage from Jackson Hole. We'll be on the ground in Wyoming. Well, we meaning Mike and team, covering the Kansas City Fed's annual economic policy symposium and highly anticipated remarks from Fed Chair Jay Powell. all happens and starts Wednesday, August 20th, and finishes up with a special edition of Bloomberg Surveillance. Tom Keene, Lisa Bromowitz, and the one and only Mike McKee will all be part of that special starting at 9 a.m. Eastern on Friday. All right, that's our economic stuff. We got to talk a little bit about tech and stuff going on there.
Stuff is happening in markets and business as well. So let's give that reminder that amid all of this eco news, speculation about the Fed and tariff impacts, companies are moving on and investing, doing deals or trying to. And we got that today when AI startup Perplexity said it made a formal offer to acquire Google's Chrome browser for $34.5 billion. I say startup. Maybe startup is diminishing the muscle of this company, but in anticipation of requirements that may be imposed on the search giant in antitrust proceedings. Seth Fickerman joins us now here in studio to talk more about that. Perplexity, talk a bit about why it would do this, what's in it for them, and sort of the opportunity they see here. We had this, of course, court decision when it comes to Google. We're waiting for kind of the final contours of what that decision means. But why is Perplexity out making this offer now?
Yeah, thanks for having me. Perplexity has spent the last couple of years trying to challenge Google in search. It's actually built by a guy who worked at Google or Google DeepMind. And over the last few months, they've been trying to branch into browsers. The idea here is take AI products, AI agents that we and others have been writing about, inject that into the browser that billions of people use every day. And so when you're looking up, where to go on a map or reading a Reddit thread, you have an AI agent that's actually kind of sitting along with you and kind of changing that web experience for you. Why go for Chrome? Well, you can build that up from scratch, which is what they've currently been doing, but you got to fight for every user. Or you can go for a platform that has 3 billion users and just claim that overnight. That said, like you said, a lot of money, long shot bid. They do not have this much money on their own. They're claiming they've lined it up.
What's their latest valuation?
Most recently, we reported $18 billion. They've raised more than $1 billion. Nothing to sneeze at, but what they are bidding here is more than twice what they've been valued at and far more than what they've raised. This is a cash-burning startup like every other AI startup that we covered. They're claiming that they have investment funds that are ready to put forward the amount of money that they said they have bid here, but this is a company that's made pretty bold long shot bids before, including for TikTok. We've yet to see them, put up or shut up. We've yet to see them do it, but it gets a lot of attention. So,
Seth, describe the opportunity, the moment they're doing this now. So we had that antitrust loss by Google in that court case in Washington, D.C. We're waiting for Amit Mehta, the judge there, to kind of outline more about what's to come next. But Google is in this predicament now where it seems like it's going to have to offload this part of the company. Sort of describe the circumstances that Google is in here and why this has been an opportunity.
Yeah, I think it's safe to say that this is probably the most dynamic and uncertain moment in the browser wars that I've seen in the past decade.
It's kind of amazing.
Yeah, I mean, Chrome has really been the dominant force for more than a decade after it rose ahead of Internet Explorer. And now there's a possibility that they are forced to divest of this product. And suddenly you have not just Perplexity, but OpenAI, everyone's favorite AI startup, that are also vying to rethink the browser around AI. Google has already sort of been on the back foot a little bit, catching up on AI and search, but suddenly it might also change its market position with the browser. Google has also been rethinking the browser around AI, and I'm sure they're not alone. There are smaller browser companies that we don't cover every day that are doing this too. But it's a lot of activity, it's a lot of interest, but for the first time in years, it's no longer clear who the front runner will be in a few years from now.
I'm a little confused though, because with all of the chat bots and ChatGPT, right? And even Google understands, right? Alphabet understands kind of what it is facing in terms of what has been its bread and butter, right? In terms of an AI world. So I'm just curious, do they really need this? Can't they come up with a chatbot rather than
does
buying
Google
a browser?
need it or does Perplexity need it? Perplexity, I think that they are making a bet that
if we're moving towards a ChatGPT or Gemini, right, with Alphabet, like I'm just trying to...
I think that they are making a bet that if they're going to be increasing AI functionality, they want to put that in front of people as they're using the internet every day. And increasingly, the direction that we're seeing these companies move is not just you type in something to a chatbot and gives you a pithy response, but that it'll actually kind of surf the web along with you. It'll do tasks on your behalf. And what better way to do that than plug it into the browser? We'll see if that bet pays off and if it's worth $34.5 billion or whatever it ends up being, but that's the bet.
Well, put a fine point on it. I'm going to ask you to do that in terms of just how much search has changed here, the way that we have experienced and used it, and how AI is reshaping the way that this mechanism works.
Well, look, you can clearly tell from my voice that I'm skeptical of this offer, but if you step back, Perplexity is also a case in point of how much it has changed. If you had said 2 or 3 years ago, we would have a would-be rival to Google that is valued at $18 billion and has raised more than $1 billion and is vying to take Chrome, would have laughed you out of the room. And all of a sudden, it's still a long shot bid, but it's a testament to the fact that OpenAI, Perplexity, and others are rethinking the day-to-day search experience. It's no longer enough to just have 10 blue links. You expect something more dynamic, sort of a one-stop shop. And that's what these products offer you.
Unsolicited bid, do you expect more? Do you expect this is the start of more?
Certainly, if the judge ends up ruling in the way that the government is hoping, then there's no choice. There will be a lot more bids. I don't think this will be one and done. So
not exactly AOL and Time Warner, right?
No.
But it's like kind of, I don't know. I'm just not quite sure. Anyway, you don't think it's going to happen?
Well, this one I don't know, but there'll be more deals.
All right, Seth, thank you so much. He's Bloomberg News AI editor joining us in studio. Hey, coming up next, President Trump's tariff reorg and its possible impact on relationships being forged by the other global economic might. I am watching China so carefully.
Absolutely. And as somebody who just got back from Brazil, you see the influence that country has in that part of the world and certainly in others as well. Interesting to see how these trade talks play out. Of course, that 90-day pause extended once again to November. We're going to dig into that, what China, India, Brazil, and more are doing here when Bloomberg Business Week continues on Bloomberg Radio and Bloomberg Television.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Harness technology and AI to shape the way we live our lives and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence. In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Overcome operational constraints to focus on future growth and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks continuing to push higher. In fact, best level of the session right now. S&P 500 index at a record. NASDAQ Composite Index at a record. The Dow right now up 518 points for the Dow. That is a gain of 1.2%. The S&P at 6442 now, up 69 points, up 1.1%. NASDAQ Composite Index up 277 for NASDAQ. A gain of 1.3%. The Bloomberg Mag 7 index up 1.1%. The Russell 2000 index up by 2.7%. 10-year 4.29% with a 2-year that's currently yielding 3.72%. Spot gold up 0.2%, 33.49 the ounce. And West Texas Intermediate crude now lower by 1.2%, 63.17 for a barrel of WTI. Stocks surging as an inline inflation reading bolsters speculation that the Fed will have room to cut rates in September. Match Group has agreed to pay $14 million to permanently stop misrepresenting guarantees and locking consumers out of paid-for accounts. Also, will simplify Match.com's cancellation processes to resolve Federal Trade Commission charges. Match Group shares, they're up now by 2.2%. Recapping, the S&P at a record, up 68, up by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you very much. David Gura in for Tim Stanovec, who's on assignment with Carol Massar here on Bloomberg Business Week. And we got news yesterday from the White House that President Trump has decided to extend that 90-day pause yet again on those heightened tariffs on China. China very much in focus here in the U.S., of course, as we wait to see sort of what happens with those trade talks, but also playing an incredibly important role around the world. We saw the Brazilian president, Lula da Silva, speaking with the Chinese leader, exchanging their views on international affairs. President Xi calling for coordinated efforts against unilateralism and protectionism. News today also that India and China set to resume direct flight connections as soon as next month. And we're seeing oil playing a critical role here as the contours of this trade war continue to come into focus. It does feel like, in a way, many parts of the world are moving on and increasingly away from the U.S. Let's get to a roundtable now to understand China's goals here, what they're thinking in terms of the role they're playing in the world. U.S. very clear, of course, about wanting a higher tariff world for those looking to sell into the U.S. Shadad Kazi joins us. He's Chief Operating Officer, Managing Director of the China Beige Book, here with us in studio. And from our bureau in Buenos Aires, Amanda Suniga with us, Geoeconomic Analyst for Latin America at Bloomberg Economics. And Shazad, let me start with you and maybe just give us your sense of how China is thinking about all this. We've had a series of 3 meetings now, Geneva, London, Stockholm. The pause continues here as we get perilously close, I think, to the Christmas holiday, when people are going to be buying a lot of gifts and are going to be very worried if a lot of these tariffs come to pass. How is China thinking about the kind of trajectory of these negotiations with the U.S.?
When the year began, we would have thought that their primary objective was to bring the tariff levels down and negotiate just about trade. But what we've learned is that they are much more concerned about U.S. export controls, because that is ultimately what hurts them far more than even tariffs do, because they have ways to get around the tariffs. And so what they've done is they've used their chokehold on rare earths minerals and magnets and compelled really the administration to relent and roll back U.S. export controls while also bringing down the tariffs. So 2 wins for Xi Jinping in the last several months.
But what kind of relationship do you think he wants with the United States going forward?
Well, he'd love nothing more than to be able to sell as much as possible and be able to import the things they care about most, the most advanced technology, not just chips, but across the board, right? That's in an ideal world. Now, that's probably not what he's getting right away, but he's getting pretty close to it. I don't think he feels a pressure to do anything more. I don't think he feels a pressure today to say, I'm going to pledge like Japan and Europe did, $500 billion worth of investment, or I'm going to pledge to buy all this U.S. agricultural output the way I did in the past. I think they've demonstrated, Xi specifically, we've got a lot of leverage and we don't need to play ball if we don't feel like it.
I do think it's interesting that they want all the high tech, and yet Beijing is urging local companies to avoid using NVIDIA's H20 processors, particularly for government-related purposes. So yes, but there's always caveats. Jimena, come on in on this, because in the meantime, Latin America is watching very closely, I'm sure, and remind us of the relationship that already exists with China across Latin America and maybe what they hope to even solidify even further.
Thank you, Carol. Yes, Xi and Lula just talked, and they said the relationship is as strong as ever. But so far, the support from China to Brazil seems to have been largely rhetorical, right? They have said, they have shared views on multilateralism and unilateralism on behalf of the U.S., condemning that, and China has been very keen on jumping on this collective criticism of the U.S. But even though Trump's tariffs may be giving BRICS, the bloc that Brazil and China have, along with India, Russia, and other smaller partners, even though Trump tariffs seem to be giving it some mortar, it's still far from operating as a bloc, and it's not really coordinating a collective response to the Trump tariffs.
Jimena, on that note, do you anticipate that's likely to happen? I remember that moment a few months ago when there was a meeting of the BRICS countries. There was this tacit threat that they were going to work more closely together in opposition to what the United States was doing. President Trump clearly irritated, agitated by that, threatened even more punitive sanctions, more tariffs on those BRICS countries as a result of that. What would the catalyst be that would get them to do more than, as you say, just talk about presenting a more united front against the United States?
I think there are 2 main issues that are blocking a more integrated response, a more coordinated response. One is the very diverse membership of the group in general, and also with respect to the Trump tariffs. They are facing slightly different issues, although they are becoming increasingly closer in the sense that, for example, now Brazil and India are similarly targeted. But, for example, Russia has so far not been targeted with tariffs, although they have other issues with the U.S., of course. But the key thing is that China doesn't really need the bloc as much as the other members of the bloc need China or would benefit from a coordinated response with China. As Shashank just said, China has a lot of leverage, has demonstrated has a lot of leverage to push back without offering any dramatic concessions as other countries have done, and the U.S. has backed down. So China does not really need to have the collective weight and heft of the BRICS bloc to stand up to Trump. If it did, however, it could really expand its geopolitical cloud, and it would mean the BRICS would function more as a bloc. But so far, I think China is very focused on its national interests, and as long as it can stand up to Trump on its own and it has the leverage to do it, it is unlikely to compromise its national interest to expand the BRICS heft.
We're talking with Jimena Zuniga, geoeconomic analyst for Latin America, out there in our Buenos Aires bureau, and also with us, Shahzad Kazi, Chief Operating Officer, Managing Director at China Beige Book in studio. All right, so let's shift a little bit to China and India, which I think is kind of interesting. And, just a little headline, as David mentioned, that it looks like India and China set to resume direct flight connections as soon as next month, according to those familiar, as they look to kind of reset their political ties, as the U.S. and India, after years and years of working on improving that relationship, seem to have taken some steps back. China and India, what's China's goal there?
Well, I think, they have an incredibly complex relationship because whereas they trade
it's not a friendly one.
It is absolutely not. They have very serious national security concerns about each other, more specifically India with regards to China. And of course, they're constantly having these battles and skirmishes at the border. Long running problems there. So, I think the trade relationship.
So is any of this real? Or is it just for show?
I think it's real to the extent that they want to do business with each other, but it's not. It doesn't go towards anything beyond that. I mean, India. So let's be clear. India does not want to be seen as a country that's going to counterbalance China and all the rest on behalf of the U.S. It wants to be seen as a power in its own merit, on its own right. And by that token, though, still, they also don't want to blow up their business relationship with China. This is far more complex than I think traditional models of geopolitics would suggest.
We were talking about sort of the gap that might be left if the trading relationship is ruined between the United States and China. How confident is China that it could get, yes, the rare earths, the critical minerals exported to other countries if the U.S. isn't able to buy them? I guess what I'm saying is how sure are they in their ability to pivot to other markets if the U.S. is no longer what it has been?
So they demonstrated, I think, that everybody is desperate for Chinese rare earths. And if you remember, what they did was briefly, they set export controls on more or less everyone so that they could prevent us from transshipping those rare earths right into the U.S. the way, obviously China takes advantage of transshipment. So I don't know if that's really the big concern because there's such desperation given the chokehold that they have as the sole supplier, really, of most of these things, including some really critical things like samarium, which you need for weapons development, and how dependent we are on that. And by the way, they are not letting that out.
Jimena, I also wonder, if some great deal happens between the U.S. and China after, the delays are done, will Latin America as a whole or specific countries be like, okay, missed opportunity, we're out, because we understand the importance of that U.S.-China relationship, and especially if China gets better terms in terms of tariffs finally?
What do you mean? We are out? Sorry.
Well, meaning that they won't necessarily have such an open door, perhaps, or the conversation lines, between China and Latin America might go away if ultimately the U.S. trade deal and tariff deal that they come together with China is not as onerous as maybe has been put out before, that ultimately U.S. and China come to terms that are good for both sides. So does then China kind of back off again from Latin America?
Yeah, in a way, I think that China is very present in Latin America. If you think of it, outside Mexico, who exports 80% of its goods towards the U.S., China is the main market for most of the other biggest economies, including Brazil, Argentina, Chile, Peru. And so I don't think that Latin America can choose between the U.S. and China. For Latin America, the best would be not to have to choose. And for a while, it cultivated positive, pragmatic relationships with both markets that are important, not only in terms of trade, but also in terms of financing and in terms of tourism. Both markets are critical to the region in different respects, depending on the country. if having to choose, a lot of countries would try to push back a lot, not to be not to have to choose. They would continue to trade with China. They would continue to have financial ties, and they would try to push back on this on the U.S. because China is now almost as important or more important for many of these countries as the U.S. is.
Any last thoughts, just real quickly?
Well, look, China's going to be a big player, which is why I think when Secretary Rubio took over, his big focus initially was supposed to be to push back on China right here in the Western Hemisphere. That feels like years ago at this point.
It does.
But it's an important objective, I think.
All right. So appreciate both of you.
Yes.
Shahzad Qazi, Chief Operating Officer, Managing Director, China Beige Book, right here in studio. And then out there at our Buenos Aires Bureau for Bloomberg News, Jimena Zuniga, Geoeconomic Analyst for Latin America. All right, coming up, we're going to kind of switch gears, talk a little bit about clean technology companies. David, I don't know if you noticed, but the shares have been on a tear this year.
Yes, absolutely. Again, tethered to AI and the growth that we're seeing there. We're going to talk to the CEO of one of those companies when we come back right here on Bloomberg Business Week, Bloomberg Radio, and Bloomberg Television.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Harness technology and AI to shape the way we live our lives and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got the stock market, S&P, holding close to session highs right now, up 65, trading above 6,400, 6,438 right now. We're looking at a gain of just about 1%, on track for a record close. The Dow up 456, up 1%. NASDAQ also at a record, up 268, up by 1.2%. An inline inflation reading, bolstering speculation that the Fed will have room to cut rates in September. The 10-year, 4.29%, with a 2-year, 3.72%. Spot gold right now up 0.2%, 33.48 the ounce. West Texas Intermediate crude, 63.12 a barrel. WTI down 1.3%. And Bitcoin now up by 0.6% to 119,526 a token. Canada's Gildanware Activewear is in advanced talks to buy U.S. underwear maker Hanes Brands. That according to sources. The transaction could value Hanes Brands at almost $5 billion, including debt. It may be agreed to by the end of the week. Right now, shares of Gilbrands, they are down 3.7%. Gildan, I should say. We've got Hanes Brands, that is up. That stock surging now by 27.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Carol Master, along with David Gore. David in for Tim, who is on assignment today in Atlanta. One thing we like to watch is what's going on in the green space. Green firms, by the way, in the U.S. have found something of a lifeline in artificial intelligence after being bogged down by high interest rates, shrinking funding, and more recently, President Trump's sharp rollback of support. And our own Bloomberg New Energy Finance team, they have recently pointed out that clean tech companies that have inked deals to support data centers have seen their stocks soar this year, outperforming the S&P 500. And that includes the share price of our next guest. We're talking about fuel cell provider Bloom Energy. It is up 76% year to date, today trading at an all-time high, rising another 8.6%. Joining us to talk about the impact of AI and just the business overall is Dr. K.R. Sridhar, founder, chairman, and chief executive officer of Bloom Energy. It's a $9.5 billion market cap company. By the way, he was a former advisor to NASA and so much more. He joins us from San Jose. We could go on and on about your background, but we really want to talk to you. Good to have you here. It's been a while. Talk to us about how AI is specifically impacting and driving growth at your business.
Carol, it's such a pleasure to join you. So this is an amazing time in human history where we have not seen the need for power growth anywhere close to what we are seeing today. Let me put it in perspective. The amount of power that the big hyperscalers are saying they need between now and 2030 is equal to all the power every single family home in the US put together would need. There are about 85 million single family homes, give or take. All the power that they use is going to be needed in addition to the power we have today to just power the AI data centers. That's how large this opportunity is. And very clearly, the old model of centralized power plants with transmission distribution simply cannot meet that demand in a timely fashion. That is the opportunity, and Bloom was purpose-built to provide on-site power for the digital revolution, and we are so happy to be in the right place at the right time.
Well, help us understand how the company works, and you mentioned that on-site power, sort of what that looks like. Of course, there's been so much conversation in recent months about perhaps the need to invest more in nuclear power or fortify the grid, bring more power plants online. How do you see your company as maybe not a substitution for that, but a complement to the kind of growth and development we're likely to see here in the power grid going forward?
I think we're going to need all forms of power in very large quantities going forward to meet our voracious, energy needs. However, in the short term, if you take 5 to 10 years, natural gas to electricity is going to be the single largest contributor to this additionality. What Bloom does is takes natural gas without burning it, without combustion. We extract the chemical energy in it using a fuel cell and make electricity at the highest efficiency, without air pollution, without noise in our generators because they're quiet, solid state, and with very high reliability. For those reasons, if you are in a neighborhood that is going to have a data center, we are your best choice because we don't pollute your air, we don't use water, and we don't make any noise as we generate this reliable power. So you can have the economic advantage that a data center brings to the local community. At the same time, you're not compromising on your health.
So one thing I want to ask you, actually, our Will Wade does, who really covers this space. We were talking about you coming on, and he said, well, wait a minute, let's talk about these fuel cells for data centers. Can fuel cells really work for this? What evidence have you guys seen that it does really work?
So, yeah, that's a great question. And this
Will's
is a
really smart dude. I'm just going to put it out there. He's amazing. But anyway, go ahead.
Absolutely. Look, the issue is we are progressing so fast in our technology at AI speed that some people that have looked at fuel cells 10 years ago and have that notion of who we are don't understand where we are today as a company. We already are powering more than 0.5 gigawatt worth of data center because our total installed capacity for data centers is more than 0.5 gigawatt. So we're not a concept. We're not a PowerPoint. We're actually producing power for these data centers. And this year alone, we have increased our capacity to 1 gigawatt a year. And we announced in our earnings call that by end of next year, we can do 2 gigawatts a year. That's 2 nuclear power plants worth of power coming out of our factory next year. And you know how long it takes to build a nuclear power plant and actually commission it. So we are no longer a concept. We are a mature technology that is affordable and can compete with other technologies that don't have as good attributes as we do.
Sridhar, I wonder if you could talk a bit about your business model. I know that you've announced deals with other companies, most recently with Oracle, of course, a company that I know is investing a lot in its data center infrastructure. Could you, Sridhar, just give us a sense here sort of what those deals look like, what that deal with Oracle is like in particular?
Yeah, David, so our customers, here's what happens. Once we sign a deal with a customer, they either buy the capital equipment from us, and then they also sign up for a service contract. It's a 100% attached rate because we run those units for them and we maintain that and we offer them the promise guarantee of performance. Now, if they don't buy the equipment as CapEx, we create a special purpose vehicle using financing and we simply sell them power just like the utility would, except this is on-site and highly reliable and clean. So either way, when we create a special purpose vehicle, that financial investor in that vehicle gives us the upfront money for our capital, and we also have an annuity revenue coming out of service. So we have two streams of revenue, if you want to think about it. Installed capital equipment that gets paid to us when we ship the equipment, a continuous service annuity over the tenure of the contract. That's how we make our money, irrespective of whether the customer actually buys the capital equipment or a third party buys the capital equipment and then charges the monthly rate from the customer.
Hey, KR, I'm curious. I'm looking at one of my favorite functions on the Bloomberg. It's the supply chain function, and I'm looking at your customers. Your biggest is, I think, American Electric Power Company, but I'm also looking at Alphabet, Microsoft, sound familiar. These are some of the hyperscalers. Tell me how they're amping up their business, because they're the ones who are doing the massive AI spend, but it looks like they're a very small part of your business. I'm just curious about what's the conversations you're having with them. Are they ramping up to do more with you? That would be very telling.
Yes, the answer to your question is very simple. In the past, these hyperscalers would spend all their capital equipment just on building the data centers, and they could simply pick up the phone and call the utility company and they would provide the power. No longer is that a reality because the utility does not have the amounts of power that these hyperscalers need. So now electricity, power, which is what ultimately the data center needs to monetize the data center, is a supply chain that comes from the common good called the utility. So they have to own that supply chain or they have to procure from that supply chain.
Right.
We are very much an integral part of that supply chain, and we are having conversations with all the hyperscalers today. And you've seen the announcement at Oracle. Expect to see similar things coming soon. Our American Electric Power contract was actually for AWS, which is another hyperscaler.
I wonder if you could situate your company and this industry in the moment that we're in. So we're coming out of an administration that was doing a lot to support or encourage the adoption of alternative energy. Suffice to say, this is an administration that's not doing that. There's much less impulse to do that going forward here. What do you see here as the ideal role of government in encouraging the adoption of technologies like yours? In other words, if you'd like to see fuel cell technology take off, be more widely adopted, what is the role of government in making that happen, if any?
I think a simple role that they can play going forward is the U.S. government, between the various government functions, the military and the intelligence, is the largest procurer of electricity. To be able to purchase electricity from technologies that are made in America. We are a made in America technology. No other country in the world has the technology that we have. So they should embrace us, and they should give us an opportunity to serve the U.S. government, the U.S. military, and U.S. intelligence, and make us a really strong country.
One thing I was also curious about, and I'm looking at your market cap, it's almost about $9.6 billion, and it is this excitement over AI. There's all the money that's being spent, KR, on the build out, and I get that. But I'm just curious, then there's going to be the maintenance, and we might not need as many workers. And, we're all trying to get our head around whether, the boom, the bust part of maybe AI. After the build out, what is the business for you? Is it maintenance? Is it replacement values? I'm just curious.
Thank you for asking that question, Carol. The build out is just the tip of the iceberg. Why would these large hyperscalers spend close to $1 trillion worth of CapEx just this year alone if all that they're going to do is that build out. That's the training data centers. The inference data centers will be at least an order of magnitude larger than these training data centers, which are the foundation building blocks. Every factory, every bank, every law firm, they're going to have inference data centers close to the edge. And these edge data centers are going to be located where you all live, where people are, where equipment is. And in those congested cities, getting the additional power needed, 10 to 20 megawatts in every edge data center, which is an inference data center, we are ideally suited not just for the large data centers, but for these edge data centers, because we are non-polluting, we are quiet, we are reliable, and we can provide it on site very quickly. So we are super excited about what we think is a really secular phenomenon that's happening here that's going to last for a very long time to come. This is not just a build and bust cycle at all, as far as we see.
So when you say long time, are you saying decades, or I'm just curious?
At least a couple decades. At least a couple decades.
All right. Good to know. We'll stay in touch. Love to hear, because you certainly have a front row seat in terms of this spend and what is going on, certainly all the power that's needed. It's just kind of astounding. Dr. K.R. Sridhar, he is founder, chairman, and chief executive officer of Bloom Energy. The stock, David, up another 9% in today's session, and it's really been on a tear this year, up about 84%.
So interested to talk about these companies because we focus so much on the AI providers, those who are making these chatbots and all the developments there. But as we were just discussing, the apparatus that you need to make all of that work, so huge, so sprawling, and I'm just fascinated every time I kind of learn what goes into that, making all of this stuff run.
Right. We just hear about that kind of the big hyperscalers and their spend,
stuff,
but there's a lot of stuff that needs to be done. I'm Carol Massar, along with David Gora. Let's take a look at some stocks on the move on this Tuesday. With us is Bloomberg News equities reporter Nora Melinda. Nora, good to have you here. Let's start with Paramount Skydance. What's going on?
Yes, Paramount Skydance. We're looking at shares that are up right now, and this is, of course, after we got that rated buy at Guggenheim. They're really citing its growth strategy, and we know that Paramount was just recently acquired by Skydance last Thursday. A lot's happened since then. They got
just acquired, but it was quite a journey.
Oh, for sure. Quite a journey, but finally closed, right?
Yes.
But Paramount did acquire exclusive rights to show all events for UFC in the U.S. over the next 7 years. That's a $7.7 billion deal. So that was pretty massive, which we heard earlier reported yesterday. But we are seeing it getting a lift, particularly off of this Guggenheim lift of the its rating here.
Are you a UFC?
I am not a UFC person.
No?
That may surprise both of you to
No.
learn that, but it's a huge deal. I mean, I know that there are lots of people who are UFC people.
Somebody's watching it.
Well, some buddies, I know. Let's go to AST Space Mobile.
Yes,
company that I'm not extremely familiar with. But
I'm excited to tell you about
All
it.
right.
So AST Space Mobile is actually one of the stocks that I cover within the space industry. And it reported earnings yesterday night. And essentially what people are really excited about is the fact that it's going to be launching 45 to 60 satellites in 2025 and 2026. Now, this company is pretty much situated with the likes of SpaceX and a lot of those other competitors. So what they're looking to do is to create a world in which we really have no moment where there's no cell phone signal. So if you're out
None at all.
in the ocean,
I'm excited about that.
a
Yeah.
desert, they want us to use
like when my phone doesn't work.
So you want to turn it off occasionally, right? You don't want to have service. Well, it seems that they do.
Too bad, Carol.
I know. I was so hopeful.
But if you look at the stock performance, it's actually insane. The last 2 years, up more than 1,000%.
Wow.
So if you're an investor in this stock, you're getting some really great returns.
I thought you cover real estate stocks.
I cover everything at this point.
All right.
I cover real
I'm so
estate,
confused.
aerospace and defense, and now more recently, space stocks. So all over the
How
gamut.
close are they to doing this?
I mean, I think that's the question that everyone's really racing to do this. People are saying in the next couple years, but I mean, I think it really depends, especially because there's a lot of regulatory hurdles and all the other things that you have to get through in terms of timing.
Very crowded in space, by the way. A lot of
All
satellites.
fall down? Like, don't you ever think about how crowded this?
Imagine just a complete
space is
blackout.
Give me a call if that happens, since you'll have service. You can let me know.
I'll let you know. Hey, David. Should we talk Open Door Technologies?
Open Door Technologies. And of course, this is another one that I have in focus. One of the companies that I cover in the real estate space. We know it's really been at the center of the meme stock storm, the rally that we saw last month. Eric Jackson, of course, he is a Toronto-based hedge fund manager, a pretty micro small hedge fund there,
He's
but
been
he's
on
running
with you
it.
and me talking
he's been
about
on
this
with us in the past here more recently, but what news we're getting today is not about Eric Jackson, but it's about Anthony Pompolino. And he's a CEO of a SPAC known as ProCap Acquisition. He's been tweeting about the fact, do we call it X tweeting? Can we still say tweeting?
Sure.
I don't know.
We got
but he is saying that he bought shares of the firm. And of course, this is giving them a welcome lift today, up about as much as 16%. But I mean, he has a pretty strong following, 1.7 million followers on X. And he writes a daily newsletter to about 260,000 readers. So he has a pretty broad scope, and we're really starting to see the stock getting some celebration here.
Talking SPACs again. Here we are. Cyclicality
That makes
of
me
SPAC
nervous.
talk.
It makes me cyclicality.
I thought we were done,
talk.
but now they're back.
Say that 5 times fast.
Yeah.
What's crazy is, no offense, it's a $2.41 a share stock, and it's up 10 cents, which is more than a 4% gain.
Right, but we're like, spectacular.
I know. All right. Good stuff. Thank you so much.
Nice to see you.
Good to
so
see you.
appreciate it. Nora Melinda. That, of course, is our Stock Movers podcast. Check it out. 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcast. Doesn't it feel a little calm today?
It does. Well, it does feel like we're in the, I don't call them the dog days of summer, but
oh, man.
August, mid-August.
I know. We
pleasant...
haven't gotten the August swoon yet, have we?
No.
It
I may
usually
miss
happens.
that.
You may miss it. I may miss that too. I always miss it when I'm on vacation.
We'll let Tim can handle that one for us.
All right, let's get a check on the markets right now. The S&P 500, folks, up about 65 points, good for a gain of 1%. I think we're at a record on the S&P, and the NASDAQ 100 up 280 points, a gain, David, of 1.2%.
Well, for those of you watching on TV, up next is The Close. For those staying with us, Bloomberg Business Week continues on radio, on YouTube, and originals as well. A lot more to talk about, Carol. Markets and the economy coming up here on Bloomberg.
Hi, I'm Lisa Mateo, introducing you to the new Stock Movers Report from Bloomberg. These are short audio reports, 5 minutes or less, delivered right to your podcast feed throughout the day. Stock Movers fills you in on the day's winners and losers on Wall Street and tells you about the news and data that's driving those gains and losses. If you want to stay plugged into the stock market but don't want to spend all day watching tickers scroll across your screen, then Stock Movers is a place for you to get informed. Listen a couple times throughout the day to find out what's moving equities and why. Search for Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Nathan Hager. European leaders are urging President Trump to press for a ceasefire and a meeting with Ukrainian President Volodymyr Zelensky when he goes face-to-face with Russian President Vladimir Putin in Alaska on Friday. The allies held a call with President Trump this morning. We get more from Bloomberg News senior writer Stephanie Baker.
This summit in and of itself is a huge victory for Putin. He's an indicted war criminal under U.S. sanctions being welcomed on U.S. soil. And the symbolism of holding this in Alaska is not lost on anyone.
Bloomberg's Stephanie Baker reporting. President Zelensky says any peace talks with Russia should be backed by sanctions pressure. Treasury Secretary Scott Bessent says Europe should put up or shut up, in his words, with sanctions of its own.
There's this Russian shadow fleet of ships around the world that I think we could crack down on them.
Secretary Bessent was a guest on Bloomberg Surveillance. The EU has imposed 18 rounds of sanctions on Russia since its invasion 3.5 years ago. Secretary Bessent is also adding pressure on the Federal Reserve. He says the central bank should have cut interest rates by at least 1.5% by now. He says Chair Jay Powell is living up to President Trump's nickname of too late.
I think the reason that the Jay Powell gets the nickname too late is because he wants to go into a series of rate hikes. He's not willing. He's not Alan Greenspan, who was very forward thinking. They try to be more data driven, which I think is a mistake.
And Bloomberg's Michael McKee says more data could keep the Fed on hold, including tomorrow's producer price index.
This should be interesting because we'll see if there are any kind of intermediate good tariff increases that are going to show up in the data. There is a feeling that we are going to see some inflation there compared with what we got in June when prices were flat.
That's Bloomberg's Mike McKee. And Secretary Bessent also says he's adding more private sector names to his list of candidates to succeed Powell as chair. Bloomberg News has learned those names include BlackRock's Rick Reeder, David Zervos of Jefferies, and former Fed Governor Larry Lindsey. Former St. Louis Fed President James Bullard's already confirmed he's on the Fed long list as well. He tells Bloomberg he'd cast a wider net of his own if he gets the nod.
We could make more use of the various ideas that are proposed around the nation from the Fed, and we could, break up the groupthink a little bit more than what it has been in the last few years.
Former St. Louis Fed President James Bullard appeared on Bloomberg Radio and Television. You can hear that conversation and our one-on-one interview this morning with Treasury Secretary Scott Bessent. Find it all on the Bloomberg Podcasts page on YouTube. The Trump administration has scored a legal victory in its push to cut off billions of dollars in foreign aid. A divided federal appeals panel reversed a D.C. federal judge's decision that the U.S. violated the separation of powers by failing to authorize funds Congress approved earlier this year. This is a big win for President Trump's broader effort to withhold funds from programs that have fallen out of his administration's favor. New York Attorney General Letitia James has filed a lawsuit against the company behind Zelle. In a filing, the AG says her office found the money transfer app's design lacks key safety features, that its operator knew the platform was vulnerable to scammers. Zelle's parent company is owned and controlled by banks including J.P. Morgan Chase, Bank of America, Wells Fargo, and Capital One. Amazon plans to expand same-day grocery delivery to 2,300 cities by the end of the year. That's more than double the 1,000+ it's in now. Anurag Rana covers Amazon for Bloomberg Intelligence.
One of the things that has happened during the pandemic was Amazon extremely invested to a point that they, changed their entire logistics network. And now when that's complete, or that you could say that's mature, you can add more and more products on top of it because you obviously have the same trucks. You can add more bags to it, etc.
Anurag Rana with Bloomberg Intelligence. The news has Amazon's grocery competitors under pressure. Right now, Walmart shares are lower by about 1.5%. Kroger's down more than 4%. Amazon, for its part, is higher by 1%. This year's U.S. Open could be even more of a hot ticket. Venus Williams, at the age of 45, has won a wild card invitation to play singles at Flushing Meadows, marking her return to Grand Slam competition after a 2-year absence and making her the oldest American singles competitor at the tournament since Renee Richards in 1981. Singles begins at the U.S. Open a week from this Sunday. On Wall Street, stocks continue to point to more records. The S&P 500 is up 0.2%. The Dow is higher by 0.8%, and the Nasdaq Composite's higher by 0.1%. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
Hi, I'm Lisa Mateo, introducing you to the new Stock Movers Report from Bloomberg. These are short audio reports, 5 minutes or less, delivered right to your podcast feed throughout the day. Stock Movers fills you in on the day's winners and losers on Wall Street and tells you about the news and data that's driving those gains and losses. If you want to stay plugged into the stock market but don't want to spend all day watching tickers scroll across your screen, then Stock Movers is a place for you to get informed. Listen a couple times throughout the day to find out what's moving equities and why. Search for Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts. Hi, I'm Lisa Mateo, introducing you to the new Stock Movers Report from Bloomberg. These are short audio reports, 5 minutes or less, delivered right to your podcast feed throughout the day. Stock Movers fills you in on the day's winners and losers on Wall Street and tells you about the news and data that's driving those gains and losses. If you want to stay plugged into the stock market but don't want to spend all day watching tickers scroll across your screen, then Stock Movers is a place for you to get informed. Listen a couple times throughout the day to find out what's moving equities and why. Search for Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Get the latest stock news and data backed by reporting from Bloomberg's 3,000 journalists and analysts across the globe. Subscribe to Stock Movers wherever you get your podcasts.
Well, thanks for hosting me. Pleasure to be here. I mean, look, it's a rounding error, as you just said, to be honest. As a company, we are maniacally focused on what is we call our cloud ARR. And that, by the way, beat handsomely. And the cloud ARR was crossed 900 million for the first time, grew 28%. And that's what we're pretty excited about. Overall, we still beat top line. And I think it's a very, very rounding error, as you said, on the bottom line, which is marginal in the course of the large full year in front of us.
You obviously have a pending transaction, and I'm interested, what are your priorities before all of that closes and is done, a done deal?
Taking care of our customers. I mean, the most important priority for us is making sure our innovation engine remains humming, and we had a great Q2, lots to share over there, and lots coming over the course of this year. We have a big release coming in fall, lots of partnership announcements, and of course, making sure our customers are successful. It was evidenced in our cloud net retention rate of 120% in Q2, and we remain focused on that one.
I do have to ask you, Amit, though, about the potential integration when it comes to the Salesforce deal. I know we're still a long way away from that happening. But when you consider some of the concerns that were first raised the first time around when you two had sort of sought to combine, have those issues been resolved? And is there any potential that we could see any, speed bumps, if you will, in the completion of this merger?
If you step back, it's all, as you think about in the context of the world of AI in front of us. We do data management, which is the most critical part of where AI will be successful. You've seen the infrastructure stack play out, but for the models and for Gen AI and the application stack to be successful, you have to bring good data, quality data, governed data, and make sure it can be used by end customers as they run the application stack. We do that for a living, and we are the number one in terms of that. We lead in every Magic Quadrant. And when you think about pairing up with Salesforce in the context of obviously not only playing in this part of the stack, but helping Agentforce becoming successful, that becomes a recipe for huge value creation for our joint customers. And that's the principle of this opportunity.
Do you worry at all about any potential customer attrition in this process, given how long it's going to take for this deal to actually be completed?
Well, I want to correct, actually. It was FY27, and Salesforce runs a fiscal year 1 month off. So it's going to be more beginning of 2026, that said, in a calendar year perspective. When it was said 27, it was more FY27 because their fiscal year is a year ahead. So the stated goal for the closure is more around beginning of 2026, which is not too far. Okay. And our customers still remain very excited, as evidenced by our results in Q2.
When it comes to AI and this, excitement that we're seeing in the markets, and it just continues and continues and continues, no matter what happens in Washington, D.C., no matter what happens at the Federal Reserve, what does it mean for your business, Amit, before you even get integrated into Salesforce?
A great question. If you really step back, as I was talking about that, look, for AI to be truly successful, it's all about data. I mean, we talk about Informatica is where data and AI come to life. We have our AI called Claire. And the whole power of that is to make sure we can bring data from any possible source. The more holistic the data, the better is the AI model. Second is to prevent hallucinations, we got to make sure it's good quality data. That's what we do with data quality. And then when on the other side, you want to basically give it in the hands of humans or run it by itself, you want good governance on top of it. That's what we do, data governance. All of our stack is basically growing because of Gen AI. And in fact, last quarter, we really were on a tear. We've launched our Claire GPT and Copilot are already out. We got the agents coming out later this fall. We announced more partnerships with Databricks, Snowflake, Oracle, NVIDIA in particular, along with expanded partner with Salesforce. We are firing on all cylinders to also expand the ecosystem because ultimately it's going to be all about managing the data for AI to be successful.
Amit, how confident are you, I suppose is my point, that you can, hold up the pricing model that you have and continue to charge customers what you have been charging them?
Well, look at it like our consumption pricing is evidence in the context of how our platform is used. And our IDMC platform, the usage of that grew 30% year over year to 128 trillion transactions a month, which means more and more customers are using more of our offerings. And that's what basically allows us to be more and more confident that our pricing model not only stays because we create value. It's evidenced by these numbers that I just shared.
Hey, so Amit, I am curious just to get your thoughts more broadly. This is less about Informatica specifically, but more broadly, just about the health of that software ecosystem and the demand that's going on out there, and whether that demand is a little bit more lopsided, given, of course, all the attention on AI and all the chase for AI. Is the demand in aggregate healthy? And more importantly, is it broad-based?
Yeah, I think great question. Look, what is happening is that there is phasing in demand. A lot of work is going on at the infrastructure layer, as you can see with the NVIDIAs and AMDs. A lot of work obviously is happening in terms of the models and of course the consumption of those models that's sitting on the hyperscalers. But as you see the app stack and the real work happening in enterprise, you're seeing now value creation coming towards the data layer, which is where we play. And you will see more of that happening. And that's pretty similar to what happened in the world of cloud before, where infrastructure went first and some of the other layers like data came later. And we are seeing that. And I see enterprises, it's not a matter of if. Everybody is doing. Now, they are not in full-scale production. They're basically what I call partial production, POCs, pilots. I look at towards the end of this year or beginning of next year, and 2026 will be a watershed year for true productions and enterprise segment in particular happening. And I'm seeing that as I talk to our customers across the globe, by the way.
You guys mentioned the anti-involution drive just now, how to reduce excess competition. I do think we have to be quite careful with this theme because if you think of the whole supply chain, whether it's batteries or EVs or any other products, the demand is the ultimate driver of profitability. If the demands are the end consumers are not spending more, you're basically just reshuffling earnings along the supply chain. So you might benefit one part of the supply chain, but the other part gets squeezed. So again, I think it's not going to benefit everyone. It's going to be more a sector by sector or different segment of supply chain that you have to choose from.
Okay. And is it good to chase some parts of those sectors then now in this rally? That seems to be you seeing it, right? It's the solar, it's basically commodities one day, and then it's food delivery the other. Do you chase it?
I think it's going to be quite challenging, especially with policies coming out, every other day. But at the same time, I think you have to ask the question if, for example, in EV or battery technology, what is the role of pricing and volume and technology? For example, in battery technology, the market leaders are there not because they produce the most, but because they've got the best technology that can carry the industry forward. In EV, obviously, you've got the giant, I can't name names, but you know who it is. Yeah. And then the question then becomes, who will benefit if the level of competition does come down? I suspect it's going to be the one level down, not the small companies that are struggling right now. Those who are struggling today could still face elimination 1, 2, 3 years down the line. So I think it's going to be a case-by-case, sector-by-sector selection when it comes to looking for opportunities when the government is looking to reduce excessive competition. And the reality is, anywhere in the world, much of the policies have been trying to promote competition. There's been not a lot of research or academic work done on how to regulate or reduce competition. So I think this is a right call, but it's also quite an adventurous call in managing this type of competition.
Well, hundreds of residents poured onto streets in Jiangyou, now in the southwestern province of Sichuan in China last week, and clashing with police officers. And the protest was sparked by anger over police handling of a case of a schoolgirl attack that was circulating on social media. Let's bring in our China correspondent, Min Lo, to bring us up to speed about this story.
Yeah, so it started on August 2nd when this video started circulating online, and it showed this schoolgirl, 14-year-old girl, who was being attacked by multiple other girls. It was extremely brutal. She was kneeling on the floor and they were kicking her repeatedly from the back, from the front. They were slapping her, verbally abusing. And it's so hard to watch. I actually couldn't bring myself to finish that video, but it's a very painful video, and it sparked a lot of outrage online. People were concerned about how authorities would respond, and it took over a day for the Public Security Bureau to respond, and they said that the victims' injuries were mild. 2 of the attackers were being asked to undergo corrective education, and I think people were up in arms about the characterization of the victims' injuries, because it was very clearly not mild. Here you can see the social media footage of the clashes with police, because soon, hours after that official statement came out, people started surrounding the local government building, and it just gathered momentum. And by the evening, there were hundreds of people there. The police were out with the batons and were manhandling some of the protesters and taking at least a few away, according to the videos that we have seen.
Yes. It's rare to see this, right? A sort of protest in China. It brings me back to what we saw during the COVID-0 lockdowns, also when it came to that during the housing crisis and the like there. But certainly, can you tell us a little more about whether this is an isolated incident or not?
Yeah, as you said, we do see protests quite often in China, but usually it's tied to economic events. Yes. It would be, property disputes or employment disputes. So it's actually quite rare to see protests related to social justice. In this case, it was revealed that the mother was deaf, so it really heightens that sense of inequality. And it's not isolated in the sense that in the last couple of months, there have been a few big incidents. There was a lead poisoning case in a kindergarten in Gansu province, and then there was this case in Hangzhou where there were brown liquid coming out of bathwater taps, and it took a while for the state-owned water company to respond. And in both of these cases, not that there were protests, but there were a lot of discontent online. And in all these cases, the local authorities would put out a statement to refute some of these public concerns. And analysts say that this approach has not been working, right? Because it seems like for China, it's so important to maintain social stability that the first instinct for local officials is to cover up these things in order to not risk their political careers. And it's interesting, if you watch the video, you can hear that some of these protesters, they were singing the national anthem in a way to perhaps show that the target of their anger is not the central government, it's the local officials, or you can interpret it as a way to protect themselves, maybe to cast themselves as patriots here rather than the provocateurs.
This is Wall Street Week. I'm David Weston, bringing you stories of capitalism. President Trump managed to get a slew of tariffs in place, either unilaterally or by agreement, before his August 1 deadline. But at least so far, we haven't seen them do much to the economy. We explore what CEOs of major companies are doing to make sure their business stays on track despite the tariffs. And we get a somewhat different perspective from the head of a modest-sized textile company in Colorado that counts heavily on imports and exports. Plus, not everyone is welcoming all those data centers with open arms. We travel to Warrenton, Virginia, a town where some are concerned about what they will mean for their community. But we start with another uncomfortable truth linked to AI, the possibility that this time it really is different. Different in what technological change is doing to recent college graduates trying to start their careers. There is no question that AI is here to stay. Just last month, we reported that Anthropic, a company that didn't exist 6 years ago, could be worth more than Nike or Starbucks.
Anthropic, 170 billion, XAI in talks for 200 billion, and I think there's nowhere to go but up.
And there's no question that at least some employees stand to make a great deal of money for their ride on the AI train.
Apple's top executive in charge of AI models is leaving for Meta Platforms.
I'm told his pay package is probably somewhere north of $200 million.
We have never seen anything like this before, and there's a lot we don't know about what it will do for business and the economy. But we do know that leaders of the world's largest and most powerful firms expect a tidal wave. They are preparing for it. And already, some people are feeling the effects on the ground right now. People not at the very top of the corporate ladder, but those trying to get a step on the bottom rung. This year, Jacob Ayub and Tiffany Lee are joining millions of their fellow college graduates trying to get their careers started.
This is just one of the case studies that I've done, but it's pretty representative of what you can expect if you're applying for any full-time role at a private equity company. Luckily, Boston College does a really good job of setting that financial background. We've done in-class DCFs, in-class LBOs.
Here's your iced matcha skim milk.
Thank you.
Thank you. Have a great day.
You too. I have a few case studies on my portfolio just showcasing the work that I've done at school for the companies and nonprofits that I've worked for. The last experience I have is another contract role with a startup that I did through a club at Cornell as well.
They have studied different subjects at different schools. Tiffany, Information Science and Psychology at Cornell. Jacob, Economics and Finance at Boston College. But the two graduates have a lot in common. They both got good grades, networked widely, and landed prestigious internships. Tiffany at Apple and Jacob at a boutique private equity firm. And for both, it has yet to add up to a job.
Since graduating college, I would say I've applied to around 200 jobs.
I would say I've applied to about 150, maybe more now.
Some of the interview processes consist of constructing models and valuations. Some of them are pitch decks.
I made it to the final round for one big tech company. Didn't end up getting it. I'm past round 2 for another one, and the other ones I either haven't heard back or just ghosted. Yeah.
It's a story that's becoming more common, and it's being reflected in an unusual new trend in the economic data. As far back as the numbers go, the unemployment rate for recent college graduates has been below the rate for all U.S. workers. But over the past few years, unemployment among recent grads climbed above the rate for the broader population.
This is essentially the first time on an ongoing basis that this has occurred in the 45 plus years that we have data going back to.
Matthew Martin is a senior economist at Oxford Economics.
So really this is pointing towards a lot of people who have that higher educational attainment are actually worse off than many of their peers who have lower educational attainment. That's an interesting dynamic to have in a market where you're told you go to college, you work hard, you'll have a job after graduation. And unfortunately for many at the moment, that's just not happening.
Recent college grads may be having a harder time right now finding their first job, but it depends in part on what kind of job they're seeking. Entry-level jobs in the areas Tiffany and Jacob want, tech and finance respectively, turn out to be particularly hard to find.
A lot of my peers who were in years advanced from me and trying to give me insights on how the process worked all either had internships or were in the process of getting them or had full-time offers. And these are sometimes people that are just juniors who have a full-time offer at a bank or a different firm. And I think with my graduation class, there's been a pretty drastic change. I'd say about 50% of my graduating class is unemployed.
I see a lot of job descriptions that are asking for 2 years of experience or 3 years of experience. And in design specifically, it's been pretty hard. I think it's just a very saturated field, and there's a lot of talent out there.
Tech is one of those that has been really slowed down. A lot of that comes down to the hiring boom that they did post-pandemic and them looking to right size. You also have other mathematical occupations in finance, legal, some of these fields that you would, again, have been in high demand over the last couple years that just aren't seeing as much.
Economists say the reasons can be difficult to trace. Some of it is likely the overall labor market cooling after the post-pandemic hiring surge. But now there's a new cause coming on the scene: artificial intelligence.
AI will leave a lot of white-collar people behind. All junior-level jobs in any industry are at high risk.
This is like a tsunami hitting the labor market.
For months, economists and executives have been raising concerns about AI or publicly embracing it, sometimes both. Amazon CEO Andy Jassy wrote a note to employees in June saying that AI would change the way work is done at the tech giant and that jobs would be cut as AI increased efficiency. Anthropic CEO Dario Amodei told one news outlet that AI could potentially wipe out half of all entry-level white-collar jobs and send unemployment rates surging. We may not be seeing anything quite that bad yet, but AI's impact does seem to be showing up in unemployment figures for recent college graduates.
I think there is definitely a link between the two. It's hard to parse through and just say, X amount of this issue is because of AI, X amount is because of just slower demand overall. But when we look at the numbers, there definitely could be a connection there. So one of the things we're seeing is that the tech sector is one of the industries with the highest adoption rates of AI. They have around 25% adoption rates for all businesses using it in their day-to-day operations, whereas the national average is around 5%. So clearly the sector is just using it more in general. And then when we look into specifically the recent college graduate data, we see that in the last couple years, employment for recent college grads, 22 to 27, they've seen a decrease in employment opportunities overall. Whereas if you look in the same fields for those 28 and onwards, they've actually seen, slightly flat to maybe a little bit up overall.
A similar story appears in the latest company hiring data. An analysis by Indeed, conducted for Wall Street Week, shows junior-level job postings have tumbled over the last 2 years and are now 21% below their pre-pandemic level, even as senior-level openings are up. Although tech may be one area where AI is particularly affecting entry-level positions, it's not the only one. As Martin says, they see vulnerability in finance jobs like the one that Jacob is seeking. To learn more, we sat down with Blair Efron, co-founder of Centerview Partners, one of the world's most prestigious investment banks. We see an awful lot of money being invested in AI. Are we far enough into the process now to know whether it's going to work? Now, obviously, there are different ways it could work, high, medium, low, but do we know it's fundamentally going to work, that there's no chance this is a bubble?
So it's not a bubble. I am always a believer in progress. AI is progress. Over the long haul, it'll be good. In the short term, I have big concerns. I believe the impact on employment is going to be dramatic, sooner than we think. Now, with that said, AI, for us as an example, is a positive. We're less focused on productivity, more focused on freeing up someone's time so that they can use that time more productively. But given all the positives, we have to absolutely look out for the watch-out sign. What is going to go on with employment?
One outcome could be a workforce that looks very different than it does today. Fewer jobs in computer science, finance, or law, and more jobs that benefit from interpersonal interaction. Matthew Martin says these trends are already showing up in the data, whether or not they can be traced to AI, and they are affecting men and women differently.
While the recent college graduate unemployment has raised overall, it's really been concentrated in males specifically. A lot of that comes down to, what industries are they looking to work in. If we do a quick breakout of the industries of recent college graduates, females tend to move towards healthcare services and educational services where demand's quite high. I think between those two, they account for over 40% of recent college graduates for females, whereas males specifically in healthcare services only accounts for around 5%. So it's an imbalance of what positions are these males versus females going into. Males tend to skew towards these computer science professions, whether that's programming or the tech sector just in general. That's closer to 20 to 25% for them. So you just have this imbalance of males tending to want to go to these industries where demand is really low at the moment, whereas females are entering industries where demand remains quite high.
Although a picture of AI's economic impact may be just starting to come into focus, we can be sure that the best and the worst are yet to come. Some advice from the C-suite to help the next generation prepare: stay flexible and develop the skills that remain, so far, uniquely human.
Broad-based thinking, deep thinking, and there are just so many different fields and so many different kinds of enterprises, big and small, that will help you do that. Widen the aperture of what you think might be a fit. Taking a lot of writing courses, a lot of humanities, learning how to think critically, learning the art of learning, curiosity, thinking about judgment, thinking about coming out with an output, an answer based on facts that is contrary to what a model may show you. This is what we need, because this is what I think will never get out of style. Judgment's not going out of style.
The benefits of AI in the long run may well dwarf the problems. But when you're in the middle of that first job search, the long run may seem very far off.
You put in a lot of work starting from high school. You get the right SAT score, go to the right college, get internships, get experience. You come out with kind of an uncertainty.
It kind of makes me want to consider a master's, but I know that it's really expensive, and I just don't know if it's worth all that money just to get an entry-level job.
It's more so frustration towards the system and the overall process, but you also start questioning your underlying abilities.
Jacob and Tiffany, it seems, did everything right. And it's not quite that they're falling behind, but that the entire world is shifting under their feet. The rules have suddenly changed. And what are those new rules? For all of us, that still remains to be seen. Coming up, we hear more from Blair Efron, this time not on what AI means for corporate leaders, but on what those leaders are doing to make sure the Trump tariffs don't disrupt their businesses. This is a story about adapting. Charles Darwin taught us that it is not the smartest or strongest that survive, but those who are best able to adapt to the changing environment. And when it comes to CEOs of major companies, there's no question that President Trump's approach has changed their environment. Blair Efron, co-founder of Centerview Partners, has watched them adapt. President Trump came to office saying, I'm going to change the economy in fundamental ways. Has it changed the lives of American CEOs?
Much less than you think. And the fact of the matter is, they were growing well under Biden. They're growing well now. What is that about? For the most part, the U.S. economy, in my world, the big company CEOs, big company senior executives, they've learned to, one, operate quite apart from policy in Washington, and two, they have been operating in a period of volatility for so many years now, they've just gotten much better about how to remove uncertainty in their own businesses. However, CEOs certainly talk about long-term impacts of policy, and what I hear about most more than anything is our federal debt situation, which is clearly dramatic and clearly something that at some point will create a problem.
CEOs may have the tools to adapt to short-term changes in trade policy, but they may not have the same ability to do anything about the U.S. fiscal imbalance over the long term.
2010, Simpson-Bowles put together, talk about the debt. We had $16 trillion of debt then. We're heading towards 40, 3 times what we had then. $1 trillion of interest expense being spent by the government. That's almost 20% of what they do, more than they do on defense. That is something that CEOs are attuned to. They know that if it wasn't this crowding out effect, you could have even more growth. They would benefit.
President Trump's goal in imposing substantial tariffs on imports is to move manufacturing back on shore. And so far, Efron sees them as having mixed results.
It goes two ways. I think you have to start with what is the most secure way to help your supply chain. And that certainly can be onshore. It certainly can be to more friendly markets in Southeast Asia. It can certainly be to Mexico. It's been going both ways. I know of a company that services Canada with its plants in Michigan. It's thinking about putting capital in Canada because of what's going on so they can produce locally. So it actually goes both ways. And the kind of manufacturing we're talking about, for the most part, is a very advanced manufacturing. So it's not labor intensive. It's not people in a plant. It's the equipment. So I think that on balance, it's hard to talk to any CEO who thinks that tariffs are a good thing and that high tariffs won't have a dramatic negative impact.
There's a good deal of talk about uncertainty and the uncertainty over everything from tariffs to who's going to be the Fed chair to interest rates. Now, does that really affect the real economy?
The answer is clearly not. Okay? And CEOs have gotten so good about blocking all noise from all political quarters. They focus on facts, substance, real policy. They know that something said today by any elected official doesn't mean much unless there's consistent to it and staying with it, and they just block out the noise. That CEOs, for the most part, are really experienced, really talented, and have been through the volatility wars. But the reason I have been, and we've talked about it, more optimistic about the economy is because of that. And I believe, I can make a case for dark clouds well down the road, but barring some unforced error, which certainly we are prone to make, I think the economy will continue to show tailwind and resilience.
That tailwind may look a bit different in New York City, where New York State Assemblyman Zohran Mamdani is in a strong position to become its next mayor and is running on policies not generally seen as pro-business.
So let's first talk about New York. $1 trillion economy, 63 million visitors, 10% of every student graduating college comes to the city. New York will be fine. That said, the mayor, whoever that person is, needs to be mayor for 8.5 million people in every borough. It has to be a mayor who appreciates what it means to attract business formation, what attracts capital formation, what it means to keep people in the city and thriving. For example, Zohran Mamdani, he's going to have to make the choice whether he wants to be mayor or whether he wants to be an effective mayor. And I believe to be an effective mayor, a talented political official, and he's talented, will have to be attuned to that. A lot of us met with him in the business community the other day, and clearly, one, it was a worthwhile meeting. He listened. Courageous for him to come to this group. The questions were pointed. And my goal is that the more he hears from the business community and how the business community helps drive the engine of New York, along with many other communities here, the more he, if he is the mayor, will appreciate that he needs to be the mayor for everyone.
Having heard from him directly, do you have a sense that he knows what he doesn't know? Because that may be one of the most important things in life, to really say, there are things I don't know I need to learn.
I would say I don't know. However, I'm going to make a judgment. He has said publicly in forums where I've been, just that he wants to get the best people in every position, people who know more about that particular area than he does. He strikes me as someone who is absolutely willing to learn, and I don't think you can do as well as he's done as a candidate without that ability. Whoever the mayor is, I hope really appreciates that the skill set of a mayor, as opposed to somebody in Congress, is less about policy and more about making sure day to day the city is affordable and livable.
It's hard to be against it being affordable and livable, but as far as I can tell, an essential part of governance is unintended consequences. For example, we can say we're going to freeze rents, which sounds good for people who are renting, but it doesn't necessarily give incentive for building a lot more units. Will bring prices down. Is he learning? Can he learn those sort of unintended consequences? That, in fact, the best way to make things more affordable may not be the most obvious way.
So let me be very clear. I don't know yet, nor does anyone, what he's learning. But make no mistake, rent control will reduce housing stock. Putting a grocery store in each borough, that's 5, relative to the 2,500 grocery stores we have in the 5 boroughs, doesn't do much. Let's be clear. Anyone here is already paying a lot of tax. It's a privilege to live in New York. There is a point where, and we see it in studies, it has an impact if it gets out of line with other states. So the point is, we all need to focus on affordability. I think he is spot on. But to your point, there are many ways to attack it. I think we need to be much more focused as a city to do just that.
You make a powerful case for why New York will be just fine in terms of the economy overall. But do we need in New York City to be more concerned with competing with other centers around the country, around the world, but particularly around the country, than we have been in the past? We've heard a lot of talk about moving to Dallas, about moving to Miami. Is that a real issue for New York City?
Is it a real issue? Absolutely. Have we risen to the challenge? You bet. New York is stronger today than it was 4 years ago. We have more people coming in than not. We have the second biggest tech hub in New York City. We have more drugs and healthcare coming out of here than any other city but for Boston. We're doing fine.
Where is the Democratic Party right now, and what do you see as its forward path?
Great question. I think the Democratic Party is a work in progress, and the next test will obviously be in a few quarters, November 26th. What I can tell you is, as a party, Democrats ought to have the base case that the economy will have a tailwind, ought to have its base case, therefore it has to be much more about what the party's for, not what for the other guys for. And when I think about that, the party has to do a much better job diagnosing what the issues are, coming up with solutions that meet the needs of all Americans. I don't think we've done a very good job. Focusing on affordability in a very practical way, understanding that policy should be driven from people up, not from thinkers down, and has to clearly be much more unified about how that's going to happen. I think that has been an issue for us. I do find parties in general are pretty nimble about course correcting, whether they're Republican or Democrat. I assume by the time midterms come around, Democrats will have figured out how to course correct, but it better be not just an agenda based on fairness, as opposed to fairness and growth.
Who will help guide the Democratic Party away from a very obvious alternative, which is to go to the other extreme? I mean, some people think we're seeing that right now with, you could name names, AOC or Bernie Sanders or even Mamdani. There's a natural reaction to say, okay, we got to compensate. If we've got right-wing populism over here, let's go left-wing populism. How will the Democratic Party avoid that if, in fact, it should?
So I'm quite confident that the Democratic Party has enough voices across the spectrum that by the time we get to the election, we will have a strong group of candidates, will reflect the thinking of most Americans, which is less about political ends of the spectrum, more about just getting tomorrow food on the table, getting a good job, raising your family the right way. And I believe that the party always should focus on all ends of the spectrum, but I do believe it'll end up unifying on what matters most, solving people's issues.
Next, we turn from the C-suites of some of America's largest companies to one specific modest-sized company that depends on imports and exports for its textile business. We go to Bend, Oregon, and hear from Jeff Bowman, CEO of Kokona Labs. This is a story about friendly fire. President Trump has embraced tariffs as a way to protect domestic U.S. businesses from unfair foreign competition.
I might go up with that tariff in the not-too-distant future. The higher you go, the more likely it is they build a plant here.
Last week, we brought you the story of a music accessories company that is finding new ways of getting the supplies it needs and maintaining its export business despite those tariffs. But for some industries, that's easier said than done.
Already it's impacted our business because it's reduced the amount of volume of business that's out there.
Jeff Bowman is the CEO of Kokona Labs, which makes a compound used in fabric.
We have a technology called 37.5 technology. The purpose of it is to remove humidity from the microclimate next to your skin. That helps you stay more comfortable in both warm and cold weather conditions. And it helps you operate at a peak performance. If you're an athlete, you can operate at peak performance longer. And what we do is we mine a mineral in the United States. Essentially, it's a volcanic sand. We convert that into what's called master batch, which is a concentration of that mineral that's then put into the spinning operations for things like nylon and polypropylene and polyester. They make filaments and yarns out of that. Those yarns and filaments are then made into fabrics. Those fabrics are made into clothing or bedding or footwear. And we make money by selling the master batch, which we make in the United States. Primarily, we export that because most yarn spinners are outside of the United States. And then we also license the technology to brands that use it. Sleep Number for bedding, the Men's Warehouse for clothing, Solomon for technical clothing. If they're hunters, they know First Light. So there's well over 100 brands that we license the technology to.
And that's a proprietary process?
It is. It's very difficult to take a water-loving mineral and put it into manufacturing operations that hate water. So we have patents on it and a ton of trade secrets. You know, we're very cognizant of keeping those trade secrets secret.
The United States is the world's second largest exporter of textiles. It used to be first, employing 1.5 million workers. But now it employs only about 470,000, as China has risen to become the #1 producer.
We do have customers in the United States. Generally, the spinners outside the United States are more competitive from a price standpoint, and they've got more capacity, more infrastructure. You know, decades ago, most of that did reside in the United States. It eventually moved outside of the United States. China, at one point in time, decided that it was a strategic industry. So they worked with their business people to develop that infrastructure. And now that's primarily where most of it's done today. India is also a big export country for us as well.
The tariffs being imposed by the Trump administration affect a textile business like Kokona Labs, both in the cost of its raw products and, ironically, in its exports to places like China.
People are not placing orders because they're uncertain in terms of what the ultimate pricing is going to be. I spent this morning, all morning, talking to my team about a business that we're working on right now with one of the largest hotel chains in the United States. They're looking to incorporate our technology in their bedding. And one of the questions that we're getting from our Chinese partners who would be spinning the yarn for that is how should they price the yarn based on the tariffs? And of course, that's a very difficult question for us to answer. We did export some product to China last week. We ate the tariff ourselves of about 16.5%. We actually ate 10% of that. Previously, there was 6.5% tariff in place already. So it's kind of a wait and see right now. But in the short term, it is reducing the amount of business that's out there. And it's reducing the amount of investment that people are willing to make in new products. Specific to us, because we're a small company that exports as opposed to imports, from China and India and those other places, the reciprocal tariffs also impact us. And when Trump first announced, the large tariffs on China, China retaliated with a 145% tariff. That would have been a killer for us. It would have killed our business. We just happened to have a bunch of our product in our Shanghai warehouse at the time. So within 36 hours, we were able to sell that to our customers, move it out of the warehouse, and that bought us a few months tariff-free. We're waiting to see what's going to happen with the tariffs. It impacts our business, in several ways. We're also trying to develop a domestic business in those countries. So this shirt is an example. It's a shirt made in China, and it's sold to Chinese customers. And when the price of the yarns increase, then it impacts the price of the finished products, and it impacts our business.
They charge us, we charge them.
In pursuing his approach to tariffs, President Trump has said again and again, one of his main goals is to bring manufacturing back on shore in the United States. Would that work out that way in your business?
No, definitely not. You'd have to cut and sew this garment or bedding or any other garment. You'd have to make that garment in the United States. And people just don't want those jobs, number one. And number two, the cost of labor here is so much higher that the price of those goods would dramatically increase if they're made in the United States. So it would make everything much more expensive. Even the deal with Vietnam is a case in point. I don't think most people understand that those goods coming into the United States already had a tariff on them. In the case of clothing coming from Vietnam, as an example, there was a 16.5% tariff before Trump. With the additional 20% that was just negotiated, that means that there's a 36.5% tariff on apparel now coming into the United States from Vietnam. Some of that's going to get passed on. There's no question about it. So the price of goods will go up. With the increase in the price of goods, the amount of business will go down. Trump and I both went to the same business school, Wharton. And apparently he didn't take the tariff class because certainly the teachings and the empirical history shows that when you impose tariff, the net effect is that you reduce the amount of business that takes place. And we're seeing that happen already. Costs go up, consumers pay the price eventually, and there's just less business being conducted.
Whatever proves out from President Trump's tariffs, at this point it appears there are going to be tariffs. We already see 15% effective, and in some places it could be higher than that. So assuming that happens, let's assume for a moment it's 15 to 20% effective tariff. What do you do to change your business to make sure it's still a good business, it's viable?
Well, what we have been doing is, number one, making sure that our customers have options. So we ship master batch around the world. We ship it to Turkey, we ship it to India, Taiwan, China, Korea, et cetera, making sure that they have options so that so we can mitigate the tariffs, hopefully, in any one country. That's the first thing that we're doing. And second is, we're looking at, in some cases, potentially moving some of our manufacturing out of the United States into China, something that we're loath to do, just to reduce the reciprocal tariffs that are being placed on our goods. Ultimately it will help with the cost of goods coming back to the United States. It'll certainly help even more with the goods that are being sold into those countries. We're worried about tariffs. Candidly, we shipped a master batch to China 2 weeks ago. We paid 16.5% tariff on it. We ate 10% of that. That's not sustainable for us long term. We'd have to raise our prices. When we raise our prices, it will ultimately affect the amount of volume that's being sold. So it's not good.
How elastic or inelastic is that demand for your product? What pricing power do you have to pass along some or all of those increases?
We have to pass on some, otherwise we'll go out of business. And there's that trade-off, and that's in fact what I was talking about this morning. Our Chinese partners are trying to figure out how to price their yarn for this very large hotel chain opportunity. And they want to know how to account for the tariffs. And we don't have an answer for them, candidly, other than to tell them that we're not going to eat that tariff. We may eat a portion of it. I think we're waiting to see what ultimately happens and what the tariffs actually end up being. And then we'll adjust accordingly as best we can. There will be collaboration, I'm sure, throughout the supply chain. Ultimately, you'll see higher prices at the consumer level.
And if, in fact, these tariffs continue, what's going to happen to your employment situation?
In general, we don't lay anybody off. We were actually voted one of the top 50 small companies in the United States to work for last year. So, we value our employees greatly and try to hold on to them, definitely. During COVID, everybody took a pay cut for a period of time, just so that we could survive. So we'll do what we have to do to survive. We'll do what we have to do to hold on to our employees. Ideally, we'll do what we have to do to continue manufacturing in the United States. We're very adaptable.
As difficult as the tariffs may be for Kokona Labs business, Bowman does believe they deserve to have a role in economic policy, just not quite as broad a role as they are being given.
If you got to sit down with your fellow Wharton graduate in the White House and give him a piece of your mind about what he should be doing, what would you advise him?
Well, I think tariffs are a strategic tool. I think if they're used surgically, they can help. I think broad brush tariffs don't work, in my opinion, so I would encourage him to be surgical about it. We're a small American company trying to do business in China, where historically there has been very little tariff of our goods going into China. It's still very difficult to do business in China because of the non-tariff barriers to doing business. Things like the banking laws and the marketing laws and the administrative issues that you have to deal with on a daily basis. And it's not clear to me that this tariff war that we're in is going to impact any of that. All I see happening is that we're going to increase the price of goods coming into the United States. We're not going to address the fundamental issues that are making it difficult for companies like mine to do business in places like China. And that's those non-tariff barriers to doing business.
Whether it's to break down barriers to U.S. exports or to discourage production abroad, one of President Trump's main goals is increasing U.S. manufacturing overall, something special contributor Larry Summers of Harvard says tariffs will not accomplish.
This isn't a debate about whether manufacturing is important or not. That's an important debate to have as we go forward. But even if you take as given the central importance of cutting-edge manufacturing, taxing inputs, alienating partners, and enraging those who control the external markets can't possibly be the right strategy for rebuilding American manufacturers. Look, take another way of looking at this. We think of automobiles as like a traditional industry that we're trying to protect in a good way. But this is slashing General Motors' profits. This is slashing, all the automobile companies are complaining about our tariff policies because what they mean for integrated production in North America. So even for the people who were the traditional constituency for this kind of policy, they're not seeing it as a positive. So this is not some debate between the coastal people who like finance and movies as businesses and the people in the middle of the country who are focused on the heartland of manufacturing. Even if you just look at what you're doing for the heartland of manufacturing, higher priced inputs, much more uncertainty for investors, and alienating of customers can't be the right strategy. There's a winner here. There really is a winner here in the strategy that we are pursuing. His name is Xi Jinping, and I hope we'll stop.
Up next, data centers may be the path to an AI future, but what if a community isn't sure they want more data centers? We go to Warrenton, Virginia to find out. This is a story about needs and wants. Sometimes what we need may not be what we want. We need more productivity from AI, but we don't want young college graduates going unemployed. And at least some of us may not want our local communities transformed by the building of all those data centers we need for AI.
Warrenton is a tiny town, 10,000 people. Picture Norman Rockwell picture Mayberry and Andy Griffith.
Cindy Burbank lives in Warrenton, Virginia. She took us to what would have been a data center.
Down this weeded pathway is the 42-acre site that Amazon purchased to build a data center on.
Without data centers to process, store, and distribute information, we don't have AI. With everything from internet search,
we are on an exponential curve, and a relatively steep one,
to drug discovery and approval.
It's going to propel the biological research, AI, in unprecedented ways.
To reap all the benefits AI has to offer, global data center capacity is expected to grow at a rate of 15% per year, and even that may not be enough to keep up with demand. Christine Wood is the data center practice lead at Burns & McDonnell and consults with companies building data centers.
Power is becoming the long pole in the tent to be able to find a data center site. And so it really starts with that, is the power puzzle that we're seeing associated with the data center sites.
But supplying all that power can cause disruption to the communities where data centers want to be located. Not everyone wants a data center for a neighbor.
We're situated about 45 miles to the west of Washington, D.C.
Carter Neville is a native of Warrenton, Virginia. He has been the mayor of the town since 2019.
We are heavily dependent upon our meals taxes, and our largest meals tax provider is Chick-fil-A. We are very fortunate to have, as residents, very low taxes in terms of real estate taxes. And so pretty much our largest employer is the school board, followed by the hospital and Walmart.
Warrenton's data center journey began in 2023 when the town council voted to consider an Amazon data center on a 42-acre site.
On the upside, to provide a significant amount of revenue, which we are desperately in need of. Our infrastructure is aging. We're behind the eight ball in a lot of our improvements needed to our water treatment and wastewater treatments especially. We have parts going back that can't even be produced anymore, parts dating back to the 1950s, and we're in desperate need of upgrading that facility for the safety of our community.
But even the economic benefit couldn't outweigh the town's concerns.
Our frustration was the fact that we were being kept in the dark. Then finally, a year and a half later, we learn about it because Dominion is proposing these massive transmission lines. And that is what was like throwing a match onto a powder keg. The citizens exploded, and first against the transmission lines in Dominion, and then they learned it was tied to the data center. Then we learned from our neighboring jurisdictions what data centers were and the impacts they had. A lot of noise, huge energy generation, monster size to dominate your landscape, and bringing transmission lines and other problems. We did a Freedom of Information Act for the town records. How many people spoke up or wrote in support of the Amazon data center? How many opposed it? And the result was, I'll show you this number, 2,389 of our citizens, our residents, took the time to oppose the data center. They came to the town council meetings, they wrote emails to the town council, and so forth. Only 11 people here wanted that data center to happen. And yet we were ignored because Amazon had cut a deal with our elected officials before we even knew about it.
As the opposition grew, it got very, very heated. It got very, very emotional. I think that there was a lot of information that was selectively put out to the community. And so by the time it came to a vote, it was a very divided community. And I'm grateful for the council members that had the courage to do what they believed was right.
Last month, Warrenton's City Council voted unanimously on a zoning change that effectively bans data centers altogether. Among the citizens' concerns is the amount of power a data center needs, which would eat up their own access.
I think the biggest concern, and the one that the industry itself really needs to address, is the energy usage. That is just huge. And that is something, as I've pointed out to many people, the data centers are coming. Whether one community says yes or no does not ultimately impact the demand on energy. The industry and the energy producers have got to figure that out. They've got to find a better way of providing that energy without hitting the ratepayers like you and me.
15 years ago, a 12 megawatt data center was a huge data center. Now with AI, what we're seeing on the development side is more than a gigawatt on the campus. And to put that in real terms for you, I'm sitting in Dallas. Dallas takes about 3 gigawatts to 5 gigawatts, depending on the time of year, to power the entire city.
One alternative to drawing the needed power from the grid is small modular nuclear reactors, but even they may not be enough to keep up.
When it comes to AI data centers, they are an order of magnitude more power hungry than the data centers we are used to since the internet age.
K.R. Sridhar is the founder and CEO of Bloom Energy, which just signed a deal to provide power to Oracle for its infrastructure data centers.
In the United States, is there an overall approach to addressing that enormous demand for power?
Today, it is a scramble for that AI data centers. Collectively, they're investing more than $600 billion just this year. That's the publicly uttered commitments. That's mind-boggling, right? Almost $2 billion a day to feed this beast.
Sridhar's Bloom Energy was created to do just that, provide clean energy on site, eliminating the need for transmission lines and traditional power generators.
The world is completely digital dependent. Not having power, even for a millisecond, is not an option because critical life functions depend on it, like a surgery happening in a hospital, for example. So we said power needs to be extremely reliable. You cannot get that redundant reliability at very high nines unless you have on-site power. If you're going to have on-site power, because you're going to be breathing that air when you're sitting in your office or when you're in your bedroom, by definition, it needs to be clean. And it needs to be very efficient, and it needs to be quiet. So this is the principle on which we founded Bloom Energy.
For the citizens of Warrenton, Virginia, finding that optimal solution of providing data center power in ways the community can tolerate has been elusive. But that has real fiscal consequences for the town.
We are so revenue strapped, but we're facing about $91 million of investment in our wastewater and water treatment plants. And so,